umbrella are useful when it is open. And life, the knowledge is always a learning process. Though there are number of members less, it is a workshop. I think the interaction, slowly the members will join us. It's my pleasure to introduce our speaker today, C.A. Prasanna Krishnan. I think most of you know him also. His professional specialization is in the field of tax laws, especially on goods and services tax and customs. And he is very successful in indirect taxes. His credentials are, the profile is about 2 pages that shows about the speaker. I'm not going through it much. His credentials are that in the Parliament on 5th July 2019, some of his major suggestions to set right the unintended denial of exemption from GST registration for goods vendor has been notified. So we should give a big round of applause for this. So there are many credentials, but this is very, very important because it is the recent one. And he's been a prolific speaker in many of the forums, like for the Government of India also. He is a speaker in the Regional Training Institute for Comptroller and Auditor General of India. And his views are being expressed in the chronicles also. He is a prolific writer. So it's all to you, sir, today's session. Thank you very much.
Honored brothers and sisters, good morning. Good morning.
Good morning.
Thank you. We got a call sometime back from Chairman's office who, in consultations with SARC's CPE administration, told that, sir, can you please come and take up this session which you took sometime back in November. The same topic he told. I told that, fine, I noted, sir, let me check it at time, and then confirmed also that I'm available. But unnecessarily I just asked him about that, should I take up the same topic, sir? Yeah, in specific, that same topic will please take it. So I thought, fine, okay, there is some preference it appears, so he has asked me to take up that. This happiness for there for a while, maybe for next 2 to 3 days only. I met one good vocalist this music season. No? This gentleman, till I met him, this happiness was there, then thereafter it was not there. What was the conversation between me and him is this one. He told that I was also very happy, sir. For what, sir? For the past 4 or 5 times, I was requested by a particular Sabha secretary to sing a particular kirtana or something like that, repeatedly. So for the 5th year in a row, he just asked me to do it. I also asked like you, sir, is it specifically that particular kirtana or song? Yeah, specifically. For the 6th time when he called, I could not control my emotions actually. Sir, such a preference is there from the audience side? Are you asking me to repeat for the 6th year in a row? I asked him. In time that sad secretary told me that, see, first time I gave a chance to sing well, I told, you failed. Second time I gave, you failed. Third time I gave. 4th time, 5th time, 6th time I am giving, at least now sing well, he told. So now I am just bringing this analogy here also. When specifically this SARC is calling me, hundreds of lectures I have delivered, but several times repeats have been there. So this is also there. I don't know what kind of classification under which you should be bringing this kind of invitation actually. Anyway, with a lot of positive hope. We'll start. Now, as far as, can I make a request? Can you please just come forward? It will be a little easy for discussing. Sitting little nearer, physically nearer will be better. Some seats are there, comfortably seats are there, you can just come. And because those who are coming there after some delay may feel comfortable to just fill the latter seats. Thank you. I will be spending maximum 1 or 1.5 minutes, that means 60 to 90 seconds really, on certain rudiments. For those who are comfortable with the basics already, may feel slightly bored in the first 1.5 minutes, that I am not denying. Only 90 seconds, please bear with me. Those who are beginners may feel comfortable once they are just getting a mild training on this, and then they will come and join the board. This is a tax which you know very well, is not a one on origin base actually. Destination based tax is goods and service tax. In other words, where the supply ends or terminates or within the meaning of law is being consumed, that is where the taxation is. You are a chartered accountant in Chennai. Your client is there at Bangalore, Karnataka. Or rather, I will put in a little more practical way. You are a chartered accountant, you do an audit for Karnataka Bank Limited, Mangalore branch. You went there all the way, did the work, and came back, raised a bill. What kind of bill you will be raising? Will it be bearing CGST plus SGST, or it will be with IGST? It's a simple question. Now let me start with this one. Please. So, what will be the tax category under which you will be charging the GST, whether it is IGST or whether it is going to be CGST plus SGST? No, whatever, see, one more thing I have to just remind you. You being a learned chartered accountant all the time had been there in a different side. Different side means always responding. So, officer will ask question, you will reply. Article student will come and ask you doubts, you will reply. Sometimes your peer and partner will come ask some doubts to you, you will reply. Right? So, or in the society, so many other sectors are there that will be questioning you for certain things or raising some doubts to you, or you will be responding. It's very rare like this to sit in this side where you can question. This is a very rare license given to you. Just think, sincerely you think. Have you ever been given this much of freedom? You can ask any question relating to the subject. With basis, even without basis also. The question what you wanted to raise to the lawmaker also you can ask now. It's a very rare chance. Once you go out, this license is out. Only 3 days. End of the 3rd day, you lose this license. Again, you are going back and sitting in the seat where you have to respond only. You should not question. You are very responsible professional. So this is a very rare license which is something like a student's license. Today here you are to learn in the workshop. You can raise any meaningful question. Of course, with or without basis, as whatever one can classify. That is different. Very rare. So kindly don't miss this opportunity. Again, it will not come. I don't know when they are going to have another workshop. I don't know. So it is a very rare chance. You need not worry about the person who is near to you, because he is also longing that some other person will be asking this question, we will get the reply. So please don't overestimate your neighbor, that he knows everything and that's why he is silent. He is also waiting like you, that if somebody will be raising question, you want to get the answer. Right? Coming back to this one. What's your reply? A chartered accountant in practice in Chennai raises a bill for the work done on Mangalore branch of Karnataka Bank Limited. He has to raise an invoice. Whether the invoice will be with IGST or CGST plus SGST. With simple basics we will start. IGST. Okay. Any other person is there who is saying that maybe CGST plus SGST? No opposition? One person is there. Something. This is what democracy is. Some confusion should be there. That is why deposit. Right. Somebody is supporting. So any one representative for IGST can kindly tell that why you would like to charge IGST. This is the big problem with the faculty members, sir. Out of the gathered small group, somebody is coming forward and telling that this is the reply. You questioned, he answered. With that you should stop. You in turn, after hearing the reply, one sub question, one sub question, one sub question. That is why nobody is responding in the discussions like this. Just to kindle your interest, I am just asking that if you say that IGST is the right tax, why? There should be some reason. No, you please tell. One more reason. I already told you. Please remember your license. I don't want to remind you again. License is already there. Valid license for 3 days. Anything you can ask. Anything you can justify. What do you want? Now please tell. I should only be very sincere in responding actually. I should not, a full stop or comma should not go wrong from my side. My question is very responsible. You can enjoy your liberty. Please.
The service is performed in Mangalore, which is outside the.
Ah.
So that's why IGST is.
Fine, sir. Now, if, for example, I will say, sir, there is one kind of assignment where you need not go to Mangalore at all. You can sit in your place, comfortable. In your place means literally on your seat, which is there in your Chennai office. Open your laptop or computer and be connected with the net and sit here in Chennai. Now, is the service is rendered in Mangalore? Would you like to charge IGST?
Recipient is in Bangalore.
Sorry, sir?
Recipient is in Bangalore.
Recipient is in Bangalore. Oh, fine, okay, right. Destination. Okay, so destination, that's what my brother says. Okay, right. Now, sir, again I am a lot of doubts, sir. I don't have any limit for my doubts actually. Again, I am asking you one doubt. Sir, if the Karnataka Bank Limited's regional office, for reason known to me, is here and giving a kind of investigation work to you, and you raise a bill on Karnataka Bank Limited Chennai zone.
Registration.
Sir?
Yes, registration.
My brother says that no, go by the registration, sir. One brother told that go by the destination. Another brother told that go by the recipient. Another brother is saying that no, forget about this. Where is the registration? You see. Then you go. You would like to say that see the registration of Karnataka Bank Limited on which you are raising bill. See your own registration. If it is of the same state, right, sir? If it is of the same state, raise CGST plus SGST. If it is of different state, raise ITC. Right, sir? Now, which is right? Which is right? Only one can be right. That's interesting in law actually. Always only one thing is right. Which is right is a big problem, but only one thing, that is very sure. Which one is right is the big issue. Yeah, we'll stop the question for a while because this is where you start to think. You are a chartered accountant, you know very well. You may be in practice or you may be in service, maybe in industry. But the questions about which we have not thought, the very purpose of workshop is to make you to think more, to make you to question more, to make you to search the answer. Positively here itself, you will get the reply. Positively. 99.99% you will get the reply. Some of the things require kind of effort from your side also. You will train your brain to see that it is going to that particular direction. We will ensure that in the given time, we complete our discussion meaningfully without compromising any major things. See, talking about the basics entirely is a big job actually. Basics of GST, if you would like to talk, 3 days enough. For that only 3 days will be. Then you have to conduct a separate workshop on the other side. But we are having a task of discussing in 3 hours this particular part, right? But we will not compromise on that. These hours and minutes are always there. That's okay. We have a kind of, once we are having a kind of good understanding between us, what I am delivering, what you are taking up is matching properly. It's a very, very simple task for us. We can easily complete. Not a big deal. Now, as I told you, there are kind of taxations, whether CGST, SGST, UTGST, IGST, so many confusions are there. So what you have to note is, there is a concept called as distinguished person. Section 25 read together with explanation 1 to section 8. Later, in the relevant time, you will be studying the concept of place of supply also. When you come to know that more in depth, you will have zero query in your mind as to the taxation of this kind of matters. Most of the answers are what you have given is right, but in which situation what to be fit will be the matter will be decided on the basis of point of supply. Now, why I ask this sundry questions is to understand for 2 purposes. One, to make you to assess that what level in which you are and what is the need for seriously attending the workshop. 2, for me to assess that up to what level I should raise up directly to the technical level or to the very basic and then to the technical level, just to assess. So, dual purpose is served when I am asking sundry questions. Otherwise, would not like to take much time when the time itself, what time given to me itself is supposed to be rationally used. Then, coming to the second concept, the same kind of mood changing question it is actually. That's all. I am not saying that you are not mentally prepared for a beginner's mindset or something like that. But being in this profession for a long time, bringing to a workshop mindset is a different kind of task. That is the reason why I am just asking this kind of Sunday questions. Have a look on this. CGST credit should be used for what? SGST credit should be used for what? UTGST credit should be used for what? And if that's the case, IGST credit can be used for what? Is there any priority for this? Is there any prevention? That means a restriction is there for this. Is a question. all are credits, available credits. So there you can rarely recall, okay, so SGST cannot be used for CGST, CGST cannot be used for SGST, but priority IGST can be used for anything. But whether IGST should be used for IGST only or CGST also. But earlier I had been using this IGST on a very non-unrestricted way actually. But now there is some confusion that IGST should be for IGST only or CGST also. First CGST or IGST, right? Questions are there. This is the purpose for which we are trying to say that the sessions are taken up that way. You know, this we will revisit. This is a concept actually. This we will revisit later. You can quickly have a look, but later we will revisit. For this thing, see, this you are seeing. The same thing we will discuss later, maybe in the same session or maybe in the relevant ITC related session also. How to remember this? Remembering this itself is an art actually. It's an art, no doubt about it. It's not a science actually. You cannot memorize, which is not workable also. Being a qualified professional, you will never believe in the concept of memorize. It's of no use. Yes, memory itself is a temporary phenomenon. So anything goes to your mind will go out of your mind also. It's quite normal. So you will try to see that more practically in a matured way as a professional in practice, how you would like to recall this matter, how you would like to implement this matter by recalling. That matters a lot, right? This concept having its own nuance only, not nuisance, nuance. So this is the way in which it had been used. Why I am saying it had been used. This is how the position was there till 31st January 2019. This is how. You can see this. First you are supposed to use SGST for SGST only and then you can use for IGST. CGST for CGST only and then for IGST liability. IGST you can first use for IGST liability and then you can use for anything else. Maybe CGST, maybe SGST, maybe UTGST, whatever it is, that you can use. This is how it had been done. But you had another phase. From 1 to 2019, this came. Mildly changed, sir. Hope you would have noted the difference. This is up to 31.1. This is after 31.1, maybe from 1 to 2009. SGST, first clear the IGST, then go to SGST. CGST, again first clear IGST credits, then you go to set up the CGST. If you are having IGST liability, first pay from IGST credit, then use the CGST plus CGST. That's how it is. This is also there for a while. Again, you have some change from 2019. It is this way. You can set up the SGST or UTGST ITC. First against SGST or UTGST liability and then IGST also. You can use the CGST liability, CGST ITC against the payment of CGST, then subsequently for IGST. There is some relaxation given there from 2019. So the big problem what you may be facing in practice is from 1 to 2019 to 29/3/2019, a small patch is there, rough patch. During that time, there may be a possibility of you missing some of the items. So that's why I'm just bringing to this. This is also, as I already told you, what is the use of a workshop? Tabulating and giving in a simple screen is a little difficult. But if you are having this in your hand, it will be more easier for you when you are doing the practical work. For example, 2018-19 GST audit you are going to do. FY 18-19 means FY 18-19. When you are doing this, unless it is there in your mind that what was there up to 31.1, what was there between 1 to 29.3, then from 1 to 29.3, what was there, if it is not there in your mind, it will be difficult for you to see that this you are implementing or you are raising the query about those things. Now, this is only to bring to your knowledge. Maybe more detailed discussion will be there in ITC when you are having a separate session for that one. First, we are coming to the core aspects of our discussion. Let us just try to ensure that with zero compromise, we complete our discussion in respect of the basics. But basics are very serious. We cannot disrespect the basics. The success of any seminar or workshop purely dependent on the basics. The problem here is without discussing the basics, if you are jumping to the technical level, when the basics are not properly discussed, foundation is not strong. Building whatever be the height with which you are raising will not be stronger. That's all the thing. So let us try to see that this is attempted. But let us not spend much time. Here there is the base. That's all. I can, with all due respect and humility, say that section 7 is there in your screen. That's all. The entire levy or concept of levy of GST is here. Nothing more than that. Of course, a little is there, but that's negligible. We'll see that. The complete capsule is this. This is what it is ready. All forms of supply will be supply. Sir, I am asking you, what is the meaning of supply? Yes, sir. It includes all supply. All supply. What is the meaning of that supply? Supply includes all supply. Why? That's all you can do. It's very difficult. Definition is a big process actually. Refining is easy. Defining is not that much easy. Defining is a tough job for any law actually. But a lot of the definitions we'll discuss. In the beginning itself, I'll just make a better mood for you. See, what we can say. We will say, monkey, please define. Monkey, sir. Monkey, please define. Don't we know monkey? We know. But we should define. To the extent possible, let it be brief. Possible? Can you not define what is monkey? They are defining supply. And as a reader, you are unhappy that what is the meaning of supply, I am asking. You are responding that supply includes all supplies. That is what I am asking. What is the meaning of that supply? Very difficult. When it comes to the practice, when you are trying to define, inclusive definitions are giving a better mood for the reader, better idea for the reader to understand that what the lawmaker tries to communicate. It will be easy. You will try to see that this is what he is trying to communicate. See, if you, along with ageistum generis concept, what are all possible there under this, if you believe, if you try to decipher from that, it will be easy for you to understand. Now, coming to this one, all forms of supplies. Of what? Already you made, that is a supply. You agreed to make, that's also a supply which can be levied under the taxation. If this word is not there, they cannot tax the advances relating to services. Because all forms of supply made, if they had said, only after making and completing the supply, taxation could have been there, like what is there in the goods. But in services, they tax the advances also, because the basic levy is covering the supply agreed to be made also. For a consideration, naturally, identifiably a monetary or non-monetary consideration should be there. Then only you can understand the taxable value. On that taxable value, you will be able to charge. By a person during the course of business or commerce. Because personal things are not a big deal. Your uncle is coming there and giving you a gift. Nobody is talking about GST about that. Nothing. It's only a personal gift. But that should be a commercial activity. If the same uncle is selling some goods and if you go and buy, that's totally different. It's a commercial activity where you pay consideration, you buy the material, title of the goods or possession of the goods effectively coming to you. That differs. And any kind of items are coming under this inclusive definition. What kind of things? If it is a sales, a transfer, barter, exchange, license, rental, understanding between you and the other person, leasing, disposal of the item in any manner, everything is coming under this. Whatever you would like to say. It's a very reasonably covering everything. And one specific item, hope you would have seen already as I have highlighted there. Please tell me, supply by a person has been told here. Supply to a person has been told. This is the definition. Supply by a person, that's all. I am just moving to in the course of business or commerce during this season, including the sales, the transfer, barter. Wait. By a person is clear. To a person is there. Should not be there. Hundreds of cases have been there during the previous tax regime in respect of this kind of matters. In one single stroke, this has cleared all the legal disputes and comfortably settled its position. Unquestionable situation. Very properly conceived and delivered. See, a particular legal entity can supply to itself. You question me, how it is possible? How I can supply to myself? I use the word, a legal entity can supply to itself. Say, for example, there is one company in Vijayawada, Andhra Pradesh. Example. Head office. It's having a branch at Tirunelveli, Kerala. So, Vijayawada head office supplies some material or maybe even service to its own branch at Tirunelveli, Kerala. Please tell me, is there a supply within the meaning of this law?
Yes.
Yes. One reply is yes. Any other reply? There is another choice also, sir. No, you can use. You will be ready to use, but again I will be asking that why. No, this time I am giving assurance. I will not ask why. You can say the reply.
In this definition, it will not come because there is no consideration for
No,
transaction.
consideration is there, sir. Consider. Okay, that's a point. See, my brother says that, sir, from Vijayawada to Tirunelveli, if you are selling, that is a private limited company, Vijayawada. This is a private limited company, of course, but Tirunelveli. Where is the consideration? And they pass consideration in such a way that some goal congruence concept or profit center maintenance is there. So there is some kind of consideration. Now tell me, sir. It's a good addition. Okay, right, sir. Now tell me, sir.
That doesn't say it's a person to same person or different person.
Okay. My brother's consideration in this matter is, sir, the law is not saying from one person to another person. That's what you already highlighted. So I am believing that there is a supply. Fine. Any other reply that you are not feeling that there is a supply? These are all the serious concepts which are not generally highlighted actually. When you are reading the law, it will not go into your mind just suddenly. Maybe when somebody is telling or discussing about it, you will be getting more enrichment. See, as I already told you, a private limited company may be an entity. I am not denying, should be an entity, fine. But for all legal purpose, as long as state-wise distinct person is identified, Tamil Nadu A Private Limited or Karnataka A Private Limited, or for that matter maybe Kerala A Private Limited's branch or head office or godown are independently distinguished person. They are separate person. Again you raise the objection. No sir, I am not convinced. There is one PAN number, All India one PAN number. Under one PAN number everything is coming there, all income. Income tax law is recognizing one person throughout India with one PAN number as single person. So you bring all. In fact, income tax is recognizing your global income also in India to be the one person's income. That's how it is. Section 9 read together with Section 6, that's what it is reading in income tax. So that is a different situation. This law is identifying state-wise your presence. If you are having some activity within the meaning of Section 270 in any business, it is reading your status as separate status in one state, another status for another state. In that sense, for limited purpose of this law, your A private limited company, Vijayawada, is certainly a separate entity, distinguished person, when it compares to A private limited company through the home branch. So there is a supply from one person to another person. I am not using the word from the law, I am just communicating to you for one person to another. In fact, law is worried about only one thing, by a person, that's it. To a person is not talking about, by a person. So there is a supply. In other words, captive consumptions are squarely covered by this law, there will be liability. Fine, we will have the same question in a different manner. I have a private limited company, same A private limited company in Vijayawada. That A private limited company is having a branch in Venezuela. Vijayawada head office, Venezuela branch office. For exchange, let us have it. How many days we can always have a foreign holding company and Indian subsidiary company? Yes, that's how we have been brought. Always foreign things are very big and better. And whatever our ancestors have told are all wrong and meaningless. And we have to copy the Western people. That's how we have been brought up actually. All the education system or whatever valuation system over there. Sometime long time back, 70, 80 years or even 100 years back, your ancestors, my ancestors had been using the charcoal, salt and cleaning their teeth. To the best of our knowledge, what we are gaining as information in the past, we did not see any major complaints about the dental things and all. Now every street is having 2 dentists. Still the people are having some problem in their teeth. That is always there. Then one fine day, the learned Englishman is coming to you and saying that what nonsense, this saliva, nasty things, using the fingers. No, take this, gently have a brush. Take this. This is called as toothpaste. Use it, brush it, how gentle it is. So white man says, so it will be right. So you also follow. After 100 years plus, The same white man comes back and says to you that, do you have salt in your paste? Do you have charcoal in your paste? You are also, am I having? Oh, no, it is having. Oh, please give me. That's what my ancestors had been doing there before 1 century. You only came and told that that is wrong. That also he is not saying normally. He is breaking the glass and jumping inside and saying that, do you have salt in your? Fine, whatever it is. Coming back to this one. In our example, you have a private limited company, head office at, let me say, in Vijayawada, and you do have the same a private limited company in Venezuela. Now there is a supply. From head office to branch or branch to head office, whatever it is. Tell me, is there a supply or not? The problem here is, as we are all chartered accountants, even in the workshop also, we are thinking like a chartered accountant only. There will be some twists, sir. Suddenly we should not tell reply. There is some serious question it is. Inside that something will be there. Because we are all crossed the stage of CA final. No, we know. There will be trick in the question. No trick is there. It's only workshop. Don't worry. No landmines are there. You can comfortably feel well. Because we are reserving a lot. We know. Most of you know the answer. But you don't want to tell. There will be something wrong. In a workshop, such an easy question cannot be asked. There is something else inside. Nothing else is there. It's very simple reply. Don't worry. So that is also a supply. Whether it is export or not, separate session is there. Very interesting reply will be there. You please see this. One branch, one head office. It is a supply. I am saying that yes, it is a supply. No doubt about it. Is it an export or not is a different question. That will take to a different direction. I don't want to discuss that. We will discuss in the relevant session. Now coming to this one. A quick summary of section 7123. 71, 72, 73. Simple. How to understand see, you have to keep in your brain the simplified version of the law. So you cannot completely just compress everything and bring to your mind. So take the summarized form in such a way that you can, whenever is required, you can expand it. So what is the definition I show here in this is the basic definition. What I am showing here is the version where the law is keeping it as expandable. How it is expandable? Read like this. All forms of supply plus, if you are importing the services, that will also be a supply, plus Schedule 1 transaction. Consideration may not be there, but still Schedule 1 is listing certain items, you are liable. Plus Schedule 2 items. Law is deeming certain things to be supply. You will or you will not believe certain things as commercially supply. But law is deeming that is supply only. So that it. So basic definition plus import of services plus Schedule 1 items, maybe consideration will not be there. Schedule 2 items, you will not believe that it is supply, law is believing that it is supply. Minus Schedule 3 items. We will give a pet name for these things. We can tell it as negative list, just for understanding. Law is not telling as negative list. I am just telling. Schedule 3 items can be removed. Schedule 3 items will not be forming part of the supply at all. Then, notified negative supplies, if any, that you can remove. So in other words, basic definition plus Schedule 1 supply plus Schedule 2 supply minus Schedule 3 supply minus any notified supply. That is what taxable. How the brain should be working whenever somebody is coming there and asking you a question. There is a call from somebody, from let me say Chennai Corporation's mayor is calling me. Sir, I was told that you are an expert in GST. We are collecting hoarding related charges from public. Is it a supply? Taxable supply or not is a different question. See, I have not come to that yet. Supply or not, that's what I am talking about, right? Then we will come to that. So how your brain should be working there? Hoarding, advertisement, public place, money collected by you for the purpose of advertisement. You leave a board wherein anybody can write reasonably whatever commercially they can develop themselves. Okay. Service rendered by a person, you, consideration received it during the activity, that is commercial activity, because corporations work is not this one. If you read the Constitution of India, if you read the Schedule 12, what is the work for them is listed. 21 items are there. What they have to do for that. So that's what they are supposed to do. So you believe that okay, 234W, 234G, okay, it is not coming under those things at all. Fine. So it's only a commercial activity. Then is it falling under Schedule 1? Not necessary consideration is there. falling under Schedule 2. Not necessarily I myself know that it is deemed. It's not necessarily deemed, it's supply. Is it having Schedule 3 reference? You read that. There are only 4 items. You believe that yes, it is not there. Is it notified by the government to be not taxable? Never we read that Corporation of Chennai, whatever service rendered by them is notified to be non-supply. It is not non-supply. Fine. Okay. So, sir, yes, it is supply. So, how your brain will be working is, what you are seeing in the screen should be the process of your brain. Something is supply or not. Basic, if you want quickly, this process will be taking maximum 5 seconds. The process what I am talking about, if you are used to it and working seriously on that, when you are gaining necessary expertise, maybe 5 to 10 seconds, you will be able to decide that is it supply or not. Then is it taxable supply or not, another 5 seconds. Then whether it is exempted or not, if you have studied in depth all the exemption related matters seriously, another some 10-15 seconds. Then you will be able to say that, sir, it's taxable certainly at present. Easy. But that's a practice. Now coming to this one. I told you that all Schedule 1 items without consideration also will be deemed to be taxable only. Without consideration also. So now only you told that for a consideration. After 4 slides you are contradicting that even without consideration also it will be there. How it is possible? I very clearly told you. This is an inclusive definition. There are 4 limbs are there. In an inclusive definition, the 4 limbs are indicating you that what could be the requirement. But there can be deviations from that. Still it is a system generis. With consideration also supply, without consideration also certain things are supply. It is listing out. What is there in Schedule 1, I will believe that it is supply only, it reads. So now you are reading that. When there is a permanent transfer or disposal of business assets, sir, you are, again I will take your example, because why I am unnecessarily twice or thrice talking about your workplace, you can think that how many times we have thought about us. From us only everything starts, whether it is charity or knowledge, everything is starting from us only, right? Fine. So, let us think about it. You are a chartered accountant. You are selling your used printer in your office. Used printer. You are using. You are selling. Is it a supply? Should you pay GST for that? Printers are computer printer. You sell. Whether you are liable to pay GST whenever you are selling, I am asking. Used printer. Yes. A little more stronger, yes, I expected, because already some 27 minutes gone. So by this time the confidence level should have raised actually, right? Okay, I will make it to raise, right? Another 10 minutes I need to take, I think. Fine, I will take. You are not taking, I know. For any result I am responsible today. You are not responsible, right? Coming to this. See, when you are selling the printer, you are liable to pay because it is a supply you are saying. Fine, okay. There is no exemption. There is no exemption that if a printer is sold by a chartered accountant in practice, there is no, nothing. Chartered accountant, no exemption is there. That is a different one. Coming to this. When we are saying that, when you sell the used printer in your office, are you a seller of printer? Are you a printer dealer? Why should you pay GST for that? Is it your activity which is in the normal course of business? It's incidentally so. Selling the printer is not your job. Then why are you paying that? It's a business asset. Schedule 1 is covering that. Even without consideration also it will be liable. Consideration will be there, no doubt about it. Even without also it will be. So, whenever somebody is transferring the business asset, only for the sake of transferring the business assets. Transferring the business is perfect. Entry number 2, notification number 12/2017, dated 28/6/2017 is taking care of that. That's an exempted item. That's totally different. That is talking seriously about the other concepts. What I am talking about is only for the sake of selling the business assets. If there is a deal, all these business assets naturally would be used business assets. Will be making you to pay liability of GST.
Supposing the asset is pre-GST.
Whatever it is, sir. Where it was purchased during VAT time and sold during the GST time. It was paid excise duty and brought to the business and used for a while and then sold it. It was paid, for example, a motor car with a VAT paid at the time and used for you, no ITC claimed by you, and then sold. Any combination will tell. Today if you sell, you are liable.
Even in case of
Which ones? That some sales only I was specifically excluding. I was very clearly telling that please don't treat this as a slum sales. There is entry number 2, notification number 12/2017, specifically excluding sale of items in a business transfer. It's not sale of assets. I'm saying that sale of items, anything. What is covered there in a proper sum. Some sales is a bigger concept. We are going to discuss it in short time the same point again with a different context actually. But I'm talking about something for the sake of business asset only. You wanted to transfer a set of assets only, 3 or 4 machines, 2 or 3 furniture only. That word is very important, only. Then you are not out of this.
We sell, dispose
Hmm.
by paying
Hmm.
old computer peripherals.
Hmm.
He willing to buy.
Hmm. Hmm.
To take away, I will pay 5 rupees.
Hmm. Hmm.
That is what you do.
No, see, if you are throwing without consideration, it is not at all. I can say that it's a transaction at all, as such.
I will say I am throwing away.
Hmm.
But tax office can say,
Hmm.
you have transferred your asset.
Yes, that certainly, sir. You need to prove because honest is on you to see that in a normal commercial world, a prudent businessman or professional is giving a printer which was there in a working condition. Who can prove that? Which was there in a working condition, just given. See, we will put this way.
Is that I am not. I need not pay
Yes.
the disposing person who is taking the.
Yes.
He has to pay tax.
No, that is not that. That was there on 1/7/2017 to 13/10/2017. It's a old story. Now it is not there actually. Not a problem at all. Now what we need to note here is same example I will twist. You gave your used printer and computer to a nearby, let me say, orphanage home. No consideration. Business asset just was given. There is nothing called as in the commercial transaction, something is done. Neither you are doing that nor they are doing that. It's not a commercial activity at all. Giving to somebody on a charitable basis, they are doing it, and kind you are giving the donation, it is not having, because they are not bound to do anything to you. If consideration is what you are giving in kind, in turn what they are doing, they are adding some punya in your account, that's all I can say, for which no value can be there. That's all I mean.
So, but then this here it is without consideration of that.
No, this I was just telling you that without consideration, if you are doing, kindly don't believe that I don't have consideration. That is why I am not liable. You need to believe. You need to believe that whether it is coming under the term commercial or not, during the business or not. That is the point. See, sir, the same example what I told you is, if you are giving to my brothers told that, sir, I just gave to somebody. Why should not the officer believe that? How I can believe that just gave? That you have to prove. Somebody should give it in writing that why it was given there. It was not in a working condition, I just proved that. It was not having any value at all, you have to prove that. That's how it will be. But in your case, as I was telling you, you are giving to a trust. You are giving to an orphanage home. In that case, what is happening there? That's a kind of a donation given in kind. There is no business motive or commercial motive there. If you say that you will give a computer donated by on the screen itself painted, that's what our excellent culture. No? Whenever you are giving a donation, the purpose will be somebody will be giving a tube light. Just seeing that the illumination is totally spoiled, he will write that donated by Mr. X. If that is the case, that is sponsorship. You do have a different reverse charge about which we will discuss within short time. So that is a problem. So consideration is not there. So I will not treat that as a supply. Cannot be a statement. You need to go through that, especially schedule 1, you please remember. When consideration is there, maybe consideration may not be there, but let us be careful. Schedule 1 is talking about something. Please recall. When there is a supply between the related person, distinct person, always law is very careful. Between related person, there cannot be any transaction. Just because consideration is not there, it is not supply. That cannot be there. There will be supply. You will say that you are not collected. There will be directly or indirectly some consideration. So law is deeming that there is a supply. If you are giving up to 50,000 rupees to an employee, it is not a supply. You give salary to employee, that is totally different. That salary is salary. What is rendered by the employee is not a taxable supply here. Schedule 3 we will discuss, that time you will understand.
Going back, just to clarify,
Yeah.
The donation you're saying is not a supply.
Yes. Certainly not a supply. It's not in the course of business or commerce. So the donation receiving trust is not liable to pay GST on that, because they are not bound to render any supply at all. They will give to some other beneficiary whatever they want to do as per their objectives and bylaws, whatever it is. They are not bound to collect some money and do something specifically for you as such. Supply of goods, principal agent, agent principal, This kind of things. Importation of service. Already we discussed. Whenever it is happening that in the course of business, that is business or commerce, importation of service is also a supply. Sir, I only import the service. Sir, I am not rendering service. No. Law is very clear. If you import a service even without consideration also, don't believe. What is that even without consideration? You would have seen in practice. Foreign head office will be there using a common ERP. They will be supporting the Indian or kind of subsidiaries from their side using the ERP, hardware items, this, that and all. There will be sizable money spent by the Indian subsidiary. In these cases and all, there is all possibility that the Indian subsidiary will not directly pay any consideration to the partner. Indian subsidiary will not pay any direct consideration to them. So if that is the case, you will be believing that there is no consideration passed upon. But law is very clear that whenever you are importing, in case of import, there is a consideration, for that there is a tax. If you don't have consideration also, in case of import of service during the business or commercial as activity, there will be certainly a liability for you as an importer, because importer is getting into the shoes of a supplier. Activities to be treated as supply of goods or services, to be treated. Law is compelling you, whether you believe it or not, law is compelling you. Renting of immovable property. Why law is saying specifically? Why? Renting of immovable property. Why the law is saying that it should be treated, it should be deemed as a supply of money? A lot of big history is there, very big history is there. Decades together fights have been there, even before several branches cases are there in the High Court and Supreme Court level, where whether immovable property is the subject matter of service tax at the time, GST nowadays also can be questioned by somebody. Why? List 2 of Constitution of India is dealing with state list. Immovable property falls under the state list. Whether the central government can tax directly or indirectly the immovable property related transaction may be a constitution related question unnecessarily raised, or necessarily raised. Why I should say necessarily raised. It was there in the past. Just to prevent such questions, the lawmaker carefully says that you believe whatever you want to, you interpret as a taxpayer whatever you want to. We are very clear. We will certainly deem renting of immovable property as a taxable supply, or as a supply, taxable supply later I will tell. So that's a supply. If you are constructing a company, what is the problem in the construction of a company? There also the problem. What the argument could be is, a builder is supplying an immovable property. A builder is supplying an immovable property as per the specification bilaterally agreed upon between the builder and the buyer, or builder and prospective buyer. Can be an argument. This law can cover only goods and services. Where it is involving immovable goods, what to do? There will be issue. So that's the reason why preventively the lawmaker is saying that don't go to that kind of interpretations at all. We are very clear. At least we are very clear, he says. We will definitely take construction of complex services, whether it is building, civil structure, part there, wholly, partly, all these things. But they will not tax a transaction where transfer of immovable property, completed immovable property is involved. So that is what in the previous case also we told. No? A company is constructing a building and then they are selling it or giving it as a disposal or something like that. What's the difference between one constructing and giving and selling the construction? Big difference is there. Big difference is there. At the time of entering into an agreement, when there is a non-existing or partly existing work is going on, the recipient of the supply is instructing to the construction company that this kind of construction you complete for me, I am ready to give you the money, maybe in a phased manner or in one shot. Whereas in case 2, a completed immovable property within the record of the Indian Registration Act 1908 is there. Within the meaning of Transfer of Property Act 1897, there can be a transfer. So if that is the case, in those cases and all, there is a transaction only in immovable property. Whereas in first case, construction is happening there was no immovable property at all. You create an immovable property and then, of course, naturally you are handing out other things. The taxation is not on the immovable property. The taxation is there in the activity, namely construction. When you are renting an immovable property, GST is not there on immovable property. GST is there on an activity called as renting a movable property. Renting the movable, that is different. The activity is taxed now. If they have to tax the immovable property, it is 1 crore, sir. Is the GST on 1 crore rupee? The 1 crore rupee worth flat, commercially given, yeah.
Can we take input credit for the construction activity?
No, that is section 17.5 prevention actually. Unless you are having your construction work as a work contractor, you don't have a permission in law, which is section 17.5. He is saying that it's a prevention. You can always ask a question, already questions are asked, the questions are continuing there. There are some contradictory decision by the High Courts also, where you can ask as a taxpayer, you are right that when I am constructing a building for a specific purpose, maybe for a plant, factory, maybe for a kind of
Construction for factory, let's say.
something like that. So you query that, what for I am building this building? Am I running any cinema show inside this? Or am I using this as my guest house or dormitory? It's a factory, using this only I commercially do my business. Why are you preventing my credit? It's a question about the legality and constitutional rightness of the particular law. But what law says, if I have to repeat to you, you are not permitted. Section 17.5 in specific prevents you that you cannot take credit. You can take the credit of certain things. Section 17 is clearly saying that these are all the items where you are prevented. The ITC, input tax credit, is a birthright of a taxpayer, so there cannot be irrational prevention. Maybe an argument. That's an argument. It's continuing there. Maybe within short term, Supreme Court is tagging up the cases. It will hear together. Already 2 decisions of High Courts have come. But reply to your question academically, yes, no. If you are a construction company, beneath you some work contractors are giving you a bill to you, you can take credit. If you are a chartered accountant, if you are building an office for some 50 crore, nobody is believing. You are a chartered accountant, if you are building your office for 50 crore, if I am saying, everybody is saying that, he is talking about somebody, about not about us. The day should come. For the effort what you are taking and the sincerity with which what you are serving to the client, the day should come. There is no reason for believing that it's an example. It's a theoretical exam. We'll just take a break of 10-15 minutes maximum. After a tea break, we'll just come on. Welcome back. Now, we are continuing the list, which may be even without your belief that it is liable or not. Law is believing that these are all the things liable. In that list, temporary transfer or permitting the use of enjoyment of intellectual property. If you are IPR related matter, if you are giving your name, logo, trademark, something like that to somebody for temporary purpose, suddenly you will have one question. Sir, it is reading very clearly that if I am giving temporarily only, it will be liable. So permanently if I am giving, it is not liable. Is it right, sir? Please understand. The basic definitions already been discussed. This is liable. What are all liable? Inclusive definition in the first short time itself we discussed. The schedule 1 or schedule 2, whatever we are talking about, are all just confirming, even without consideration, what will be liable. You will not believe that it is liable, but law is certainly believing that. This is our list actually. This list does not tell these are all taxable, it says. That means that anything other than this is not taxable, is not a mean. They are confirmed. Certainly what is taxable you have to understand. As I already told you, first 2 slides you remember. Just 2 slides enough for you to decide certain things liable or not. It's enough. Beyond that, what is listed by the law is on the basis of its experience in the past as to the liability and the taxation. It tries to tell you very clearly that this also may be taxable. This shall also be liable. Please don't get confused. We are telling very clearly as lawmakers, this shall be liable to taxation. Accordingly, you will be liable to pay. That's what it says. So you need to understand that with your knowledge about section 17, you need to read this also. What is the version of law? Accordingly, you have to understand. For example, in information technology, they develop, they design, they do a lot of work relating to development of program, testing, so many things they do. So these are all the things which are falling under the supply. Whether it is coming under service or not, yes. What are all there which is not involving goods or service? Nothing more than that. Anything which is involving the goods is falling under the goods related matter. Wherever you don't have goods at all, it is coming under service. Then, any treatment or process which is applied to another person's goods is a supply of service. What is this actually? That's all. Job work. If somebody is giving goods to you, requesting you a skilled labor on that subject matter, what is it? It is nothing but job work. Job work is liable to GST because it's a supply. When there is any transfer in the goods or rights of the goods, when a particular undivided share in the goods is transferred to another person, these are all also falling under the category of supply. When the property in the goods is transferring by an agreement, take for example a construction agreement, or take for example a particular movable goods also getting generated and part of this is to you, part of this is to me, that way. These are all the things falling under that. So when there is any supply by a club or association, some material or goods to somebody, that is also, sir, if it is reading, one minute. If it is reading unincorporated association, does it mean that incorporated association even? Again I am telling you, it is highlighting clearly that this shall be taxable. That doesn't mean that anything other than this shall not be taxable is not there. And it is not exhaustive list actually. I am not reading a list which is exhaustive list. Reading this, I am not trying to impress you that except these 13 items, nothing in this country is taxable. Not so. It's just trying to highlight that certainly these are all taxable. What is taxable, you know already because of the definition what we discussed. Certainly this shall be taxable. Whatever interpretation you have read it, law is saying that certainly these are all taxable. That's the list I am reading about. In case of land and building, any lease, tenancy, any kind of easement agreement or license given by you, anything to occupy the land or building, whatever it is, they're all coming under this. Maybe for commercial purpose, maybe for industrial purpose. And whether it is not reading residential, lease or letting out, residential complex, is it not? Does it mean that every residential letting out is liable to GST? Yes or no? No.
It's used for business purpose, it is.
My business itself is giving the residential property on rent, sir. My business. I got my ancestral money. Entirely, I have only lot of bequeathed property as well as large money given by my grandparents. I have about some 155 residential flats and individual villas in my city. My, sir? No, my business itself is this.
Residential use or commercial?
Residential, sir. Residential. So residential use. My income, if you are seeing my statement of total income for my income tax purpose, only two hit. Income from house property, large number of income. Then maybe a sundry other sources, interest income, that's all. This is my business. From first day of a month to 15th day of a month, I just lighter here and there for my 155 tenants.
Supply 7(1).
Ah.
Section 7.
Yeah, that's all. Now my question is it fitting or not? Is it a supply or not?
It is.
Well, you have some reasons. Whether I'm accepting or law is accepting is different. You have some reasons. Shall we?
CP is used only for commercial. It's not used for commercial. CP.
No, definitely not for commission. My question is, just because it is used for residential, where from the denial of GST liability is that? I'm asking.
It should be used for business or commerce purposes.
No, sir, not for use. I am using it as a business actually. See, sir, the service rendered by me during the normal course of business or commerce for a consideration.
Here the intention is for the use of the residential purpose.
No, not like that, sir. See, for example, if somebody is using for the, let me say, asafoetida is there, right? That is used in kitchen. Somebody is using for personal purpose eating. But asafoetida seller is selling for commercial purpose only. Like that, residential purpose is the utility by the recipient side. Sorry?
It is by the consumer. So
That's what. It is by the consumer what he is doing it. From my side, that is my business.
But I think 7(3)
Hmm.
schedule, it excludes residential houses from GST.
Is it 7(3), sir? Yeah, that is why, sir, I already told you. If I am telling reply, leave that, sir. You are asking so many sub-questions.
I don't remember that subsection.
No. See, why I am trying, this is where I am trying to say. How much important, I told you, no, what is supply, what is taxable supply, then you come to the exemptions and decide it. I told you 3 phases of deciding a transaction whether it is liable or not. It's a process which is going in your brain whenever you are discussing with anybody about the GST liability. There, first, supply or not. There cannot be difference of opinion, supply only. Second, whether it is taxable supply or not. As long as no exclusion specifically there, as my brother, if you are seeing, say, as my brother says, if you are seeing an entry in Schedule 3, it is not supply at all. Neither supply of goods nor supply of services listed there. If you see that, then it is there. You don't see there also. I'll show you. You don't see there also. Then what to do in that one? Residential unit, whatever rent it is giving to you today is exempted. Taxable but exempted. How is the taxable exempted? See, I gave you 100 rupees to you. No, I did not give you. Just for example, I gave you 100 rupees to you yesterday. Today when I am asking, give me back the 100 rupees, I will ask. Give me back the 100 rupees. After giving, I can ask. Without giving, if I am coming to you, give me back my 100 rupees. Now, sir, if you want 100 rupees, please tell me. What is this? Give me back my 100 rupees. Where did you give? Not. Similarly, first it should be taxable. Then only it can be exempted. So, all exempted transactions are basically taxable. Why are you not able to see exemption notification for liquor? Why are you not able to see exemption notification for, let me say, land? Exemption notification.
It's outside GST.
That's all. Why you need to exempt? It is already outside. You need not exempt. You cannot exempt. Exempt transaction is the one which is basically taxable. Then only you can exempt. Basically, residential rent is taxable. Then it is getting exempted by notification call. Now coming to this one. Transfer of business assets. There is a C difference. Big difference is there between transfer of business asset and transfer of business. Transfer of business assets, used assets, one or few are sold by you. That is used assets sold by you, and then we told computer you sell, printer you sell, car you sell, all these things.
Yes, one minute, sir.
Sir.
Sorry.
Sir, please.
Suppose my residential income is more than 1 crore.
Hmm.
Whether I have to get registered and file a return?
See, basically it is exempted, sir. Only because of exempted income, if you are crossing 20 lakh rupees, you need not register. 23 is safeguarding you. You are an agriculturist, sir. Such an agriculturist you are, that you are able to earn about 150 crore. Which agriculture is earning 150 crore? Yes. For example, let us happily tell. So 150 crore rupees is your income. Should I register as an agriculturist? You need not register. Because only the exempted income is causing you to cross the threshold limit. 23 comes and saves you that you need not register. Only exempted. Slightly that agriculturist does a job. What is it? No. Out of the available things, some scrap materials are there. His old tiller is broken. Some of his old motor has gone wrong. Some coils and things are there he is selling. When he is selling, there he is liable to register and pay small amount on that. Because his turnover is 150 crore rupees of agriculture income plus taxable income of 200 rupees. His aggregate turnover within the meaning of section 2 subsection 6 becomes 150 crore 200 rupees, which is crossing 20 lakhs. For that 200 rupees he will register, pay, continue or discontinue the registration, whatever it is.
In that case, I have to disclose that exempted.
Yes, you will be. You should be. There is specific column in all the returns, whether it is GST or 3B, para 3(1)(c, or whether it is an exempted column in para 4 of GST or 1, you have to declare that this is my exempted income. Once you register. Coming to this. Transfer of business is different from transfer of business asset. You transfer the business itself. What the specific word, legal word in the substatute, that is in the notification is told is, what is exempted in 12/2017 reads in specific. If you are selling an independent unit as such, identifiably an independent unit as such, or a going concern as such. Going concern, you know, whole company sell in one lot. Asset minus liability is the net worth. For the net worth, what you are getting is the money. Beyond that, what you are getting is maybe a goodwill related matter, whatever it is. That is your accounting. Within the meaning of section 2, subsection 19, AA, capital of Income Tax Act, you can understand this. Or within the meaning of section 247, you can understand this. So there, it reads very clear, or read together with section 50C, slum sales of Income Tax Act. This is the very meaning of slum sales, normal slum sales. You can sell an independent unit of a business, identified independent unit, independent undertaking. What is an independent undertaking? You sell this minute, next minute, literally, next minute, the successor should be able to do the business continuously. That is what independent unit. That is not dependent on your other activities of your business, that's what independent unit. We don't have much time to discuss, it's a big topic actually, but we don't have much time. We want to really understand the concept. Premier Padmini Motors case, you read it. One of the brilliant cases. Para 37, please read. Such a beautiful judgment regarding this. Both for income tax purpose also you can make use of it. It's very good judgment actually. So, there it reads that what is the meaning of it? Can you sell part of the business? What is a part of the business? Whether the part of the business what you are selling itself can be an independent unit within the meaning of law. All have been told well. Very good judgment actually. Read. Now, coming to this one. Goods or services or both will be falling under the supply category and you will be liable at all. First one, please.
I wasn't clear on the previous. So, what are we trying to say there?
No, what we are trying to say is, my brother's question is, sir, what you are trying to say, if I am selling identified assets, you are asking me to pay GST. If I am selling my business as a whole or part of my business, you are saying that it is exempted. What you are trying to say? I am not saying anything at all. Law is simply allowing you to happily believe that slum sales is exempted from GST. Sale of independent unit within the meaning of law is exempted from GST. But under the carpet of or in the banner of slum sales, if you just sell few assets only, then that transaction will not get exoneration, it will be liable. So try to see that real meaning of slum sales you understand well. For the sake of selling few assets, if you are entering into a colored transaction of slum sales, you will not escape. Really do slum sales, you just sell the business as such to the successor. I told you in simple language, I have to tell in detail actually, but simply to tell. Next minute the next successor, coming successor is able to continue the business. That is what going on, sir. You take the key, give it to him, handshake, take consideration, put in your pocket, get out. He will come with the key, he will continue the business. That's what going on, sir. I am saying the best simplified version, but a lot is there to go inside that actually. It's not only about the assets, related liabilities, contingencies, the men and the materials, all together, a broader picture actually. It is not selling the business assets, selling the business as such. One unit itself you will sell, one company also you will sell as such. First. Now, what is the meaning of goods? Section 2, subsection 52. What is the meaning of services? Section 2, subsection 1 or 2. If you refer to, they read this way. Both are having one common aspect, one similarity is there. Money and security is not included. Money, currency. I give currency, you give currency. It's only buying, giving money, taking money. That's not coming under that. In other words, your, what I can say, money transactions will not be coming under that. Securities, maybe debentures or shares or whatever it is. So if it is dealt by you, per se the securities are not, maybe security transaction tax, maybe they will be levying later, that is different. This law is not done. So if that is the case, those who are dealing in securities in commercial capacity as a broker or sub-broker need not pay GST. We are not talking about dealing in security. We are talking about security. Sir, this is what the confusion is. Immovable property, you say, it will not be taxable. Renting immovable property will be taxed. Construction, immovable property will not be taxed, you say. Constructing immovable property will be taxed. Security will not be taxed, you say. But dealing in security will be taxed. Money is excluded from goods also, service also, so it's excluded item. But dealing in money as a money changer will be liable, making you liable. Dealing in security as a security agent or a security related contract broker, you will be making. What is it? This is what. That's what I'm saying. This distinction will come to your mind slowly. You will, without your knowledge, you will be learning. That's a process actually. Where are all the gaps are there, you may not be identifying, but over time when you are learning, slowly when you are coming inside, the gaps will be filled properly. That will be settled in our mind. Slowly it will go off. Now, having discussed this, Schedule 3. What is this Schedule 3? We can call it with a pet name, negative list. In other words, these are all neither supply of goods nor supply of service. Doesn't mean that. Not at all. Only when it is supply of goods or service or both, we have to talk something about it. It's not at all that. Then what is that? That is something else. Not an item to be dealt by us at all in this law. What is that? These are all the items. Employment. The services by an employee to employer. Employee to employer. Salary is paid, employee is working, employment terms are there. Then there is no question of service by employee to employer. It's only a transaction outside the law itself. There is nothing to discuss regarding this salary versus GST. Salary will never have GST at all. So director is getting salary, what to do? We will discuss within short time after some 10 or 12 slides. Courts, they are rendering services in the public interest with constitutional backup. So there is no need for treating that as service. Land, as I already told you, immovable property, barren pure land. You do not consider that as an item at all. Leasing the land is a different one. Now only you tell clearly, suddenly you just go into somewhere. No, I make the point very clearly. Sale of land is purely outside the GST. It's an immovable property, you sell, Transfer of Property Act is covering it, that's it. Registration Act 1908 will take care, that's it. But leasing the land, allowing the other person to use the land for something else, these are all the things where you would be having liability. Then, services of funeral, burial, cremation, poor guy, at least dead, okay, hereafter you cannot tax, he already died. So, leave, small exoneration. So, what are all funeral related activities are there, including the transportation of the dead person, will not be falling under the supply of service or goods at all. The next one, what I am going to tell, I am communicating properly, okay? I am not responsible for what you understand. I am trying to tell what is written in law. Okay, if it is wrongly sounding to your ears, I am not responsible. With that disclaimer, I will tell you. The following shall be treated to be not a supply at all, not a service at all. There is nothing happening there. So, please remember, I am not telling in the manner in which you are understanding. I am telling very frankly and fairly what has been there. The following is the one where there is no presence of supply, there is no presence of service, there is nothing happening. So, this one. That's all. I am not telling. I am just reading the law, what it is there. Okay? Right. Then, you do have actionable claims. What is this actionable claims? Any idea?
Claim for money.
Claim for money. Simple term, we will say. Claim for money. You have a right to claim some money. Maybe by winning a lottery, or maybe taking the right of collection of a debtor's money from somebody. Receivable collection right. Something like that. Rent collection right. You are owner, but I will collect. Right? Something like that. So it's a right to claim the money. Right to claim some monetary benefit or equal benefit. That's the one called as actionable. That is actionable. In fact, as the name itself is indicating, the claim is actionable. You can buy for a particular price the claim. That's what called as actionable claim. Right? Whether it is goods or service. Where is the question of being goods, sir? It's only, no, not so. If you would like to revisit quickly, see here. You can just come here. Goods, services, both we see. Under the goods, section 2, subsection 52, unbelievable and surprising. It includes all the immovable properties and actionable claims. Goods. That's what law reads. So actionable claim is not service. Why it's not service? Service is anything other than goods. What is the meaning of goods? Goods is actionable claim also. So you have to believe, no way, you have to believe actionable claim is a goods. As per this law. A lot of these things are there to discuss about this background. Anyway, with a limited introduction, I will just proceed further. Now,
compensation and for land acquisition also they give some compensation.
yes, they give, yes. See, the one what you are paying as a compensation is making you to transfer the immovable property. These are by compulsory acquisition or the land development methods and all, some road laying work is happening. These kind of things and all, Literally, a transfer can happen there by two happy parties, or a happy party, one government, unhappy party, the person who is transferring. Anyway, it's a transfer of property, immobile property. There is a matter.
Yeah, word about they also say society.
That's all taking the color of the compensation only, relating to the land. The value is increased to that extent, sir. That's all the thing. To the extent that what is happening there. And a lot of exclusions are there. We'll discuss those exclusions also. These are all necessarily separate. The concern is about only the actionable claim, which is this is neither tiger nor donkey. That's a mule. That's what has been classified now. Now the problem here is actionable claims. What are all the actionable claims which are not supply at all? Section Schedule 3 says. Actionable claims other than lottery, betting, gambling. See, I am reading the list of exclusion. I am reading the list of exclusion. What is excluded? Other than lottery, other than betting, other than gambling. That means what? Lottery is taxable, gambling is taxable, and betting is also taxable. These three are the taxable actionable claims. Except this, all other actionable claims are outside the supply. That's how it is. Now coming to this matter, this is non-taxable territory. It's a big story. Is that somebody is supplying from German certain goods? I know very well. Such goods somebody in France wants. Remember, somebody is supplying certain goods. Some quality printing. Somebody in France is in need of it. Surprisingly, he is not aware that in global market that German guy is supplying this. He is not aware. He is not aware of it. As he is not aware of it, he is placing the order on me and saying that please supply this ink. I know that from German I can supply. From German I can supply. So I place the order on German. German person billing to me, dispatching to Paris. Whether it is a transaction falling under GST law or not. I am here. Money comes here. In convertible foreign exchange, as permitted by Reserve Bank of India, the money comes here. Under FEMA rule, it comes properly to my account. What's that? Sorry, sir? Destination, sir. Even in normal export also, sir, I am supplying to US, but here I am treated as a supplier. It's a supply. Destination is US Washington, no doubt. US Chicago. But sir, I am sitting here. I am here. I am registering, as my brother told, I am registering myself, I am taking letter of undertaking, in fact, so many things I am doing. That to just clear that doubt, dispel that doubt only, this inclusion was recently made in this year, where they told that supply of goods from a place in the non-taxable territory, Paris, that is German, to another place in the non-taxable territory, France, 2. Without such goods entering into India, naturally they are there in the same continent, will not come to India at all. He is not a supplier at all within the meaning of GST. If these words are not there, you will get a lot of trouble. It's there, you are safe. Now, warehouse sales, high seas sales, same concept. And so goods are come inside the warehouse there used to be shift of hands. Or even in the high sea sales, what's happening there? The goods are not touching the customs frontier of India at all. There is no section 14 of Customs Act valuation happening there at all. Well before touching the customs frontier, even before the 200 nautical miles in the mid-sea, that is what high sea. The transaction is happening there, the goods are coming there. Another guy who is aware that I am going to be the owner of the goods. Once I take the possession, comes inside, intercepts, makes me to sell the goods maybe with a better price. And he becomes the owner, he presents himself before the customs officials that he is the importer within the meaning of the law. He clears the bill of entry, takes the goods to the home consumption, or maybe he is sending to the warehouse as he wants, within the meaning of Customs Act. Now, this law is dealing with the goods inward, outward, inside India, all of it. What about the high sea, midway? Now the clarity is there. It says that we will not disturb. This is not a supply at all. Sir, if this is not a supply, how I will present in the return, sir? I am a seller. high C sales also coming. High C sales will be treated as non-supply value. There is a separate column for that, non-supply. If you mention that, it's enough. If you don't mention, what will happen? Nothing will happen. Some reconciliation will be required. Once in a year, our 9C will take care. Once in a year, when the audit party from the government is coming, then they will take care. There is no serious problem at all. Better you disclose. If not, okay, anyway, we will manage. Compose.
Who will take credit? No sales mean
Which
first
one?
party only will be taking credit.
Credit means which high C's related matter, you are saying.
Yeah.
See, in high C's, where is the question of taking credit and enjoying it is the question actually. Why I am saying is, what is the meaning of exempted supply is already defined there in the law. See, for which you are not liable to pay at all, for which is not a supply at all. Related credit cannot be taken. More than anything else, in a high C sales, you won't take the credit, you won't have the credit because you don't enter into bill of entry at all. Bill of entry is going to be created only a person who is the IC purchased, not by you. So, the importer is a character given to the real person who is the IC buyer, not the IC seller. IC seller is not raising any bill of entry at all. Only bill of entry is coming there, customs duty is coming there. Only when customs duty in GA or 7 form challan is coming there inside you have the IGST. That IGST you may or may not take, and that is a matter to consider. Now, being a IC seller, where is the question of you having IGST payment? You don't pay at all. And it is not a supply at all for you. You are safe. Ab initio, it is not applicable. There are two items which are called as composite supply. One is works contract. You use material, you use labor. Both is happening there. And similarly in restaurant, you use material for selling. The material is sold by you use food. You supply also, service also given. So law is clearly treating that material may be involved. If it is works contract within the meaning of section 2 subsection 119, please treat that as a service. Because the predominant nature they are seen as service only. Sir, for 90 rupees I am using material in a works contract, sir. Just for 10 rupees some labor charge. Still it is service. Sir, I am having a restaurant. Actually the food cost will be only 55 to 58% generally. That's the trend actually. Labor cost will be 22 to 28%. Sunday additional expenses, 14 to 16% profit will be naturally there in the hotel business. It's a normal one. But coming for example, I am just saying, sir, 78% of my sale price in my restaurant is only towards material consumed by me. And self service basis I am selling. So I don't have any labor at all. I am one man. Or I have a robotic business. I click it to the table number 14. You order burger, it will come and just give it to you. If you are giving another 10 rupees more, you can open your mouth, it will throw inside your mouth. Such an extraordinary automatic system I am having, all automated. I don't have labor at all. So, if I am using 78% material, just 22% service, will you still call my restaurant business as merely a service? Yes, I will call it as service only. Law is saying so. By compulsion, it should be treated as composite supply. No options. But you need to understand the concept of composite supply. One of the very serious, unnecessarily confused by the social media a lot, but really simple one is this. Actually, what is happening there? A lot of wrong informations are reaching you very easily. Right informations are not reaching. That's the biggest problem, especially in GST law and all. All self-styled persons used to talk anything what they know, what they don't know also. The problem here is they don't know what they know and they don't know. That's a big problem actually. So kindly just go and rely upon only on the basis of sources which are reliable. Our institute is there, institute publications are there, IDTCC is having its own websites. It's having a lot of free downloadable about some 13 plus publications we have written and for free downloading. Please make a visit, download it, just to give your registration number and phone number for reference purpose. That's all you just want to know that who is downloading, nothing more than that. You can even put it as business, I am not relating to C also, you can download. Nothing wrong, but we want to know who is that actually. You download it and you can do a happy reading with that. Very reasonably reliable material. Very rarely few errors could be there and it's all corrected over time. Well, we are trying a lot to do that one. So make use of those things which are all free publications. So it will be easy for you to go with the right source. Now coming to this one. What is the meaning of a composite supply? Let us not go into big jargons at all. I'll tell simple examples which will stay in your mind without any compromise. You can get the legal idea behind this. You paid some fees for this workshop, right? Some fees, whatever fees it is, to institute. So, you paid fees for CPE workshop. Am I right? So, institute is delivering you a CPE workshop service, right? Right? Agree with me or not? Now, let me just list out. Institute has given you printed books or printed notes. They are supplier of stationery items. Institute has let out 3 days a chair to you, so they are the persons who are supplying on lease or a rent basis the furnitures. They are allowing you to use this hall, so they are rendering convention hall service. Institute is making you to have the food here, so they are restaurant service providers. Institute is allowing you to park your car here, so they are doing parking service. Accept me or not? When they have done all these things and all, together only they are collected. The money what you are paying is for this furniture, this discussion, this light, this air condition, that food, that parking, all together you paid. But when I asked, you told simply one line that, for what you paid? I paid for CP lectures. This is the concept called as composite supply. Simple. What is predominantly there in your mind? For what you paid? For CP seminar. CP seminar, you cannot just stand outside the platform of this building and just stand for about some 6 hours a day and listen. So incidentally you have to be made sit. You cannot sit in a place where it is not properly illuminated or having some good air condition. So air conditioning is there and hall is there. You cannot all the way go out and have your food and come comfortably within time, so food is supplied here. You need not, I'm not saying you cannot, you need not bring your stationery and write here anything what you would like to take as a note, so incidentally they are supplied. So one to one are all related. There is a natural bundling of several services with predominant supply being identifiable out of the taxable supplies. If that is the case, this is what called as composite. Sir, why should I know about the composite? When you don't know composite supply, you will not be able to have a practice, you don't know anything in GST at all. That's the meaning of that. You will not be able to practice anything in GST. It's a serious but simple concept. Somebody stays in hotel, accommodation service. If you stay in that hotel, the hotelier is charging you 3,000 rupees per room. For paying the 3,000 rupees, you are permitted to have morning breakfast. There is no fee, there is no price for that specifically. Specifically, the word is specific. It's included already. What is the meaning of that? What is the tax to be paid? Let me say that it's a hotel which is having less than 7,500 rupees as the accommodation rent at most. So they are following 5%. Example I am saying, 5%. So 5% for restaurant services, whenever food is given by that restaurant. In that buffet only you go there and have the breakfast. You stay in a hotel, that same hotel, that is charging you, let me say 12%. Example I am saying. Now 3,000 rupees they are charging. Should you pay 5%? Should you pay 12%? This kind of question only you are not able to tell in practice the reply. That's why people are wrongly communicating that GST is very complicated. Not complicated at all. The concepts are extremely clear. I can with all due honesty say that one of the best laws, tax laws the country would have seen in this past will be GST. It's not complicated at all. Unduly it is complicated by somebody who has not read properly the law. That's a big problem. And it reaches more. The negative message reaches more, the larger population. That's what the problem happening. A lot of answers have been given. A lot of procedural errors had been there, they are corrected. A lot of issues still there, that's in the process of correction. These are procedural. The law is very clear, procedures are slowly getting refined. Now coming back to this one. The entire process is a question simply to be asked in this given matter. Whether because staying in the room are you going to eat? Whether because having the food there you are going to stay. That's all it is. How simple it is. One more time I ask. I repeat. You are a guest staying in the room. so you have the food freely. The statement is correct. Can I say this way? You are a guest having the food in the restaurant, so you have to stay in the room. Such a punishment is not there for you. Only one punishment. Have the food, if it is not happy, you can come out. So, the predominant supply is only accommodation. You stay, food is also given there, it's incidental. You come to hear the lecture here, incidentally you are given stationery, incidentally you are given food, incidentally you are allowed to park your vehicle, incidentally you are allowed to take up certain notes, incidentally you are given the chair, incidentally you are allowed to enjoy the air conditioned situation. Incidentally. What is predominant? Lecture. So, the decision that whether a particular supply is of what kind is decided on the basis of predominant supply in two or more taxable supply. That's a word. Fine, what is that mixed supply? I told you an easy example wherein a predominant supply can be identified. In an accommodation plus restaurant service, accommodation is predominant. In a lecture plus hire of furniture plus hire of letting of hall plus parking plus food plus stationery plus CPE or credit, I told and identified that there is a predominant supply, namely lecture. Sir, if you are able to identify in a naturally bundled more than one taxable supply, one predominant supply, then that is deciding the entire supply's nature. Accordingly, I will find out the rate 18%, 12%, whatever it is, I will pay. Fine. If I am not able to find, what will happen, sir? There are supplies not necessary to be taxable. More than two supplies are there. Supply of goods or supply of services. I will tell you, somebody is selling a hamper. Inside the hamper, you do have chocolate, toilet cleaning liquid, seriously, toilet cleaning liquid, water bottle, handkerchief, one pair of shoes after knowing your size, and one cap, and one whistle. This is the hamper. What is rate to be given? Sorry, this kind of irrelevant combination, never in my life I have heard about it. See, take for example, I am just telling you, you buy one goods for which irrelevantly some other goods is given to you. You buy washing powder, they give, if you are buying 1 kg washing powder, we will give you plastic mug. Plastic mug and washing powder, what combination it is? What rate you will fix? What rate you will fix? That's the question, right? If this question is asked by the so-called washing powder company who is your client, what reply will tell you? These are all the points which we don't used to get into the detail. That is where we always wrongly misconceive that this law is very tough. This is meaningless law. Confusing. Nothing is confused. Everything is having its meaning. There is no confusion at all. It's extremely clear. The law is simply saying that when it is unnaturally bundled, washing powder and mug, how you can bring together? What kind of supply it is actually? Washing powder is washing powder. Inside the washing powder, if your scoop is there relating to that one, some relationship you can try to make use of this, something like that. Little more. Or one water jar is given there, or a health drink jar is given there. There is a marking that 200 meter, 100 meter, there is some purpose. This much you can drink, that much you can drink. Some reason. There is no reason or rationale at all in mingling two different items. In that case, mixed supply comes to the picture. Irrelevant, unnaturally bundled supply. What to do there? What is the rate to be prescribed? For chocolate, 28, this is all example. For chocolate, 28%. For toilet cleaning acid or liquid, 18%. One handkerchief, 5% cotton kerchief. Example, 5%. Maybe for, let me say, one water bottle, unbranded or branded, of course, 18%. So whether I should charge 5%, 18%, 12%, 28%, what percentage should I charge? All are there. But unnaturally bundled. When it is unnaturally bundled, law is giving a clear way. Charge the highest rate. What is that? Highest rate. The answer is why it was brought in that way. That is what is the rationale behind it? It's very simple. A simple story. Because the stories are seriously told, though on the later side, it will stay in your mind for a long time. One guy was doing his business, some contract and drawing, draftman. So he was doing his business. He got a big contract won by him. He drew a very good drawing It won the contract. He kept that at his home. He went to the nearby city for some other work. Got a call from his neighbor suddenly. SOS call. Hey, where are you? Sir, I'm in the nearby town. Goodness, you got a very bad news from me. Your house is under fire, engulfing everything. So where are you? My God, I am about 60 kilometers far away from our town. Even if I return, I am not going to do anything. Such a big fire you are reporting. What to do? See, in this situation, only two can help. One, neighbor. Two, God. Neighbor is the person who is giving the information. Sir, I am not able to do anything. Everything gone. It's all in fire, under fire. Then naturally, what this man will think? Okay, he prayed to God. God, deal. We are always very big business people. Always we deal with God also with business terms only. God, if you can kindly just save my property, I will see that I am selling this property. 75% of the consideration of the property I am giving to you. Please help me. Because a very important contract is there inside my house. If it is totally gone, it will also go off. I cannot recreate it. Excellent drawings are there. He came back. To his surprise, maybe some good Samaritan had been there, it appears. Some fire control team has come there, all settled down, and his contract escaped. Property also reasonably escaped. Now it is time for responding to God's offering, right? What he has offered to God. So he gave an advertisement. What advertisement? All men know. There's a property with so much square feet, this, that, they built up area, that, this, all these things and all. Okay? Big lawn and beautiful things, that all. I am selling this property. The consideration is as follows. Preferred consideration. No bargaining, please. 1. House property, 500 rupees. 2. My lovely dog, 5 crore. Together you can purchase from. He sold. One buyer came. 5 crore, 500 rupees he gave. Said, dog. We have to have a special lens also for the size of the dog to see. So he had, and the property also. They registered subject to whatever terms. Let us not go to the technical details like your guidance value and all. They registered. He came out. He went to the God. My God, I am very honest. Whatever I have told, I will never be taking back. What I told, I will sell my property. 75% of the consideration I will give it to you, I told. Today I got 500 rupees for this property, my God. Thanks to you. Out of this 375 rupees, I will give it to you. I am very honest. Balance only 125 is there. That's what is rest given to me. No problem, I am happy to take it. Anyhow, I have parted with my dog. What to do? Poor man I am. Okay, thank you. He went ahead. God will forgive. Because God is always nice. He will forgive. Lawmaker will not forgive. That is why the law is. Had there been lawmaker, what he will do? Whatever be the highest consideration will be treated towards the property. So I will treat that 5 crore rupees as the property. That's more or less sounding like this one. So in case of a mixed supply, can you just imagine a situation? A purchase is happening there, a small dog and a property. Dog is 5 crore. This is what will happen there when you are trying to allow the mixed supply. What will happen? All the 28% items, whatever it is there, he will be keeping there. For a small value, one 5% item will be there. If you are leaving him, that 5% will be predominant, you will say, unnecessary confusions. He simply says, keep anything what you want. Pay the highest rate for everything. Then will you keep small value item also inside that? You on your own remove that item. Because that will also unnecessarily cost. Otherwise, naturally it would have cost 5%. If you are linking with this, it will go to 28% unnecessary. Right? Now.
Suppose you only releasing purchase order controlling all the write-offs. Different rates.
Not sir, the thing is, the deed or records are there, one part is there. There are certain explicit facts, as I was just telling you. The supply is, whatever argument you try to say, will be able to clearly show you that this is natural bundling, this is unnatural bundling. Right away. See, purchase orders, documents, agreements are all there. With all best possible efforts what you try, beyond a level it will not work out because it will explicitly show that it's irrelevant, irrational bundling, unnatural bundling, it will show. Then it will give the effect of that. Supply, continuous supply. Under a contract is the main word, 232 or 233, respectively for goods or services. This one is for goods, this one is for service. Under a contract, you continuously make supply. When I should consider this as a supply? There will be milestones. That is where you are considering the supply. What is a milestone? See, if you construct continuously a building, a pipeline, or maybe a big kind of a complex or kind of a structure, civil structure. So there will be milestones. Till you complete and hand over, if the law is waiting, that's all. You will build for 7 years. But you will build every 7 weeks or 3 weeks or a month. So when there are milestones, on that basis if you raise bill, then the continuous supply is treated to be continuous supply subject to taxation on a periodic basis depending upon the milestones what you are having. This we already discussed in brief, this and this. Now, all this time what we discussed is about a forward charge. That is, you render supply, you give supply, somebody takes the supply, recipient. And as your supplier, generally you are liable. What is it generally? Whenever law says generally, be careful. Specifically it is going to damage you somewhere else. A contradiction is going to come there against this. That's the meaning of that. Generally, by and large, these are all very dangerous words. Some exceptions are going to be there against this. No, generally the supplier is liable. Okay, supplier is liable. Recipient is also liable in such cases. Why is our recipient is liable? No, recipient is liable. We don't know why and all, we cannot tell. This is happening there. What is the rationale behind it? Some rationals are there, sometimes I am not able to find out the rationale also. See, for example, very respected and my beloved friends are there in the legal profession also. Very respected friends. We work together a lot, all these things are there. But such a lettered man or woman born for safeguarding the law itself, not paying GST. Why? Reverse charge will be paid by the recipient. Few exceptions are there, reverse charge will be paid. So lawyer will not pay GST. Not so much lettered. There are very brilliant people there in the business of lorry business, truck hiring business. So lorry owner will not pay, lorry agent will not pay, GTA will not pay. This. What is the rationale? Only reverse charge will be there with the recipient should. So lettered lawyer will also not pay. Unorganized sector lorry person will also not pay. So if you are asking me to come to some conclusion, I can tell you, as a chartered accountant professional, if you want to see that you are not paying and your recipient is paying, change your name as lottered accountant. What is the rationale? Lorry owner will not pay, recipient will pay. Lawyer will not pay, recipient will pay. Lottered accountant will not pay, recipient will pay. That's all the logic I can say. I don't have any logic at all. I don't see any logic at all why the reverse charge is compelling the recipient to pay, not the supplier. There are some rationale. Beyond that I am saying that this is what I think. So coming to this one. Liability to pay in the hands of the recipient of the supply only. This we see, yeah. Here, section 2 subsection 98, he is talking about this. Now, 9.4, that is one section. Section 9 subsection 3 is another section which is talking about this. Now, the effect of 9.3, effect of 9.4, one by one, we will see this. What is the version of section 9 subsection 3? Government shall be notifying the categories of supply of goods or services, or even both also. The tax on which shall be paid on reverse charge basis by the recipient of such goods or services, or both. They say certain categories, as I told you, sponsorship, director's remuneration, GTA, or tribunal services, arbitral services. So on the list of items what they are telling. Of later from 1/1/2019, the security services, mutual fund agent, bank communication agent, bank correspondent, business supply. These are all the things which have been told as a list. Author of a book. These are all told. Now, the recipient will be liable, they have to pay that one. We will call it as mandatory reverse charge. What 9.4 said, I am using the word, that central tax in respect of supply of taxable goods services are both by the supplier who is not registered. Not registered. So section 9 subsection 4 was imposing reverse charge on somebody who is in the capacity of the recipient of goods or recipient of service, receives the goods from an unregistered supplier. In that case, the recipient is liable. But it's a history now. From 1/7/2017 to 13/10/2017, these provisions were in effect. By removal of difficulty process, a long complaints holiday has been declared after that. There is no need to worry that you are dealing with an unregistered person after 13th October 2017 till date. Till date means after that, after that from April 2020 what will happen, I cannot give assurance, we have to wait and see. Now, coming to this one. For the time being, reverse charge, we are referring to only the mandatory reverse charge. That's what we are referring to in our discussion. There are listed items. There is one notification 13/2017 CTR dated 28/6/2017. That 13/2017 is giving the list of items what are all there. Right? So one among the item or the primary item is this GTA services, goods transport agent services. So whenever goods transport agent service is rendered, if the recipient is happening to be registered factory, registered society or registered cooperative society or registered GST SSC or registered body corporate or a registered or unregistered partnership firm or any casual taxable supply person temporarily got registration for 90 days, all these guys will be liable to pay. GTA will not pay, will not collect, will not pay. There are small exemptions given there in the business. Say less than 750 rupees is the consignment value. GTA is not liable, you are also not liable. Sir, that exemption given to GTA, sir, for me. See, what law says is, whenever he has to do certain things, you have to do. See, supplier has to pay, he will not pay, you pay. Supplier need not pay, you need not pay. That's all. Exemption, see for example, milk, specified food grains like rice, wheat, other things, or some fertilizers, or wartime related movement, or the goods moved for public distribution system, PDS. These are the exemptions given there. Newspaper transported. For this and all, GST is not applicable. Though GST is not applicable, it is exempted. If it is exempted for the supplier, as a recipient, you are also enjoying the exemption. That's all. If it is liable beyond 750, beyond these items and all, he has to pay, but he will not pay. What he has to do in his shoes, you go into his shoes and you pay that. You pay. That's all. Now, having said that, the next item under reverse charge is sponsorship. What is the meaning of sponsorship? What is the meaning of donation? Any one of you kindly share your view. One line. Donation is what? Sponsorship is what? Quick discussion we need. Any idea?
Donate, they are mentioning any purpose.
Fine, sir.
Sponsorship for some purpose.
Purpose means, can you?
Event or some purpose.
Consideration.
Okay. See, just referring to a particular event or function, sponsorship money is given there. But beyond that, don't you have any benefit by giving that money?
Advertisement.
Should be there. The sponsorship's intention is to see that you get some publicity specifically. Donation, there is no need, there cannot be need. See, in other words, I will tell you. This event is happening there. There is one board nearby here, somewhere. In that board are hoarding. So and so private limited welcomes you for 3 days workshop. Best ever silver spoon you can buy from our company only. Why the chartered accountant workshop is having that kind of hoarding, I don't know. But it will be there. For example, like this. There is one hoarding in the entrance. We welcome all the participants. XXYY shoes, quality shoes you can buy anywhere in the part of the world. Something like that is it. For keeping the board they pay, let me say, to the organizers. Some 1 lakh rupees for that hoarding, 2 lakh rupees for this board, whatever it is. This is what sponsorship. So with an intention to gain any publicity or advertisement, if you do a sponsorship support to any event or any occasion, or as the case may be, or any publication or something, that is sponsorship. Donation is not with that intention. You give that, you are aware that that is going to be used for some good purpose. Maybe you will be clearly aware that what good purpose also, but it's donation. You don't want any publicity. But this is involving publicity. Now that is different. Now the question is, if you are giving the money, reverse charge will come, I say. Reverse charge on whom it will come? Slight trick is there. That's why I am asking you.
On the company which is sponsoring.
Sponsoring means giving money. Okay. Why not on the person who is receiving the money? Actually, who is supplier, who is recipient? Sponsorship service rendered by whom? That is why I don't used to reply at all to the faculty members' questions, sir. If I reply, there will be some twist, sir. That's a mind voice. Very simple, not so complicated. The person, when somebody is paying, he is gaining something. Why are you paying? Or whenever you are receiving, a consideration is received by a supplier, naturally. So the company is paying, a trust is receiving. For example, a company is paying, private limited company, trust is receiving sponsorship money. So the payer is a recipient of something. He is gaining or receiving something, some service. And the person who is accepting the consideration is rendering something. If he is not rendering something, why he should accept the money or why he should pay the money, right? So if that is the case, he is accepting. In this case, the trust is accepting the sponsorship support from them. The person who is paying is gaining some kind of advantage. The advantage is given by the other person, maybe publicity advantage or whatever it is. Now who has to pay the GST? This is clear. Now roles are clear. Who has to pay the GST? Naturally, recipient should be, because it's reverse charge. Recipient should only be paying that. 9.4 is reading that way. 9.3 is reading that way. So, if that is the case, the company which is paying money to the trust is the company which is to pay the GST as a recipient. If it is a partnership firm, again the partnership firm should pay. If it is other than partnership firm and private limited, the concerned person who is accepting the sponsorship money should collect the GST, remit the government. That is not falling under the reverse charge. In other words, sponsorship money paid by a private limited company will make the private limited company to pay the sponsorship related GST. Sponsorship money paid by the firm will make that partnership firm to pay the GST reverse charge. But any other characters, maybe an individual giving an advertisement, please buy dhoti from me. I'm a very good dhoti vendor. All chartered accountants, please wear dhoti. That's what the advertisement. Welcome you to 3 days workshop. Like that it reads. Individual. The person who is conducting this, organizing this, should collect the tax from him 18% and remit. The individual will not pay. Why? It's covering only the body corporate and firm, not the individuals, not the HUF, not the body of individuals, not the association of persons, not a one which is not falling under this category of company or firm, right? Arbitral tribunal, whenever you are having the service from them, you will be trying to see that you take the service and do. Then, in case of service taken by you in the capacity of business entity, you will be paying lawyer service you take, arbitral tribunal services you take. When you will be liable to pay? As a business entity, if you are dealing with that, then you will be liable. What is the meaning of business entity? Whether a proprietary concern will be a business entity or not. In this case and all, you have to see what is the meaning of business. Business entity per se has not been defined. Business as such has been defined. It's a long discussion, which is warranted. A long definition is there for studying it. From this, a summary you can get one thing. For profit motive or without profit motive also. If with a commercial intention, if you are having an activity, that is what business. That's all. It may be one-time activity also. In the given example, say for example, we'll bring back the same. You sell one printer at your home. You sell a printer at, let me say, at your office. Why we are talking seriously about a printer at office and say that you have to pay, though it's a one-time affair, you have to pay that amount. You are a chartered accountant. You are not a printer seller. You are having some kind of assets in your home. Maybe old furniture is there at your home or this, that and all. We are not talking about that at all. Why? That's also furniture. That's also having some value. That is also sold as a used asset. There is no commercial motive. One time or several times is not a question. If it is one time, you are also selling only one time, once in a while your printer, not regularly. So the periodicity is not important. Profit motive is not important. What is important is whether with a business intention or during the course of business are you doing this, is the thing. Nothing more than that. So in that sense it's okay. See, one more thing we will tell. You would have seen the jewelry shops, right? There you would have seen our sisters and mothers used to go there and change their worn out jewels. They give that, in turn they get their good item. There is always, jewelers business is very happy business. Selling is also profitable. Buying is also profitable. Everything is profitable in that thing. Whenever they sell also, they add certain items and increase the sales price. Whenever they buy also, they reduce the same items as a reduction and they get. You happily pay that also. That's how the country is running. Fine, okay. Whenever it is done there, see, he is selling the jewel, you say. Then what your sister or mother is doing? Is she not selling? So, for example, Just for example, 50 lakhs worth jewels, your mother or sister goes and gives to the jeweler and says that for this I want new, the equal rated good jewel, brand new jewel to me. She says, they give. You are saying that he has to pay GST, sir. I am very honest person. I collect GST bill from him, 3%, 1.5 GST. I collect back. Great. I'm an Indian. Happy. Nice. What about your mother or sister? Why you are not treating them as a seller of jewels? Disputed point.
They are not giving to the course of their business.
That's all. It's not in the course of business. It's a disputed point. There are still some negative opinions, school of thought is slightly differing there, but the real sense, if you go into, they are not in the course of business doing it. They are having that as a household valuable thing, and they are just exchanging for the purpose. The purpose is not to do a big business, but the business man is doing that one as a business. That's all. The purpose is to just exchange, just to modify that. That's all. It's not business. But debatable points are always there. But from this you can easily understand that what is the meaning of business entity. Any individual will become a business entity. Any trust will become a business entity. Chartered accountants in ICI is a business entity within the meaning because they collect fees. Intention is to earn profit or not is important. Whether profit is there or not is not important. The price is high or low is not important. The 3-day workshop is conducted 12 times per annum or 200 times per annum is not important. Now once in a lifetime that is also not important. The intention is very simple. Is it exempted? No. Is it during the course of your work? Yes. You charge money and do it? Yes. As long as it is not exempted, it is commercial. Commercial. It is treated as commercial. So there will be liability. For that, there will be liability to pay. So, having discussed about that, you pay to the government. You pay to the government. Government is rendering services to you. Nobody is believing. Government is rendering services to you, sir. Okay, but your personal experience, I cannot have any comment what to do. All these things you appear to be believing. When I said that government is rendering to you, services to you, like the chartered accountant building 50 crore rupees building, when I told, you did not believe at all. Okay, he is talking about somebody else. It's not related to us. Government is rendering service to you. So many services. With all due respect. Nice people are there still in government. That's always there. So, government is rendering service to you. Whether government will pay the tax? It will not. You only should pay. Sir, I am recipient. Yes, recipient should pay. Section 9(3) is compelling. One of the items is this. Exceptions are there. What are the exceptions are there? One, Department of Post. It will not make you to pay tax by registering. Just by sending a speed post, you are not going to go for a registration and paying the tax. You pay the GST also to the Department of Post, they will pay. In another way. In case of aircraft, vessel, these kind of things are there coming the port, near the precinct of the airport or seaport. Whenever it is done there, it will be collected, GST will be paid. We need not think that the foreigner or the inland airline or ship line will have to pay the tax. No, they will pay, government will remit it. That will take care. Shipyard or airport will take care. And transport of goods or passengers. Transport of goods or passengers. Maybe railway you have seen with the GST, cargo handling by them with the GST, or maybe government run kind of airlines, they will also collect GST and pay wherever it is applicable, 5%, 10% respectively for domestic and international. So in these cases, not government will collect anything, but in all other cases, you will be seeing that the recipient will be paying, whether it is central government, state government or local authority. Whenever you are paying rent, then as a registered GST taxpayer, you will be liable to pay. That's what will be coming there. RCM is coming out that. Then that so many other services government is rendering. MCA charges paid by private limited company. Is it not a service? Are you not paying to government? You are paying to MCA straight, Ministry of Companies Affairs, you are directly paying it. Your vehicle, the vehicle is registered by you. Fitness certificate you collect, FC for commercial vehicles. Are you not paying for that? You pay several charges to the government. There is one pollution control board, out and out, completely held by government, governmental authority. 15 members, 16 members appointed, of course with some nominated members, only from the government side. It's a government. Pollution control board charges you pay. Legal Metrology Act wise visit by a inspector from the Department of Inspector of Factories. They come there. So for that you pay. Lift inspector comes, you pay charges for them. They come and inspect, give the certification to you. Calibration certificate you buy for a factory. Stability related certificate you buy. So for this things you need to pay. Are they not renting service? Yes, government is renting service. So whenever you pay to government, reverse charge is there. My sincere request is maybe generally I share the same thing to all my audience, especially to chartered. If you want to be a normal, regular chartered accountant also, kindly don't avoid GST. Have some serious basic knowledge in GST, then only you can call yourself as a normal auditor. Why I say this? Sir, in one current asset of a company, 2019 financial statement which you signed, they have taken, let me say, 2.5 crore rupees worth credit. The 2.5 crore rupees worth credit, 2.5 crore rupees of ITC is from prevented credit of, say, for example, construction of a building. Office building they built, they took credit. Sometime back only my sister asked, sometime back, I told that at present law is preventing. You are signing a financial statement wherein 2.5 crore rupees recognized by the concerned assessee or the auditee that it is an eligible credit, so it is a current asset. As per the law, at the time, for the time being, if it is not a current asset at all, if without knowing the background of that, if you sign the financial statement, you don't know GST, you don't want to know GST. For example, I am saying, is it fair? Can you happily sign that it's a true and fair view? Are you satisfied? They have imported a sizable money and foreign exchange has been paid. You only issued 15 CA, 15 CB as per section 195 under Income Tax Act. Maybe some royalty paid, maybe some technical know-how related payment made. So many things are there. But they did not pay. All these are import of services. They did not pay any amount at all. Current liability not provided. 5 crore rupees is the liability for GST. The concerned private limited did not pay. Or a partnership firm, whatever it is. They did not. Current liability sans this liability. Not declared at all. No notes at all. No qualification. No emphasis of matter. You sign your financial statement. You say that true and fair. You reflected. I am happy. I am a CA. I am signing. This is nice. If you say, you won't do. If you say, can you claim yourself as a good chartered accountant and you are doing your duty, executing work duly? So to be a normal chartered accountant, just a normal chartered accountant, basic knowledge of GST is must. If you are not good in the basics about the basis of GST, you don't get yourself qualified to be a chartered accountant in practice at all. That's a reality. Beyond that, developing your knowledge into, you have a skill. You are good in business, you are good in finance, you are good in law, you are good in representation art. Of course, sometimes you are bad in, or most of the time you are bad in billing. That is a different one. So you are good in everything. So being a person of this much quality, you can be definitely an expert in GST law, no doubt about it. Why? This is not my version. What I am saying is, in 2015 they give a law draft. And in 16, something like some draft is changed there, modified draft is given there, GST law. When they write the law, they don't know who is going to follow the law, who is the authority, whether state government, central government, together, what administration, they don't know anything. As lawmaker, they write the law, draft, simple draft. At that time they write, there is going to be one law in this, whether it is going to come into implication or not also they don't know. There is going to be one law, final shape of a law is going to be something else. Whatever that is coming to come, as lawmaker I believe that there shall be an audit by the accountant. 18,200 plus programs they have conducted throughout India for their officers. Learned officers of 3 decades experience, 2.5 years decades experience and all of that. They believe it. They are well paid by them, they are safeguarding the interest of the revenue, respected officers, no doubt about it. But the government writes, let them be there. I believe the accountant to do this work. I believe their audit report to be given to me. What law I am going to say, that itself is not final. Whatever be the law I am going to write and the parliament is going to pass, let there be an audit by an accountant on an annual basis. That's a respect given by the lawmaker. When the law is coming to bill and the bill is passed and enacted as an act, consciously we are closely watching whether any change is there. Nearly 700 changes happened there from the prime draft to the final one. 760 plus changes. Never few sections got changed. One among the sections, this 35 and that 80. The lawmaker believes that the accountant will be the right person to do an audit. Fairly, he will be giving the report. He will read the law sincerely, he will study the facts perfectly, he will give a report duly with the highest possible professional integrity. It's a belief. Leaving their own officers also. Let my officer do audit, okay, he will do, but you give me. You are going to get your fees from the client only, but you will not be client tilted. You will be very honest, I know you give your report. Such a great respect given to the accountants in this country. Reciprocally, only respect what we have to give is learn sincerely the law and try to see that you are giving the knowledge to the client rightly. Coming to this one. Company's director is paid, whether it is remuneration or not. Everything is called as remuneration only whenever we are paid. But a subtle difference what we need to maintain. In practice it comes there because he will pass that. Biggest trouble is with the client. See, for a practicing chartered accountant, there are no enemies. Only 3 enemies are there. First enemy, client. Second enemy, client. Third enemy, client. Sorry, there are very good clients are there who will sincerely follow your advice. That's all that. That's very exceptions, fine. The problem here is, what he has to tell to you, he will never tell. What he should not tell you, he will tell maybe to the officer. This what is reality. See, director's remuneration is the one line. What is it? Resolution is there available. I will send you, sir. That's all. You will not send. Several demands you will send. You will have so many works you will try. End of the year when you are coming there, you will just see that what is the TDS return. You will see. Under section 194J, perfectly making this 194J, professional charges paid to directors, classified under director's remuneration. See, I am asking, why did you classify the director's remuneration under 194J under income tax act? Sir, 194J, my accountant said that 10% I will deduct. 192 salary, if you are deducting, how much you will deduct, I said. He worked out some number and said that 21.63% effectively it is coming, sir, he told. 10% it is enough, I told. 194J he deducted. What kind of reply it is? Is it so casual? The problem here is, sir, you are delivering lecture on GST, why are you talking about income? No, there is serious nexus. See, there is the same, generally the revenue building is same, central revenue building. One IRS officer of income tax department will be there for assessment of the same year, you will go inside that room. You will say that, yes sir, 184J sir, it is professional service only, thank you. After that you will go to the second floor, there will be central GST officer sitting there, he is also IRS, you will say that, no sir, that is not professional service sir, it is only salary. How can you? Facts are very simple. Under one central law, you are explicitly creating from your side. There is no compulsion by third person, you are only creating contradictory evidence. You say that it is not salary, it is professional charges, 194J, you are issuing 16A. Why are you not issuing form 16? Why are you not saying that it is section 192 and related TDs you are not deducting? On your own, you say that something is professional charges. Having committed that, you say that it is salary. What is the big difference? Very big difference is, if you pay salary to director, you already saw that one is an excluded item, it is not a supply at all. Employer-employee relationship is there, the company's first employee is director, managing director. Whatever you are paying to him will be falling under that. Please read Dr. V.P. Shanta versus Indian Institute of Medical Science. Are the brilliant judgments. Bombay High Court to Supreme Court, it was fully affirmed by the Supreme Court. For the past 4 decades plus, the case is a standing case, excellent case. Contract of service is what? Contract of service is what? Read that. Brilliant insight will be available. Invaluable, extraordinary experience you will feel when you read the judgment. It has been thoroughly analyzed. What is employment, what is professional, what is third party professional, very clearly. From that knowledge you can easily understand that if you are having an employee director, for him whatever you pay, even if you pay commission also, incentive, productivity bonus commission, anything you pay, as long as employment relationship is there, everything is salary. That means, if it is salary, GST is not talking about any service or supply at all. If it is not supply at all, supplier is also not going to pay. You, the recipient company, is also not going to pay. Happy? But if on your own you contradict and say that it is a professional service rendered by that person, what will be the fate of yours? It's a professional service rendered by him, taken by you. If that is the case, it is not salary. If it is not salary, it is supply. Supplied by him, he will not pay RCM, you will pay. By and large, what is happening there? Only at the end you recognize these matters around. This is what is happening there. So it's not good for you to take risk of that kind. Then, insurance agent or recovery agent, in these cases and all, only the insurance company will be paying, insurance agent will not pay, or recovery agent will not pay. Similarly, the items like the long-term lease of land for consideration are happening there. So whether promoter will pay or any person who has given that one, only the person who is a promoter, he is taking the service from you. He will be liable to pay. Security services received by you from a security agency which is run by a proprietor, which is run by a partnership firm. You are a person who is duly registered under a GST. What should you do? You will pay, not your security agency, which is a proprietary concern or a partnership firm. Sir, my security service is rendered by a private limited company, sir. They will collect and pay. They will collect and pay. Forward charge. I am talking about a case where services in the nature of security services rendered by proprietor or a partnership firm. You being registered person, you will be liable to pay. So, then, you will have renting of motor vehicles. A long discussion may be warranted, we will briefly discuss. Only condition, 2.5 plus 2.5, CGST 2.5%, SGST 2.5%, no ITC taken by you. You are letting out motor vehicles from 1 October 2019 if such billings are happening. So in that cases and all, who is the company, means body corporate, private limited, public limited, or any identifiable authority, corporation of government, whatever it is receiving that, will be liable. If security lending services rendered by a lender, security you have to lend the service, that's a big service actually. Again, a long discussion may be warranted, briefly I am telling you. In those cases and all, you will be borrowing the security for a while to show the strength. A lot of norms are there in several industries, like in your banking company industry, cash reserves need to be maintained at a particular level. Like that, securities are lent for a while actually. You give the security, using that one, borrowing is happening there. These things are happening there. So lending the security is a service. So in that case, borrower will be liable. Individual direct selling agent is there. In that case, the banking company or non-banking financial company or financial institution will be liable for that. Business facilitator service from January 2019. In those cases, banking company or the business correspondent respectively will be the person paying, not the business facilitator, not the agent, or not the business correspondent will pay, whereas recipient is the person responsible. In case of supply of service by an author writing the books, music composer doing the composition of music, photographer doing the photography, or artist who is acting or doing any dancing, this, that, or all. So in these cases and all, always the recipient publisher, recipient music company which is buying the IPR from the composer, or recipient producer who is producing the film using the artist services of acting or dancing will be the person liable to do this. But an option has been given there in case of author, where from October 2019 they have option. The author may write to the publisher that please pay me the tax, I am paying to the government, don't pay under reverse charge. He can write. If he doesn't, then the composer, the publisher of the books will continue to do the reverse charge. So he has to identify whether our author is a person making us to pay under RCM, or whether the author is a registered person for this. The right has been given to the author. He will write, accordingly only it will be decided. GST credits for paying GST reverse charge available or not? It's a simple question. Will not be available. See, whenever you are paying the reverse charge, you need to pay through your e-cash ledger only. Why? So, that's all. Why should not I? You can go to court. That's a different one. Sir, I am having 500 crore rupees of GST ITC in my hands. 500 rupees I have to pay RCM. I will use the 500 crore rupees maybe let me reverse that 500 rupees. I will be happy with the balance 499 crore 99 lakhs 99,500 rupees. Happy? No. Law says have your 500 crore rupees ITC separately. Whenever RCM is to be paid, pay that 500 rupees by cash. Why? That's how it is. RCM should be paid only this. Why should not? A lot of cases are there. The previous regime cases have been there where it had been told that it can be paid by ITC also. So old cases, earlier it was. But over time we have to see that this law is settling down with this one. If you have any question about this session what we completed, before I go to a small subsession of another 14 minutes, I will respond briefly and then go to this section. Any questions relating to what we discussed about basics and RCM? Levy, direct levy, RCM, basics of this, definitions, type of supplies, all these things we discussed. Do you have any doubts which need to be clarified with brief reply now? Or would you like to ask me after 15 minutes? Right. Point of taxation, that is time of supply, is important. What is the time of supply? Why it is to be decided? Is a question. First let us understand why it is to be. So there is a law, right? If I am selling the goods, I am liable to pay. For a consideration, it is ready. If I don't receive consideration at all, shall I say that, sir, somebody has to pay me consideration and he has said that his financial position is very bad. After 1 year time only he is going to pay me. So he is in a very pathetic condition. So to the government also can I say that after 1 year I will pay. If the government says, no, please see this, consideration not received, what to do? Can I say? If the government says that you have raised invoice, just because I have raised invoice, can you say that it's what you have written there in your law for a consideration? If the consideration itself is not received, how I can pay? Why should I pay? I will not pay. If I say, the lawmaker should come back and say that this is the point of supply, this is the time of supply. So you accept your liability, whether you received or not is not my problem. Or I send the goods. The goods are going there from my place. The recipient did not receive the goods halfway through. 400 kilometers, 200 kilometers only it went. That month's return he is filing, the concerned person. He says that my recipient has not received it, so let it be received. It's not a seller approved basis, just a normal sales. But the supplier is saying that, sir, the goods have not gone there, let it be received. Another 200 kilometers are there, 10-15 days it will take, let it reach. Next month I will present it. What lawmaker should say? You are liable, man, you have to pay. It should say. How I am liable? The goods are not received at all. In between, if something is happening, who is responsible? Let it be received, I will pay. If he says, is it fine? So there should be a clear demarcating line that this is supply. At this point, it is becoming supply or not. There should be clarity. If clarity is not there, everybody will be having his own logic. So to make that clarified, that what is supply, when it is supply, what is supply we discussed. When it is supply, this set of provisions are helping us. We'll just see, very easy to understand actually, but little care may be taken. Small subject. When you are supplying the goods, I am not talking about service, please remember. When I am supplying the goods, when the point of taxation, when the time of supply comes, section 12 says that the date of invoice or the date within which you ought to have raised your invoice is one side, to be compared with the date of payment received by the supplier, whichever is earlier. Of course, some exclusions are there, that is different. Now, time of supply for goods, you have to raise an invoice. Okay, normally there is a question. No. See, whenever you say in India, especially in our country, say, sir, you should do this. If I am not doing, what will happen? This is invariably a very serious question you have to respond as a professional also. Sir, this is the due date, please file your return. If I am not filing, what will happen, sir? Sir, this is one way, please go on with it. Sir, if I am going, what will happen, sir? You have to tell reply for this certainly. Violation and the results thereof. If you are not telling, the heads will break into pieces. It has to be told. Then only it will be fulfilled, the discussion. Now this, if I am saying that invoice is there, see the invoice date. Okay, if I am not raising invoice, what you will do? If you are not raising invoice, due date has been given there, you have to raise it. If you are not raising that, the due date will be considered. That's all it is. If you are raising payment, that is the date. So whichever is earlier is coming there in that. Now, this excess 1000 rupees is very minimal. This 1000 rupees difference in business never comes actually. It comes in wrong, it's only theoretical, leave it. Now, having discussed that, 31 I referred to. What section 31 says? As per section 31, invoice to be raised, I told. As per section 31, for goods invoice to be raised is okay. What 31 is saying? Whenever you are removing the goods for supply to the recipient, where the supply involves movement of goods, if the goods are involving movement, then that is what the time by which you are supposed to see that the time for taxing you has come. I tell another example. You ordered some 10 t-shirts to somebody from Chennai. T-shirts, we'll say Tirupur. 10 t-shirts I want in a particular design, you said. They prepared. They packed, kept separately in their own godown or somewhere. Clearly mentioned that not for sale for anybody. This is for CAXXX Chennai only. They put their invoice also on that. Whether they have sold or not. Whether they have sold or not. There is one big godown, sir. Hundreds of t-shirts are there. Yeah, kind of specifications you told. 10 t-shirts you selected, maybe over phone or otherwise. They identified, kept it separately, packed well. Put the invoice also on that head. Lorry did not come yet. What would you like to say, whether it is sold or not?
Sold.
Sold. But you did not receive the goods at all.
That's okay, because I have given the order
Ah,
and the invoice is raised.
Ah.
My goods are also identified.
identified. The possession has not come to you, sir. Is it okay?
It's okay. Title is the goods is once transferred.
Ah.
It's done.
Title mostly, effectively, if the physical transfer is not happening, logical transfer has happened. That's all. Invoice is raised. So there need to be a point to tax the person. There are certain cases where government is notifying relaxations. See, for example, there will be some kind of material, liquid items. For that and all, they say that once it is reached, see the weight of that one, tar weight will be continued. That is all exceptions. If you go into the depth, so many industries specific invoice raising and relaxations are there. But here what you need to note here is, if you raise invoice, well, invoice raising time is there either before the sale of goods or at the time of removing the goods for sales. You are liable to raise invoice. If you fail to do also, the time to raise invoice has come, the so-called removing time. That's all. That is the time by which you are liable. Or else what will happen? There will be a clandestine movement. GST interceptor vehicle is stopping the vehicle. Where is your invoice? Invoice is not there, sir. Where is your GST? Invoice itself is not there. Where is the question of GST, sir? This is a reply what lawmaker can accept. Invoice not raised is an offence. Maybe under section 122, another 25,000 penalty can be there. Violation of rule 46. That is different. But invoice to be raised, that's a kind of a milestone. Due date for that one is very clear. When you are removing it, that time has come. So point of taxation has come. That's all. You, without raising invoice, if you are doing it separately, it is penalizable activity. That's different one. But your time of taxation has already come.
When I am moving the goods to side,
Hmm.
I am doing some work
Hmm.
side.
Any construction work or something?
Or is the selling a machine or something like that.
Fine.
Moving itself I have to pay.
Ah.
And just as taking to side to
Ah.
some assembly or something, then handing over the things to the
Hmm.
customer.
Hmm.
Whether I can postpone or
No, sir. The thing is, when you are within the state doing this one, there is no supply at all. As I already told you, distinguished person are the persons making the transaction fulfilled. From Karnataka to Tamil Nadu, if a branch is moving its machine to Tamil Nadu branch or head office, there is a supply. Because I told you there is distinct person. Within Tamil Nadu itself, say for example, from here to Tambaram, some machine you are sending doing something, some customer related matter, maybe bringing back or maybe leaving there itself or the machine for a while. You are just moving from your premises to your own premises as long as this premises, Chennai, and that premises, Tambaram, are there in your list of registration, you have not done anything wrong
I am
actually.
saying the side,
Ah.
customer side, maybe from one state to another state.
Okay.
Customer side.
Ah.
I am moving here to
Naturally, you have to raise the bill, sir.
customer side,
Yes.
and I am not registered in that state.
Okay.
I am doing some particular
Right.
task, then handing over.
Highly advisable is please register there. For one simple reason, you will be having activities for the business purpose there. Then not registering there is involving so many confusion for yourself. Forget about the law. Secondly, when you are crossing the border, there is no question of saying that I am just doing for some other purpose. What purpose you will cross the border? Commercial purpose only. So if that is the case, without registration or proper invoice, if you are moving the goods, you will be definitely in trouble. To ease the process, to remove the difficulty, government has declared several clarifications and exonerations wherein if the vehicles are moving, question was so tough actually. One bus is going from one state to another state to render the transport service. Question was asked that if the bus is crossing the border, should I charge the GST on the bus value? It will go one day, that evening, and next morning it will come back. Should I charge? Was a question asked from the taxpayer. So that these are all the things which are not expected at the time of making law. Plain meaning will be reading that, but you go and come back. For transportation we exclude, for rails we exclude, for bus we exclude, for lorry we exclude. So like that, there is an exclusion for moving the material from one state to another state, it's okay. But it's very difficult for identifying the goods which are going and coming. A number plate bearing vehicle will go and come back, the government is giving exoneration. Now the identifiably Indian Railway is a monopoly, the rail will go and come back for sure, so you know very well. But a forklift is going there, or maybe a crane is going there and all, how to identify that specifically if it is not involving any registration also. So they say that go with invoice, come with invoice. That's it.
No, raising invoice, I can raise single invoice.
Yes.
Say I am lifting installing wheels, I
Hmm.
can send one part now, then from another part, from other state also I will move.
Yes.
For each lift, whether I have to bill, I have to get it registered.
That's what, sir. The workplace in which you conduct your commercial activity makes you very clearly to understand that being registered person there and accepting your part by part A state, B state, C state material and all there is the only right solution for you. Rest of the things and all make the matter very subjective. At any point of time, if some interception is happening there, you are smuggling that. That's what the meaning of that. How to prove that it is only our side? I will, after doing the work, I will come back here. This all should be proven, no? How to prove that? So you don't have any whereabouts at all there. You go and do something and come back, I will bill from here only if you say, it's tough. Still it is a state-wise administration only as far as tax law is concerned. Over time, one India, one concept will come over time. Today it is a situation wherein, or you have to get exoneration specifically from the commissioners level that I am just going there, this is the site, I will give the bond for this, I am just going there and coming back, no commercial activities. But once you are crossing the border, two commissioners are involved. Here one person can understand, what about the other person who is getting the goods? Stuff. Again it has to cross border and come back to this mother state, Stuff situation. Now, having discussed this explanation is okay. What about the reverse charge related matter? Sir, is there any reverse charge on the goods and all? A small list is there. Tender leaves, the forest related sales related matter, some of the products which are sold there as goods, and agriculturists are selling the products and the buyer is buying in bulk. There are some items, very few items, not so significant, only 6 items. What is the reverse charge? When the date on which you are receiving the goods, the reverse charge is happening. Till you receive, you are not liable. Once you receive from that, see for example, forest tender leaves, you are getting it. And you are getting the goods physically, then you are liable. That time. Once you receive physically, you sign the delivery challan and get the goods. As a recipient of the goods, you are liable. The supplier will not pay because it's RCM goods which are falling on you only. And these are all sundry, document name, whatever called is different one. They're same, of course, A or B or C, all the three are told in time. Supply vouchers, see you know the concept actually. If I give you a voucher, that will be capable of making you to buy or get goods without paying money. Value is there. You go to your shop, gift shop, show that one, he gives some books to you worth so much value, mentioned in that. Gives some chandelier lamp or whatever available there in the fancy shop to you. You are getting that. So in the case, the date of issue of voucher, if the supply is identifiable at that point, when it is identifiable. So it is not identifiable, sir, what to do? The date of redemption of the voucher will be the date of point of taxation. Okay, generally, a voucher will be clearly reading when it was issued, valid up to what date. That also will be there. Just imagine, I don't want to say the commercial name in this forum. of the brands actually. You just imagine a gift voucher with which you can buy the goods. It will read clearly that on what date it was issued, that voucher, valid up to what date, it will be there. So, if the date of issue is available, on that date of issue itself, the voucher supplier will be liable to pay for that voucher, the GST. If not, the date on which redemption is happening there, by giving the card and getting that one, is the date on which it is happening there. So, that's how it is. The time of supply in respect of the goods, not determined at all. Some confusion. Say for example, what kind of situation it is? So somebody supplied goods, sir. Somebody received. When did they do? How did it got transferred? How clandestinely it was moved? Nobody knows. Some confusion how it was done. Somebody got no delivery document, no videograph, no kind of identification, no LR records, nothing. Something messy. What to do? In a case where periodical return has to be filed, be the date on which such return is to be filed. A particular month we suspect by the time which it would have been. So the due date for that. Somewhere we have to stop the problem. Or in any other case what to do? The date on which tax to be paid. When you catch, then you pay. That's all the thing. A lorry is coming there from maybe far away from North India. For the past 3.5 months, such a large size goods are coming to you. When did it start? Driver is not able to tell at all. Confusion. We don't. You are catching hold of the North Indian supplier who has sent that without invoice. What to do? Date of filing, there is nothing you are able to understand. Today I have got, today you are liable, today you pay. That's all. That is the time of supply. What to do? He is not having records at all. Some decision you have to take. That's all the thing. Now, what about the late fees, penalties, all these things at all? What about late fees? Why we have to talk about late fees at all first? Interesting but serious point is, in a supply, if you are collecting late fees or penalty for belated payment, you used to do it, right? If you are not paying within 30 days time or 2 months time, please pay. Not everybody like a chartered accountant are gracious. Suppliers are very careful. If you are not paying in 2 months time, 1 month time, he is charging interest, right? So that is the case, he is collecting it. So 1 lakh rupees is the value of the supply, goods or service, whatever it is. 18% is the rate of tax, for example. For that 1 lakh rupees, 1 month time is given. 1 month passed, credit period over. After 5 months he is paying the recipient. Supplier is unhappy. He says that I will charge 18% per annum is the interest. 6 months you delayed, for example. Pay me 9%. 9,000 rupees you have to pay. Now for 1 lakh rupees GST paid. For 9,000 rupees, should tax be paid or not? Yes or no, sir? Serious reason is that it may be interest, but relating to supply only. When you are receiving that 9,000 rupees, when to tax? Because 1 lakh rupees is evidenced in the invoice. But this 6 months delay, you cannot decide when it will get completed. Only on the day on which he is paying, this interest working is terminating. Naturally, 6 months, maybe 8 months, maybe 9 months. When it stops, money giving, fine, now we will stop the interest. The clock is keeping on running. So for that interest component only, interest means late payment interest or late fees only, the time to tax is the time of real receipt of such late fees. For 1 lakh rupees, invoice date is the basis. In that month itself, GST to be paid. For that 9,000 rupees late fees, late interest, what I collected, after 6 months when I collect, at that time for 9,000 rupees only I will pay GST. That's a supply related to matter.
So supposing he pays only 6,000 rupees.
Ah.
I make a claim of 9,000, he gives only 6,000.
Yes, sir.
Will I pay GST on 6,000 or
On receipt, 6,000, that's all. That's a settled figure, that's all. Because there is a reduction in your fee. Something like a credit note kind of arrangement, you got reduced, that's all, pure. But for 1 lakh rupees, official GST credit note only will be able to reduce the figure, otherwise 1 lakh is the final figure. Whether you receive or not, whether you write it up as a bad debt, government is not bothered. 1 lakh is the value, you have to go ahead. If mutually you are understanding that rate is wrong and you are reducing by a proper GST credit note within the meaning of section 34, then it's fine. That will reduce accordingly. Same thing mutandis in respect of supply of service. Whatever we see. Mild modification is as usual. Date of invoice, refer to section 31, what we saw, we are going to see again also. Date of provision of service if invoice not issued. That matters a lot. 31. He's saying what is the time. If there is no invoice at all, what is the time given there? Generally 30 days time is given there for a service provider to raise invoice after the completion of service. If I am not raising, what will happen? So 30th day it's over, 31st day, law is deeming that invoice raising time is over, we will tax you. That's what I understand. Banking industry, 45 days given. They are having a lot of work, so they are not able to raise perfect invoice. So whenever invoice is needed, within 45 days they can officially raise invoice. Perfectly okay for them. Exclusions are there. Sundry here and there, some depending upon the industries, there are some exemptions. Otherwise, this is the number what you need to remember. Being a service provider, 30 days time given to me. You have a rental agreement for the month of December. You need to pay rent on or before 10th. You say for the month of December, you need to pay rent on or before 10th. You raise your invoice on 10/1/2020. You raise your invoice on 10/1/2020. Rent is relating to December. Will the law compel you to pay you the GST in December return or in January return? Simple questions only, nothing serious. Sir, December month rent collected by you because you raise an invoice in January. 10/1/2020. You raise invoice, honest tenant, that evening itself transfer the money. Normal. It's what every month is happening. Whether December GST return will be comprising this rent and tax data, making you liable to pay on or before 20th January, or January return of GST return of this purpose will be there, which you will be paying on 20 February 2020. When it will be? January return you say, right? So February you will pay. That's all the thing. As long as your invoice is there, now I will slightly modify this question. December rent is December rent. You did not raise invoice on 10/1/2020. You raised the invoice on 10/2/2020. Tell me that. Sorry? December 31st is the earmarked time. Raised. So, no, December 31st is the service over, sir. When I should raise my invoice? Within 30 days. 30 days is completed by what time? 30th January is the maximum stretched time I should raise, sir, but I failed. But I raised the invoice on 10/2. Can I say that I raised invoice on 10/2, so I will be paying in February return only? I cannot. Which one is earlier? The due date given by section 31 is very clear. On 31st January, you are taking your liability day number 1, which is there in January. So January return should definitely take care of your rent. You did not raise invoice is an offence. Just because you did not raise invoice. So in those cases, you need to prove that service was not completed. What is the completion? Month is over, he is leaving, tenant is there, leasing is happening there. What is there to prove? Now, if this idea is clear, satisfactory reply is that if this idea is clear, then the discussion point can be moved to the next one. There are certain exceptions about the money received. That's very exceptional item where money received 3 days not received. They are early days problem. Now you don't have any problem in that case actually. What about the reverse charge of supply? I told you some 15 items, 18 items. Sponsorship reverse charge, director's remuneration reverse charge, security service reverse charge, business correspondent reverse charge, insurance agent reverse charge, GTA reverse charge. So many reverse charge we discussed. What is the due date? Sir, I paid to a lawyer 1 lakh rupees fees. Very good lawyer, appeared for me, did his work. That gentleman did not give me invoice at all, sir. Let him give invoice, I will pay, sir. Is it fine? What you told, if you are appointing a lawyer, if you are a business entity, you are liable, lawyer is not liable. Understand? 1 lakh rupees I paid him day before yesterday, sir. 4th January 2020, sir. 2 days back. He did not give invoice till 2025, year 2025. So I will not pay RC. Is it okay?
We need to raise
Or,
reverse charge and then pay.
that's what. See, you are liable to commit yourself that maximum time given to you, maybe 60 days time, the law will wait. In that case also, I will tell you another example. Lawyer gave you invoice on 4th January 2020. You paid him the amount, let me say in 2022. No lawyer will accept that, I know very well. Just for example, he is not CA, sir. Don't make fun. Fine. The lawyer is given invoice on 4/1/2020 and you paid him in the year 2022 January. As only on payment basis the liability is coming there, would you like to pay on January 2022 the reverse charge? Law can wait only for 60 days. It reads very clearly. Immediately following 60 days from the date of issue of invoice. 4/1/2020 is the date on which he issued the invoice. At best, if you are adding 60 days, it may be somewhere around 2nd March or 3rd March 2020. That's it. 4th March 2020, your liability has come under RCM. You have to pay. Sir, I did not pay to RCM to pay the legal fees itself, sir. That is between you and the lawyer. We are government. 60 days over payment. That's all. Now you please think, are we seeing these points when we are doing audit or when we are giving advice regarding GST? These are all the things going to be dug up by the government departments. Whenever they are coming for a visit, investigation, audit, review, reconciliation, they will be taking up these points. They will be telling these issues. In case of reverse charge, that will be the issue. This we already discussed in case of. Sir, for associated enterprises who are all within the meaning of section 92C of Income Tax Act, that's a reference there also. For associated enterprises and all, I am not paying any reverse charge at all, just book entry only I pass, danger. Or associated or related party, if you are passing entries, just debit and credit in your books is enough to prove that there is a payment or receipt. Sir, I did not pay at all, he did not receive it, not necessary. Holding company, subsidiary company, enough. Debit, credit, finished. That is equivalent to payment or equivalent to receipt. In case of supply of voucher for the services can be used. I just get a voucher, I will get a service from somebody. I can listen to music in a music academy or something. What to do? In this case of vouchers and all, when it is identifiable, the supply identifiable, the date on which issue of voucher, that will be the date. No sir, that's not having any voucher date and all, what to do? When you are going to redeem it, in case of supply of voucher for goods service, the same way service also. Sir, these are all fine. I am not able to identify even after this much clarity. Same idea, return when it will be filed. That fellow not registered at all, what to do? When he is liable to pay tax, then it is. So that is the time of supply of services. Late fees and penalty already we discussed. Whenever you receive, that is the last point. Sir, there is a change in the rate, sir. What to do? Change in the rate. First they said 18%, then they said it is 12. Or they first said 12% on a particular date from tomorrow 8/1/2020, the rate is 20%. For a material or for a service? I rendered a service today, sir. I received advance yesterday. I rendered service today. Tomorrow I am going to raise invoice. Today the rate has changed. What to do? Or I rendered yesterday the service. I got the money today. Tomorrow I am going to raise invoice. Today the rate has changed. Ulta. Otherwise, I raised yesterday the invoice. I got the money today. I did not get the money also today. I am completing service tomorrow. I am getting money tomorrow. Today the rate has changed. Whether old rate I should apply or new rate I should apply, because invoice is going to be raised tomorrow only. Service completed in the old rate time. As per service completion, shall I raise the invoice? Everybody will be saying that if the rate is comfortable, they will say that okay, today only I completed the service. If the rate is difficult, they will say no, yesterday itself I completed, not my due rate. Will the law leave such a loose room for you? This is the simplest example what you can check. We are chartered opponent, and the lawmaker knows very well during the lunchtime this point will come. And this much, this is only 25% of the law what you have to read and understand. How to apply the rate, what rate, new rate or old rate. This is another 2 slides I have to show you. He knows very well, it will be already 1 o'clock 23 minutes at the time. The speaker will also be talking for more than 3 hours. Generally a boring speaker only. And the audience will be patiently sitting there. So now it is time for closing the discussion. At that time and all, this kind of complication may not be good. Let us have a good way. This is a good way. Just to see 3 components, sir. We are chartered one. We will always find out short, straight, clear way. Not a shortcut. Short but clear way. See, in any component, any case, three components would be there. When did you raise invoice? When did you make the payment? That is receiving the payment. And what is the point of taxation to be decided? Only after knowing the supply. In other words, date of completion, date of invoice, date of payment. Simply, if you have two components out of three components, either in old regime, old rate, if it is in new regime, 2 out of 3 in new rate, that's it. Your it's time tested. We can just check. It's not shortcut actually. Scientifically tested. So take for example, June 28th, old rate. Supply completed. 3rd July, invoice raised. Of course, within 30 days only, no, that's right. 10th July, payment received. How we decide? 3rd July, 10th July, both are in new rate regime. So, definitely point of taxation will be new regime. Exact date is 3rd July, what is our reading? July, that you are sure. Same is the case, 28/6, 36, 10/7. So, June is 2, July is 1. 2 are there in the old rate, so old rate will be the cost of taxation. Simple. If you read the very fine text of law, you will be understanding the same meaning there. This is simple example for practical purpose. You can decide the matter easily on that basis. Bank account reference and all over, now that problem is solved actually. It is credited to bank account. You see, crediting, when it is credited, how I know? Only when it is credited into a bank account, that will be decided. I don't know when it is debited or when it is credited. We will be taking out, if you are not accepting, bank credit will be the date for which. Sir, let the bank credit, sir, after 6 months, keeping that in BRS, I will accept later. That will not be over. One bank credited. That's the meaning of that. So that will be there. Now, if there is any question about all the things what we discussed, supply, basics of supply, nature of supply, varieties of supply, difference between the supplies, or RCM, forward charge, or time of supply, what are all we discussed. If you are having any questions for which brief reply I can give, we'll be happy to.
RCM payment,
Yes.
you can avail it as ITC the same month.
See, the question from my brother is, sir, I paid RCM which is naturally relating to previous month. See, you pay RCM. Why you pay RCM? The liability is coming there when you are liable to pay. When you are paying, your liability is coming there. So what is happening there? Your return filing is the time of paying the money. No sir, I paid it already. See, whenever you deposit the money, it's only deposit. Only when you are clicking the appropriation button for GST or 3B, payment is happening there. Sir, what are you telling? I paid immediately, sir. I paid to, let me say, one GTA. 10,000 rupees I paid. When did I pay? 31st is December 2019. One check I wrote to the GTA, gave to him. Honestly, I made immediately one payment in my computer. 31st December itself. So I paid that money. Now tell me whether I can take credit of that or not. You paid money only, you did not pay tax. Sir, this is fun. Take the challan. It reads that CGST, SGST, tax only I paid. No. Read 43, read together with 41. It will very clearly, 43.4 specifically, you will get an idea that whatever you are please see that, whatever you are depositing is credited to your e-cash ledger, it shall be appropriated towards the tax liability voluntarily by you at the time of filing the return. So you only see, before filing your return, at any time you can go to the government and make query that by mistake I paid, please return the money. You can pay. It's money, not tax. It's money parked in the government's account. So only when you pay, it becomes tax. The tax paid under RCM is eligible as ITC to you. Now tell me, 31st December you pay money to the e-cash ledger. 20 January 2020 you pay tax under RCM when you click GST or 3B. Law says the moment you pay tax under RCM, you are eligible to take the credit. When did you pay tax? On 31st December did you pay tax, or you paid the tax on 20 January 2020? I leave to you. When did you pay?
20 January.
Actually on 20 January 2020 you paid tax. What you paid is money in 31 to 12 2019. You pay tax in January. For January and relating to January you can take credit. No problem at all. So in other words, when you file January return, your credit is going. Naturally, if you follow this process, even in procedure also, when you click, you can have the reference of this payment of RCM that will come there when you are trying to file your January return as a money to be used for you. Simple. It will come to the ITC, you can link it and take it up. So it will be different. Not in the same month. Sir, by mistake if you have done, what will happen then? Every time when you have done this, 30 days interest will come. Before the eligible time of taking the credit, well in advance you have taken the credit. That will become. Any other questions? If no other question is there, I would like to conclude the session. So always it is my belief, as if before delivering the lecture, your knowledge level was only because of this lecture, half an inch slightly moved upward. Nobody come and told, all my presumptions. So it has happened then. Today is not an exception. So believe that there will be slightly an upward movement in your comfort level and understanding about the subject. Thanks for your attention. Thank you.
Without any doubt, sir, our comfort level has really gone up. Thank you so much for taking this session the forenoon. We thoroughly enjoyed this session. On behalf of all the participants at SIRC, this moment I'm giving it to you, sir. Thank you so much.
Thank you, sir. Thank you, members. Now we have a break for lunch.
I think the afternoon session we have registration, suspension, cancellation, revoking cancellation under GST law, then records prescribed under GST law, GST on job work, brief presentation on e-way bills. I would like to introduce our speaker. C.A. Sharda is a practicing chartered accountant specializing in GST and co-founding partner of GGSH and Co. LLP. She started off her career in KPMG Audit and Assurance and also has the experience in the industry of handling key position in finance and taxation. She is a speaker on GST at various forums including CA and CMA Institute, GST departments, various chambers of commerce, educational institutions and other indirect tax professional forums. Currently in practice, she is heading advisory compliances, audit refunds and litigations under indirect taxes for various industries. It's to you, ma'am. Welcome.
Thank you so much, ma'am, for such a sweet introduction. Good afternoon, everyone. Happy New Year to one and all. A small request, is it possible to come in front because it's more of a closed group, right? Ideally, I don't think we even need a mic. Is it just possible so that when you speak, it is easily reachable for me as well? And just in case if somebody feels the AC has to be adjusted, ரொம்ப கம்மியாக தான் இருக்கும். கரெக்டாக So I still remember 2019 beginning in one of the seminars when we were discussing, so we were just expecting that 2009 notifications and lesser number of amendments and all that. But to begin with 2019 beginning itself we have got the Amendment Act. And then followed by n number of notifications and circulars and all that in 2019. But now 2020 actually our wish is totally different. We are okay to even get a lot of circulars, but at least we wish the circulars don't get rescinded. They issue some circular and then they come back and say, no, it's okay, you ignore this. and then say that no, this circular will be revised by way of another circular, and then this will be withdrawn. So all these kind of confusions, actually the confusions are kind of increasing on one side, and the law is also equally getting settled down on the other side. So at this point of time, I think these topics have got a good amount of relevance, and I really wish probably from the next time onwards they can even include e-invoicing, which is ideally going to come up. So as part of this e-viable job work and all that, e-invoicing also is relevant kind of. So moving on to the topic, GST registration. So first topic is on GST registration. I hope you are all comfortable in the post-lunch session, comfortable in both ways, either this way or that way. I'm okay with it as long as I'm not getting disturbed. As long as you are not getting disturbed, I think it's fine to have a good flow in the session. So GST registration, yeah. Basically all of you would have had some idea, right? And who is eligible for registration, what is the threshold limit and all. What is the threshold limit, any idea? What is the limit above which the GST registration is mandatory? 20 lakhs. 40 lakhs. Any other answer? Is it 20 or 40, or somebody has a combination of 20 and 40? Yeah, service, sorry? 20 lakhs. For goods it is 40 lakhs. Okay, great. So, as he rightly said, if you are exclusively into supply of goods, then it is 40 lakhs. If not, then the threshold limit continues to be 20 lakhs. This is what, this is how the GST law started with. It started with 20 lakhs and it still stays in the same 20 lakhs. The only exception is that if you are a provider of, if you are into exclusive supply of goods, then only this 40 lakhs threshold applies. Otherwise, it's not applicable. Okay. So, in fact, when this press release was the press release got out for this, so we had n number of queries. Everybody started asking, is it now 40 lakhs, 40 lakhs, 40 lakhs? Then we have to, clarify them. No, it's not 40 lakhs for all of you. So only if you are into exclusive supply of goods, it's 40 lakhs. But invariably, most of the companies will have at least a very small service component. So even if it's a one-person service component also, still you cannot get into that 40 lakhs. You still remain in this 20 lakhs threshold limit. Okay, so this is at a broad level. GST registration, as far as registration is concerned, it is dealt with in chapter 6. So the sections are from section 22 to section 30, out of which I would say the most critical section are the first 3 sections, which deals with section 22, person liable for registration, and then person not liable for registration, and then 24, which is compulsory registration for certain cases. Okay, so these 3 are the most critical sections out of the entire registration. Why? Because this is going to actually guide you on whether at all a person requires registration or not to begin with. So this is actually a kind of critical session, critical sections, and this is more like, you have this Ganga, Yamuna, Saraswati. Okay, so but Ganga is good, Ganga is stable. But this Yamuna and Saraswati are like Kurekudam Kuttaram. They have a lot of complications into it. And the balancing between the section 23 and 24 is an altogether different set of challenge. We'll actually deal with it as we go into the topic. We'll look into more of the issues and all that. We'll just not brush through what is apparently given. We'll also try to see what kind of complications could be there, and we'll try to resolve, and we'll still end up with no solution but kind of confusion. That's what actually happens in GST, but we have to sail with it. Okay. So moving on to this, and apart from these sections, that is basically all these sections, we also have these set of rules. Okay, so in registration, rules plays a very, very major role because basically the Act says what you have to do or what you should not do, and the rule says how you have to do it. Okay, so for any kind of provision, the rule guides, basically it prescribes the form. It guides you the manner in which the act has to be implemented. That is the role of rule. Okay. So because the topic is on registration, suspension, cancellation and all that, what is very important is how you do it. So because of which you have various rules into it. And apart from that, there is one thing which overrides everything, that is your, any idea? What overrides your act, rule, everything? Constitution ko mela, sir. GST portal. Anybody disagree with me? No, right? See, end of the day, whatever the portal allows you, that only you can do. If the portal doesn't allow you to do something, you can never do it. So that is like the ultimate deciding authority. Okay. Right, as part of today's session, we are not actually going to get into the portal level, how it has to be filed, or what kind of issues or concerns will be faced in the portal and how to resolve it. Those kind of things are not going to be dealt as part of it. This particular session, it's going to be more of a technical and legal matters what we will be discussing on. Okay. So moving on. Now, first of all, what is the threshold limit? As we rightly discussed, if someone is exclusively engaged in supply of goods, then it's 40 lakhs. If you are engaged in both services and goods, or even only on services, then it remains to be 20 lakhs. But this is for all the states other than the special state. Okay. For special state, instead of 40, you have to apply 20, and instead of 20, you have to apply 10. So why does it happen, sir? Okay, the special states, I'll tell you what are all the special states, but basically it covers the northeastern states, okay. The economically backward states, those are, okay. So, what value a product or a kind of a service has got here for 20 lakhs, it will be equal to 10 lakhs there. So that is the whole objective. And if it's going to be 20 lakhs, the number of people who are going to get into the ambit are going to be little lesser. If it's going to be 10 lakhs instead, then you can actually have more number of people into the registration so that the collection also gets better. That is the whole objective of it. But however, the special state is not something where the central government is mandating or the act is mandating that these are all the set of special states. No, that's not how it works. The act says special states, however, the states are in the liberty of deciding whether they want to be under a special state or not. For example, even recently when Jammu and Kashmir was covered as, a lot of amendments have gone into GST law with respect to Jammu and Kashmir, but Jammu and Kashmir has not opted for this special state category. So many states have not actually opted for the special state. Only a couple of states, only 4 states, which we will be, discussing in a while. So only 4 states out of all the northeastern states, they have opted for the special state category. Okay. So this higher threshold limit, this 40 lakhs of higher threshold limit what we were talking about, there is a small exception to it. We said yes, if you are providing services then you are not eligible to get into it. But then there is one exception, that is services provided by way of extending deposits, loans or advances insofar as the consideration is represented by way of interest or discount. So basically this interest is something which is outside GST, it is completely exempted from GST. In fact, if you refer Rule 42, Rule 42 is where this proportionate reversal happens. So if there is if a person is having taxable supply as well as non-taxable supply, say exempted supply, this kind of rule was even there in service tax law. So basically what you have to do is whatever is your common credit, there you have to take it proportionate to your turnover. So which means to the extent of your proportionate to your taxable turnover, you can avail the credit, and to the extent of the proportion attributable to your exempted turnover, you are supposed to reverse the credit. Okay, so this is what is Rule 42. So even there also there is an exception which is given for this interest. So even though interest as an income is an exempted income under GST, still for the purpose of Rule 42, you don't need to make a reversal there. Okay, so same way even for the higher threshold limit also, even though interest is a form of services, only that particular service. That doesn't mean exempted service are not being excluded. We have to be very careful. So say for example, a person is providing 40 lakhs of taxable supply of goods. Okay, and he is having say 5 lakhs of exempted supply of services. This 40 lakhs rule doesn't apply. Still the aggregate turnover is 40 plus 5, 45. Okay, but only if the service, particular exempted service is in the form of interest or deposit, then you don't need to factor it for that 40 lakhs. Okay, so this exception is only for that higher threshold limit and not for your regular threshold limit. No, for your regular threshold limit, this exemption is not there. It's only when you are applying that higher threshold limit, this exemption will be applicable. Okay, now moving on. This higher threshold limit is not applicable for certain cases. Point number 1 is compulsory registration under section 24. We will come to it. That is what I told you, Ganga, Yamuna, Saraswati. Out of that, the 24 is what is Saraswati. Okay. So section 24 is the compulsory registration. If somebody has to get compulsorily registered, then they cannot get this benefit of 40 lakhs and all that. So the second aspect of it is the supplier of ice cream and other edible ice, and whether or not contains cocoa, and then pan masala, tobacco. So these kind of products, you don't have any kind of threshold limit at all, irrespective of whatever be it, it has to be registered, and this 40 lakhs obviously doesn't apply. The third category is, as we discussed, the special states where they have not opted for it. So that is one thing. And then voluntary registration under section 25. So voluntary registration is where you go and you get yourself voluntarily registered, doesn't matter whatever is the threshold limit. So in that case, anyway you are ignoring the threshold limit itself, so there is no point of whether it is 20 lakhs or 40 lakhs. Okay. So this is what is the threshold limit all about. Any doubts so far? We'll move on. Okay. So transfer of business, there are a couple of cases where the registration happens almost like automatically, or rather it's like default registration. So one such registration is the transition related one. Okay, so as part of today's session I will not be covering anything relating to transition because it has been really long. We have come a long way, more than 2.5 years, right? So there is no point in going back to the transition provisions at this point of time. So registration or job work or anything for that matter, I won't be covering the transition part of it. Okay. Transfer of business, that is one scenario. So if there is a transfer of business from one person to another person, be it because of succession or any other reason, doesn't matter what is the reason, then there is a requirement for this transferee to get registered, and the date of registration will be liable to get registered on the date on which this transfer is being executed. Okay. The other two scenarios are basically your amalgamation and demerger. So in the case of amalgamation, demerger kind of arrangements, there will be a court order. So the court order date is the date on which you are liable to get registered. So that is the date on which, there will be a court order, and based on the court order, the ROC will issue a certificate of incorporation for this transferee company. Okay. So this transferee company gets that revised certificate of incorporation or a fresh certificate of incorporation from ROC. So that is the date on which the company is liable for registration. Okay. Moving on, the other important points with respect to registration are, the term that is used is aggregate turnover. Okay. So this aggregate turnover is something, the same hall we have had many seminars on GST audits. Okay. So whenever there is a topic in GST, in fact we used to have 2 days GST audit session, 1 full day of GST audit session. So what happens is, during that time, the term aggregate turnover alone will be discussed for 1 to 1.5 hours. There was so much of complications inside. Okay. So how to determine what is this aggregate turnover? But today we are not going to spend that much of time. I'll quickly brief what it is. So this aggregate turnover basically is a PAN-based turnover. Okay. So when you are applying this threshold limit, you cannot apply it on a state-wise basis. So PAN-India, if you are crossing the threshold limit, then you have to get registered. Okay, point number 1. It also even includes your deemed supply. Okay, so deemed supply basically under schedule 1. Okay, meaning, so let's take a simple example. A person has started business, so when he is starting the business itself, the business is in such a way that it requires multiple state business and all that. So he starts from Tamil Nadu. Basically, he sends the goods from Tamil Nadu to Karnataka. Okay, worth say 7 lakhs. Okay, and then from Karnataka, he is again moving the same goods to Kerala. Same worth of 7 lakhs. And then from Kerala, he is actually selling it to the customer. The sale value is 8 lakhs. So it's 7 lakhs from Tamil Nadu to Karnataka, and then 7 lakhs again from Karnataka to Kerala, and then from Kerala it goes to the customer, and there the invoice value is basically 8 lakhs. Okay. So simple example. Now what is his sale? 8 lakhs. Okay. And apart from that, what he has also made is, to the same Karnataka customer, he has also done a small installation charges for that particular sale. The product which he has sold it for 8 lakh rupees, he has also done a small installation for say some 5,000 rupees. That's about it. So his turnover is what? 8 lakh 5,000. That is what is his turnover. Okay, that is what is his revenue. No, is he liable to get registered?
No.
Yes, to reduce.
Yes.
Anybody? Any thoughts? It's okay. See, there is no right or wrong answers. We are only discussing. I have come prepared. Probably you people have not come prepared. That's about it. Maybe if I have not come prepared, I will be also thinking the same way. So it's okay. Don't have any inhibitions. We'll just open up the answers. It's okay whether it is right or wrong.
Interstate supply, you have to get registered.
Who said that? Okay. Interstate supply, so you have to get registered. Straight on you compulsory registration jump பண்ணிட்டீங்க. Super. Okay. And the interstate supply, and the reason we will remove it for the time being. Okay. Because when the syllabus we have not got into it. Okay.
Turnover crosses 20 lakhs.
How it crosses 20 lakhs?
7 lakhs plus 7 lakhs of stock transfer.
Okay, so this is what it is. Basically, deemed supply under Schedule 1 includes, Schedule 1 talks about supply in the cases where there is no consideration at all. You had levy in the morning, right? Levy was covered in the morning session. So there you would have had Schedule 1 also covered, right? So supply without consideration. So there the movement or rather supply of goods or services between distinct person would have been dealt with, right? So that is what it is. So this 7 lakhs of inter-branch movement, that 7 plus 7 is nothing but deemed supply under Schedule 1, wherein the supply happens without consideration but between distinct persons. Okay, so it's basically 7 plus 7 plus 8. Okay, plus you cannot. So this totals up to 22. 22, correct? How much is this? Every is awake. Okay, fine. So it totals up to 22, right? But still we cannot apply that 40 lakhs limit. Why we cannot apply 40 lakhs limit? Because there is a small service element also. Installation service element is also there. So you cannot apply that 40 lakhs. So naturally the 20 lakhs threshold has been crossed. So he has to get registration. The other most important reason is that if you are a supplier of goods, if there is an interstate transaction, naturally you have to get yourself registered. So that's like a compulsory registration. Okay. So that's anyway there. But apart from that, just for the sake of academic example, we are just discussing on this. Okay. So moving also like that, there are a lot of complications for one to understand what is an aggregate turnover. Okay. So moving on. In the case of principal agent as such we have a separate point to discuss in the future slide. But anyhow, if there is a principal agent kind of a relationship, then for that agent in the turnover, whatever he is supplying on behalf of the principal will also get included. So my sales plus the supply whatever I am making on behalf of the principal, both together I need to apply to evaluate whether I am crossing the 20 or 40 lakhs, whatever it is. Okay. So this is another important exception. The third one is in the case of job work. Job work as a topic we are having it at the end of the session. But still to cover up the point here with respect to registration, it is contrary to how it is in principal agent services. Okay. Meaning, so if you are a job worker, you have received the goods from the principal and then you are sending it back to the principal. Okay. So this sending back does not count for the purpose of this aggregate turnover computation to evaluate whether this job worker should get registered or not. Okay. To be more precise, say the job worker is giving this, basically he is giving services, right? So he is supplying services in the form of job work activity. So that service revenue is say 10 lakhs, okay. And apart from that, if he is having another supply of goods back to the principal, okay, for which he is not raising any invoices because it's principal's own goods which I am just doing the job work on and then I am sending it back to the principal, okay. The cost value of that particular goods is say some 80 lakhs. Okay, so on 80 lakhs worth of material, I have done 8 lakhs worth of services and then I am sending it back. In that case, you don't need to factor that 80 lakhs. It's only the 8 lakhs that has to be the deciding factor for the registration. Okay. So special category, as we already discussed, basically this Article 279A is what is the constitutional provision for special category states, but not all the states which is there in the constitution has been directly adopted for GST purpose. As we stand today, there are only 4 states who are continuing with the special category provision, which is your Manipur, Mizoram, Nagaland and Tripura. Okay, apart from that, all other states are continuing with that regular exemption limit of that 40 and 20. Okay. Yeah. So where registration should be taken. Okay. So the Act uses this term in the state from which taxable supplies are to be made. In the state from which taxable supplies are to be made. So morning in your session you would have discussed destination based tax, correct? But for registration purpose it's not destination based tax. It's the origin based registration. Meaning, so carefully we will reread the wording, in the states from which taxable supply are made. Okay, so basically the place where the supply originates, that is where I need to get registered. For example, if I am in Chennai and I am supplying goods to Bangalore, doesn't mean I have to go and get myself registered in Bangalore. It's sufficient if I get registered in Tamil Nadu. Okay, so the registration is origin based. Again, from where, that will be decided based on the place of business. Okay, so place of business, there is a separate definition which is given. Place of business includes place from where the business is ordinarily carried on and includes a warehouse, godown, any other place stores its goods and supplies or receives goods or services or both. So this is one part of it. The second leg is a place where a taxable person maintains his books of accounts. Say for example, head office. Head office doesn't do anything at all. Okay, there is absolutely zero revenue in head office. There is only a corporate office. Okay, there is absolutely zero revenue. The entire transaction, entire supply is happening in altogether different state. But still the head office has to get registered because this is a place where the taxable person is maintaining his books of accounts. Okay. The third leg is a place where a taxable person is engaged in business through an agent by whatever name called. Okay, so basically if you are a principal and if you are dealing in that place through an agent, so there again you have to get yourself registered. Okay, so we'll discuss on two examples. Okay, works contractor. So I am a works contractor. So I am based in Chennai, say somewhere near Thambaram or somewhere in ECR or whatever. So in ECR I have successfully completed couple of projects and then I have got another works contract in Pondicherry. Pondicherry is not part of Tamil Nadu. It's a different union territory, right? So now I have to go and execute my next works contract in Pondicherry. Should I take a registration in Pondicherry? Or can I go ahead with the supply? Because I am anyway registered in Tamil Nadu. Any thoughts? Sorry? Take a separate registration. Any other thought? Casual taxable person, okay. Yeah, that option is there. Casual taxable person option is there, but sometimes casual taxable person, it comes along with some time limit restriction also. Okay, it works for some, it doesn't work for some. Okay. So is it required to get a registration? The answer is yes. Okay, because you go there, you do the works contract there, and basically there will also be movement of goods, and there you will probably have a small space as your office also, right? I am talking about a typical works contract, not like maybe you can assume something like Nesamani. Okay, so who goes and stays there for a while, and then he is having almost like a kind of small office there, and then he is executing the work there. Okay. So it actually requires a separate registration over there. But now what happens is, we'll talk about another example. Okay, let's take a person who is in Chennai. Okay, and he has his business also in Chennai. He has taken a registration. He is the sole proprietor. Let's keep it as simple as possible. And he is having two separate properties. One property in Bangalore and another property in Kerala. And both these properties are commercial properties which is let out for commercial purpose. Okay. So whether place of supply was covered in the morning, by any chance? That's a different topic. That's on a different schedule. Okay, fine. So because you are not aware of this place of supply, I'll probably brief. I'm not saying you are not aware of. Maybe you are all aware of, but still for the benefit of all. Okay. So place of supply is nothing but basis on which one has to determine whether a supply is interstate or intrastate. Okay, intrastate meaning within the same state, on which CGST and SGST will be leviable. If it's intrastate, IGST is applicable. Okay, so in order to determine the place of supply, basically one has to look into two legs. One is where is the location of the supplier and where is the place of supply. So it's not based on where is the location of the supplier and where is the location of the recipient. No, that's not how it works. It's based on the location of the supplier and the place of supply. Okay, so place of supply may or may not be the location of the recipient. It differs from scenario to scenario. Okay, so these two are the deciding parameter for deciding on whether a particular transaction is intrastate supply or intrastate supply. Okay, so moving on to our example, a person who is located in Chennai, he has got two different properties in Bangalore and in Kerala. Okay, so whether he has to take two separate registration in Bangalore and Kerala, or he can be happy with the registration what he is having in Chennai. Okay, so this is the question. Now I'll give you one more input. Place of supply for immobile property related, anything and everything relating to immobile property. The place of supply is the place where the property is located. Okay, so meaning, for example, I'm proudly having a GST registration number. Okay, and then I travel to Mumbai, and then I stay in a hotel in Mumbai, and then I tell him, like, when you are billing, give me a GST bill, and this is what is my GST registration. Okay, so my GST registration will be 33, which is based in Tamil Nadu. Okay, so my registration is in Tamil Nadu. I go to Mumbai and then I give him my GST registration, asking him to give me the invoice with GST. Okay, now this is not going to help me in any manner, because the property is located in Mumbai, so he will charge only the local CGST SGST. He cannot charge IGST. Okay, the moment it is local CGST SGST, which is Mumbai based CGST SGST, there is no way I can claim it in Tamil Nadu. I cannot get the input tax. The question probably may be on whether CGST component is eligible or not. Is that what your point is? It's actually a debatable point. Okay, so there are contrary views. Okay, one view is that CGST can still be availed. The other view is that end of the day it's a destination based tax. So the tax is destined in that particular state. So even though it's the CGST as a component, you still cannot avail that portion in Tamil Nadu. Okay, so both the views are there, but there is no clarity in this regard. The government has also not come up with any clarity on this, and unfortunately, so far there are not much of litigations in GST, but the only judgments what we are getting is the advance rulings. Okay, advance rulings or adverse rulings, however we call it. Okay, but these advance rulings also doesn't touch upon the place of supply. Okay, so advance ruling is basically, it was there even in the legacy law. Advance ruling was started first in order to basically address the queries of non-resident person. So this was there even in the legacy law. Okay, so the intention was very simple. Somebody wants to come and set up a business in India, so they are clueless on a couple of matters, so they can go and get a ruling in advance. So am I supposed to do this? If I do this, is it taxable, not taxable? Is this the rate that I need to apply, or it should be some other rate? So this is how the advance ruling was functioning. Okay, so from an applicant side, how advance ruling started was, it was only for the foreign, basically non-resident person. Okay, but then in GST law it is already open to all. It's not only for under GST law, there itself it was already made open to all. Okay, so because it was open to all, too many queries comes up in the advance ruling. Okay. So advance ruling in the old legacy law, how it used to be is, the bench will consist of retired judges who will have the wisdom to give judgment. But unfortunately, currently the advance ruling, contains the officers who are currently in charge. So you cannot expect an unbiased, judgment from them. So most of the advance rulings are hence adverse rulings. It's always department favorable. Okay. In fact, some companies go for advance ruling especially because they want to get an adverse ruling. Okay, so what happens is there will be a conflict on whether a particular product is taxable at 12% or 18%. Okay, I am a conservative person. I don't want to take any risk in my life, so I am going ahead and I am charging only 18%. But my competitor is charging 12%. I want to defeat his confidence level. So I'll go on advance ruling. I am sure advance ruling will anyway come in my in favor of that 18%, because the department people are there. They'll definitely go for higher percentage. So the moment they say 18%, I am also happy. I can convince my customer, and I can also threaten the competitor automatically gets threatened, because there is already an advance ruling to say that 18%. So basically the point is advance rulings are actually adverse. Okay, but unfortunately in this particular area of the CGST, what you were asking about, there is no advance ruling also available, because advance ruling doesn't talk about is not covered for place of supply. Okay, it is intentionally kept outside because every state has got its own advance ruling. Already it's biased, so it will be even more biased. You go and apply in Tamil Nadu advance ruling, asking which is the place of supply, they will say by default it's only Tamil Nadu, any state for that matter. So you cannot expect an unbiased view from the authorities if the question is going to be on place of supply. Okay. So if I am in Tamil Nadu, I can naturally apply only in Tamil Nadu. I cannot apply in the next state, right? And the officer who is approving it is also in Tamil Nadu. So he will obviously say you have to tax it only here. So hence it is actually kept outside the purview. So for this query, there is no clarity from the government side. There is no circular or anything. So there are two views, there are two opinions. So it's all about the risk that we take. Okay.
This is not with regard to place of business, right?
It's not up to place of business. It's about place of supply. Sorry.
This is with regard to the eligibility of input tax credit.
It is about the eligibility of input tax credit, but it is also linked with the place of supply from the supplier's perspective. From the supplier's perspective, it is also about the place of supply. Correct? But from the recipient's perspective, I do agree that it's about the input tax credit query. Okay. But still, so far there is no advance ruling on this. Okay. So there is no clarity basically from the government side. So conservatively, if it's a conservative approach, it's better not to take that credit. If it's a little aggressive approach, yes, you can go ahead and avail that CGST credit, and then you can find it out in the future. Okay. So this is one part of it. So moving on to our example, where this immovable property is located in a different state, and you are registered in the Tamil Nadu. Okay. So whether you have to take a registration there or not. Okay. So this place of supply basically for the immovable property is very clear. It is the place where the property is located. Okay. So should I charge CGST as GST? Does it mean so? So most of the time people come to a quick conclusion that if the place of supply is within the state, it means the tax chargeable is CGST as GST. No, that's not how it works. Okay. The determination of whether it's an interstate or intrastate is not merely based on the place of supply alone. It has to be a combination of the supplier of service and the place of supply. It has to be a combination of the both. Correct? So if you go by that sense, it's not that blindly you have to apply CGST and SGST. So there is also an option for you to apply IGST. How it is IGST? The supplier, that is the location of the supplier, is in Tamil Nadu. The place of supply is in Kerala, because the property, that is the immovable property, is located in Kerala. So the combination of the supplier in Tamil Nadu and the place of supply in Kerala will only land up in interstate transaction. Yes, so this is one way to look at it. The other way to look at it is, no, this guy has to get registered there. The question is why? Okay. So place of business, is it a place of business for him? It's again, a grey area. It's not that he is doing a business, but at the same time, commercial rental is an activity which is considered as a business activity, though he is not actually doing it there, but technically it happens there. Okay. The third point to consider in this is, if you look into the definition of location of supplier, the second point in it, it talks about the permanent fixed establishment. Okay, this fixed establishment, can you call that Kerala property as a fixed establishment? Again, it's again a grey area. It's not very clear. Okay. Whether you can call that property merely because there is a property which I would have probably visited, say some 20 years back. Can I call that it's my fixed establishment? The answer may be no. Correct? But at the same time, because I earn revenue out of that particular property, it is my fixed establishment which is located in Kerala. So should I get registered there? Okay. So it's a grey area. But let me take a minute away from all these things and let us look into the macro picture. What happens? End of the day. What happens? So either I will take a registration. There are only two options. Either I continue with my Tamil Nadu registration and then I have to charge IGST. Okay. I really wish nobody does the mistake of charging CGST and SGST from Tamil Nadu. Okay. So I have to charge IGST and retain my registration in Tamil Nadu. Option number 2 is I take a registration in Kerala and then I charge this local CGST and SGST. Okay. If I am charging IGST from Tamil Nadu, what happens for all the IGST transactions? You are supposed to give the place of supply code. Correct? When you file your returns for all the interstate, even if it is B2C, in your 3B you have to declare for unregistered supply to unregistered person, interstate supply to unregistered person. Correct? Are we declaring this? How do we declare this? State-wise. In our 3B returns. Correct? What is the intent behind? It's basically for the purpose of revenue sharing. Revenue sharing between the governments. Okay. So, the macro level way to look at it is, ultimately, whether I go with option A or option B, in either case, the Kerala government is getting its share, 50%. And the remaining 50% anyway goes to the government. Whether I charge IGST or whether I get registered there and then charge CGST, SGST. In any case, it's a destination based tax and the destination state is getting its revenue. So the overall way to look at it is, ultimately there is no loss to the exchequer. Correct? There is no loss to any of the government. Okay. So it's all about how we take the position and how we take the approach. There is still no clarity on this and whether one has to get registered or not get registered. But my personal views, I would not suggest someone to go and get registered just because he has got properties, in multiple states, and then do your, GSTR 3B1 for all the other registrations, and then, again, your overall company as a whole, it exceeds 2 crores, so again go and do GST audit for all these registrations. It's going to be a cumbersome, unwanted procedure from the company viewpoint. So personally, I would not suggest to take, registrations wherever a property is located, unless and otherwise there is some other business activity which is happening in that property. If it's a kind of immovable property which is not just let out, but rather probably you are operating there the letting out activity, meaning you also do some maintenance activity of the property, you also take care of certain other aspects, okay, then at least it makes sense to say that it's a fixed establishment and hence you have to get a registration there. If it's a property mere place which is there, which I don't even visit much, wherein I don't even take care of anything, the maintenance is also taken care by the tenant, so nothing is being done by me, then I would not probably take a view of getting a registration in those states. Okay. So moving on, the second section out of the 3 whatever we discussed, the second section is persons not liable for registration. Okay, they are basically exempted from registration. Okay, so there are 3 points in it. First one is exclusively into supply of non-taxable or wholly exempted supply. Okay, so there is a thin line of difference, or rather a big line of difference between exempted and non-taxable. Okay, not every exempted should be non-taxable, not every non-taxable should be exempted. Okay, let me just explain. Nil rated meaning the product is there in the tariff, but the rate of tax against it is mentioned as nil. Okay. Exempted meaning there are 2 exemption notifications. Okay, notification number 2/2017, which is for exempted goods, and notification number 12/2017, which is for exempted services. Okay, so if your particular product, say your goods or services, fits into any of these 2 notifications, then it is exempted supply. Okay, so this is exempted. Exempted includes nil rated, but nil rated does not include exempted. Okay. The third one is non-taxable. Okay, non-taxable can be because either it's nil rated or it is exempted, or it can also be because it is part of your Schedule 3. Morning you would have had covered Schedule 3, right, as part of levy. So Schedule 3 is, neither supply of goods nor supply of services. So that is also another non-taxable. Let's take even, petroleum, that's also another non-taxable supply. And even the alcohol liquor for human consumption, that is also non-taxable. So all these are non-taxable. So if a person is exclusively engaged in supply of non-taxable or exempted or wholly exempted, again it should not be a partial exemption, wholly exempted supply, then you don't need to get the registration. Okay. Simple example, hospital industry. Okay. If the hospital is registered under the Clinical Establishment Act, then the set of services given by the hospital is all exempted. Okay. But you have to be very, very careful. If there is a small pharmacy attached to the hospital, or let's take the hospital, in the hospital building, there is a small portion which is given to a pharmacist on rent. All these are taxable supply. Okay, so then you cannot get into this provision at all. Okay, so this is one thing we have to be careful about. The second thing is an agriculturalist to the extent of supply of produce out of cultivation of land. Okay, very recently there was one interesting advance ruling which is not actually relating to registration, but it's relating to agricultural product. Okay, a person wanted to claim exemption of basically a tax exemption for the imported yellow peas patani irukku. So the imported peas he wanted to get the exemption because it's a food product. Basically peas is exempted. But the ruling was actually against, because they said, see, the intention of giving this benefit for agricultural produce is to encourage domestic agriculture. When you import, then in no way you are actually contributing anything for the domestic agriculture. So it doesn't get exempted unless and otherwise it gets into the food product as such. Say for example, if it's milk, vegetables, those kind of food products, in any case that's not based on your agriculture alone. It's also based on, it is the basic living requirement of human being, right? So that wherein the government doesn't want to tax. Okay. So there it doesn't matter whether you import the fruit or whether you import the vegetable, that doesn't matter. Okay. But this is a scenario where basically the assessee was not granted the exemption, rather it was taxable. Okay. So you have to be careful. If an agriculturalist, to the extent of produce out of cultivation of land alone is exempted. Okay. Any other transaction if he is having, then he is liable to get registration. The third one is anything else notified by the government. Government has notified various things under this. Okay. Sir, AC off. Sorry. So various points have been notified under this. In my presentation, I have got even the notification reference also, but I'll probably take you through the points rather. Okay, this presentation will be shared with the SARC, and I think that will be circulated to you all vessel. Okay. So the first point is persons engaged only in RCM tax supply. Okay, let's take for example advocate, or let's take another example GTA. Okay, so if a GTA is exclusively engaged in GTA services, okay, then they don't need to take a registration. Even if their turnover is say 1000 crore also, they don't need to take a registration. Okay, but you have to be very, very careful in evaluating those cases, because most of the time what happens is GTA basically is only for the road transportation. Okay, but if the person is incidentally handling for some of his clients railway transportation, then it is a taxable supply. Railway transportation doesn't come under RCM. It is a forward charge 5% taxable supply. Okay, so in that case what happens is he will still continue to be liable for registration, and he has to pay taxes on his railway transaction. Okay, so same way, let's take another example where you sell in a fixed asset. So that is also one of your outward supply, which is a taxable supply. So a combined effect of all these, your aggregate turnover exceeds 20 lakhs, and then you are liable for registration. Okay, so you have to be very, very careful in evaluating, especially when the turnover crosses, and still if a person is not taking a registration, it has to be evaluated very, very carefully. Okay. So the next category is exemption from compulsory registration to supplier of services through an e-commerce platform where aggregate turnover is not exceeding 20 lakhs. Okay. So If we have to understand this, we have to actually understand what is the next section. Okay. The next section, I'll actually come back to the slide to clarify more confusions which is created by this. Okay. So the next section, that is section 24, talks about compulsory registration. So first one is basically it talks about registration. The second one, that is section 23, talks about exemptions to registration. Doesn't matter, even if you have crossed 40 lakhs also, it's okay, you don't need to get registered. Okay. That is the kind of basically exemption from registration. The third provision is compulsory registration. No matter what, you have to get registered. Even you make a supply of 1000 rupees also, you have to get registered. That is the third section. Okay, that is compulsory registration. Now what happens is, under this particular exemption category, they have notified it some other supply which is actually coming under compulsory registration under section 24. Okay, so one of the compulsory registration is for e-commerce platform. Person who is supplying through e-commerce platform, they have to get a compulsory registration. But now what happens is, there is an exemption given for it, exemption from compulsory registration to suppliers of services through e-commerce platform. Let's take a very simple example. A housewife who is at home and she started doing a business of garments. Okay, so basically that has started through Amazon platform, right? Many people do home-based business, right? And they host their products in various e-commerce platforms, including Amazon, Flipkart, whatever, right? There is no requirement for them to get registered, even though they are handling it through e-commerce platform. For them, the 20 lakhs threshold continues to apply. The compulsory registration for this e-commerce operator, people who are supplying to e-commerce operation, does not apply for this. Okay. So the next point is casual taxable person making taxable supply of handicraft goods having turnover of up to 20 lakhs. Why is this relevant? Is because casual taxable person comes into the compulsory registration. If you are a person who is anyway registered in Tamil Nadu and you are taking your goods for a temporary business purpose for say to Bangalore, then you become a casual taxable person. You take it for say some exhibition, okay, in Bangalore, and then you bring back the goods. Okay, so you bring back the goods or you sell it there, whatever be it. Okay, that is what is called as casual taxable person. So if you are a casual taxable person, then you have to definitely get registered even if your turnover is not crossing this threshold limit. Okay, so an exemption to this is if you are doing the taxable supply of handicraft goods, then you have to take a registration only if the turnover exceeds 20 lakhs. Okay. At a later point of time, when we come to this e-way bill, we'll also see another interesting thing. What happens is, in the handicraft goods, they said there is no, first of all, if you are doing this handicraft goods, forget about this handicraft goods. If you are a casual taxable person, compulsory registration. Okay. If you are doing interstate supply, compulsory registration. But if the product is handicrafted goods, then your registration is not based on the compulsory thing, but rather it's based on 20 lakh threshold limit. Okay. But even if you are an unregistered person for these purpose, still if you are making movement of these handicraft goods, you have to get compulsory e-way bill. Even if you are not a registered person, also you have to still raise the e-way bill. Okay. So yeah, I'm just touching upon that point. That point we are also covering once again in the e-way bill part. Okay. So the next point is job workers making interstate supply of services to the registered person where aggregate turnover is not exceeding 20 lakhs. Okay. So job worker, even though he is making interstate supply. Why this even though he is making interstate supply is because, as we discussed, interstate supply, if there is interstate supply of goods, then it's a compulsory registration. Even if you are making say 1 lakh turnover also, you have to still get yourself registered if it's interstate supply of goods. Okay. But if this interstate supply of goods is not my goods, but rather I am just returning the goods back to the principal, then I don't need to take a registration based on this. Even to decide, remember we discussed, right, to decide on what is the threshold limit, this will get excluded. Whether it is intrastate or interstate, in any case this will get excluded. Okay, so same way, if I am a job worker, I am located in say, Chennai, and the principal is say located in Pondicherry, or rather even Tada. Okay, so there are a lot of automobile companies over there. I get some product for job work and then I send back the goods. Okay, This, just because I am doing this interstate movement of goods from Chennai to Tada, basically back to the principal, doesn't mean I have to get registered. Only if my turnover exceeds 20 lakhs, I have to get myself registered. Okay. So yeah, the next point is persons making interstate supply of taxable services where turnover is not exceeding 20 lakhs. Now, what happened is initially they said all interstate, wherever there is an interstate supply, they didn't say goods or services. Okay, if there is an interstate supply, you have to get compulsory registration. In the so this is how the law was. Okay, so meaning let's take a simple example. Okay, a sole proprietor, a chartered accountant who has just started his practice. Okay, by God fortune, he has got first client in Bangalore. Okay, he is in Tamil Nadu and he is going to give the services in Bangalore. Straight away, first 1 lakh billing, he has to get GST registration. That's how it is. That's how it was. Okay, because interstate supply, whether it's goods or services, everything, the moment you have an interstate supply, you have to get registered. That is how the law originated. And then very quickly they have basically changed it to say that if it is interstate supply of services, then this doesn't qualify as a reason for registration. If you are otherwise, crossing the 20 lakhs, then you have to get registered. That's a different thing. Just because you are giving this interstate supply as a service provider, you don't need to get the compulsory registration done. Okay. So persons making supply of handicraft goods and having aggregate turnover up to 20 lakhs. This is again the point what we discussed. Okay. So if you go through this list, there is one small inference which we will make. We'll make the inference and then we'll keep it aside. Okay. One inference what we are making is, even though this set of notification whichever is issued under this section 23 to say the exemption for registration, it also contains certain set of exemption for compulsory registration. Am I right? One of the compulsory registration is interstate. So the exemption for it is given under this section 23 to say that yes, it is compulsory there. However, under this section, if you are doing the services, then you don't need to. So same way, there is a compulsory provision in section 24 which will say that there is a supply of, interstate supply of goods, but still come to this section 23, there is a notification available. If you are a job worker sending back to the principal, then you don't need to cover this. Correct? So basically, it is not only giving exemption in its own capacity, but this section also gives certain exemptions to the compulsory registrations also. Are we all clear at this point? Yes? So this is a small inference, we will park it aside. Now we will move on to this next section, which is section 24, that is compulsory registration. Okay. So compulsory registration, there are 12 set of activities. We will quickly go through all these. So persons making any interstate taxable supply, that's what we discussed. So the exception to it is, one is service provider, the other one is job worker. The second one is casual taxable person. Again, handicraft goods, if it is involving, then you don't need to, there is a specific exemption available there. So the third one is persons who are required to pay tax under reverse charge. Okay, this is very, very, very important. Meaning, the moment you take the services from a GTA, on which you are supposed to pay the reverse charge tax. The moment you take services from an advocate, on which you are supposed to pay under reverse charge mechanism, then you have to go for compulsory registration. Doesn't matter whether your turnover has crossed 20 lakhs or not. Okay. So this is again another important point. We'll just keep it part there. We'll move on to other points. So person who is required to pay tax under section 9 and 5. Okay. We'll understand what is the section 9 and 5. You're all aware of this e-commerce operation, right? E-commerce operation, remember definition kulla povena. Simply we'll understand Amazon, Flipkart, all these are e-commerce operator. Okay. So basically the operation is largely dependent upon the e-commerce platform. Okay. So as such, nobody is operating that. So it's all automated. So that's how it functions. Okay. Even this Uber, Ola, Oyo. So all these also gets into this. You take any shopping, websites as well. So everything gets into this, e-commerce operation. Okay. Now, even though all these are e-commerce operation, there is something called as TCS, right? So if basically I make a sale through Amazon, if my supply is taxable, then Amazon will collect tax. 2% tax will be collected and that will be remitted by Amazon. Okay, so this is how it works. There is a tax collection, TCS concept is there in GST. Okay, so that is applicable for the e-commerce operator. So all e-commerce operators comes under this TCS provision. Okay, but apart from that, there are 3 type of e-commerce operators. So far only 3 has been notified. Okay, so there is a separate section, section 9(5). Okay, so under which there are only 3 which has been notified so far. So these 3 set of e-commerce operator, they not only just deduct and pay the tax. It's not about TCS collection and remittance, but rather the entire tax itself will be paid only by that e-commerce operator on behalf of the supplier. Okay, so what are the 3? Transportation of passenger by radio taxi, whatever, keep it simple, Ola, Uber. Right, first point number 1 is nothing but Ola, Uber. Point number 3 is providing accommodation, blah blah blah. Simple example is Oyo room, right? The third one is services by way of housekeeping such as plumbing, carpentry, etc. Simple example, urban club, right? So we will visualize based on only these 3 examples. Okay, so what happens is, if there is a cab driver, it's impossible for the government to chase the cab driver and then collect the taxes, right? So these are the 3 set of activities wherein they have identified that it's impossible to collect the taxes from the supplier. So we will have the levy on the e-commerce operator. Okay. So and hence even Swiggy, but I don't think that is getting covered here. That's why Swiggy bill, if you see, that will be from the hotel. It's not Swiggy who will be charging you the taxes. It will be the hotel which is giving you the taxes. Okay. So that's how it operates. So these 3 are the cases where the taxes will be paid by the e-commerce operator themselves. They will not just collect the TCS. The TCS concept is not that. The entire tax will be charged on the customer and that will be remitted to the government by this e-commerce operator for the supply of services provided by that supplier, who may be the cab driver or whatever. Yes.
If you order something to Flipkart also, you will be receiving a bill from the original seller.
Yes. It's not that Flipkart will be charged. That's why it doesn't come under this category. The 3 categories are, one is that Ola, Uber type, the other one is Oyo type, and the third one is urban club type, right? It doesn't cover this Amazon, Flipkart, Swiggy. So all these cases, the supplier will only pay the taxes. The supplier will only collect and pay the taxes. And this Amazon, Flipkart, all these are acting only as e-commerce operator, wherein they will only do the 2% TCS. They will not charge the taxes. Okay, but these 3 exceptions and all, they will only charge the tax itself. They will levy the tax, they will collect the tax, and then they will remit it to the department. Okay, the actual provider of service need not actually collect the tax or remit the taxes. Okay, so now the point here is, let's go back to the previous slide. So the point number 4 here, the person who are required to pay taxes under section 9(5), that is the e-commerce operator. These 3 type of e-commerce operator, doesn't matter whether your threshold has crossed 20 lakhs or not, you have to get compulsorily registered. So if you are an e-commerce operator who is into this kind of radio taxi and all that, then you cannot be waiting for you to cross that 40 lakhs and all that. From the day one, you have to get yourself registered. Okay, this is what this provision states. Hope it's clear for everyone, right? Yeah. The next point is non-resident taxable person making supply. If you are a non-resident, the moment you get inside, you have to start paying taxes. That's how it works. Okay, non-resident taxable person. Again, this is very similar to the casual taxable person. This is also a very temporary registration. If it is domestic person, then it is casual taxable person. If it's a foreigner, then foreigner or foreign company, whatever it is, then it is a non-resident taxable person. Okay. The next one is persons who are required to deduct tax under section 51. So typically about TDS, if I have to tell, TDS is a scenario where all these government the government departments or the government authorities, whenever you give any services to them, so if your service value increases 2.5 lakhs, then they have to deduct the tax and then remit it to the government. Okay, that is a TDS concept under GST, wherein they will deduct and then they will remit it to the government, and then that will get reflected in your cash ledger directly, which you can utilize for your payment as well. Okay, so this is the concept of TDS. So if you are a person who is liable to deduct tax, that is the government agency, basically the government department who is liable to deduct the tax, then you have to get compulsorily registered. Doesn't matter whatever is your supply of outward supply or not. Okay. The next category is persons who make taxable supply of goods or services or both on behalf of other taxable person. whether as an agent or otherwise. So basically you do it on behalf of another person, okay, then you have to get definitely registered, compulsory registration. We will also talk about this, principal agent relationship in a while, okay. So the next one is input service distributor. So if there is a head office which wants to play the role of this input service distributor, then in fact there has to be a separate registration. So if the company is normally paying any RCM liability or anything, then they cannot get ISD into the same registration. Then there will be two different registration into the same state itself. One for the purpose of regular taxes and RCM and all that, the other one for the purpose of ISD. That's how it works. Okay, if it's ISD, if you want to distribute your input credit to other branches, then doesn't matter whatever is your turnover, you have to go for compulsory registration. So the next point is persons who supply goods or services other than suppliers specified in section 95 through such e-commerce operator who is required to collect tax. Okay. So this is other than 95, if there is any other e-commerce operator supply, then they have to get the compulsory registration. Every e-commerce operator who is required to collect TCS. So this is an amendment. Initially how this particular provision was, every e-commerce operator has to get compulsory registration. Then they amended to say that not every e-commerce operator is required to collect the TCS. So only those who are required to collect the TCS, then you have to get the compulsory registration done. The next category is every person supplying OADAR services. Okay, I'll just take a moment to explain this OADAR services. Very simple. You download, you have various apps, right? So these apps will be originating from any part of the world. The actual supplier of that app could be anywhere in the world. Correct? Now, when you are downloading the app, sometimes it's free, sometimes it's payable. Correct? So you pay for that app, for downloading the app. So this is a remuneration, this is a revenue which that person who is located in some part of the world, he is collecting it, he is generating that revenue from a person who is in India. Okay, so for this reason, it is separately taxable, but at the same time, it is not possible for them to trace out who are all the ones who are actually downloading this stuff. It's not possible. So OADR as such is a separate wing which is there under IGST law. So wherein this non-resident person who is providing this supply of goods or services, whatever, ideally it will be only services, it's only for services. So if he is providing these services, again it comes for any of these cloud-based data server, right? So again, they are giving these kind of services when they are collecting money from the person who is in India. Okay, this OADR is a little dangerous provision. Okay, slightly away from this registration topic, but still, I'll try to explain how it works. What happens is this OADAR, basically the person is located somewhere in the foreign country. Okay, and he is generating revenue out of somebody who is there in India. Okay, now what happens is if the person who is in India is a registered person, then it means what? He is importing services. Then he has to pay taxes under reverse charge mechanism. So if I am a registered person and if I am paying to this foreign person for taking this OADAR services, then I have to pay under reverse charge mechanism. Okay. On the contrary, if I am not registered, okay, then what happens is government has got a mechanism to collect taxes from that person who is located outside India, which is what is the separate provision for OADR. How it works is more based on this IP address, what is the address of the person who is doing it, what is the PAN. So there are a lot of ways in which they will get the data, okay, to identify how much of revenue this person has earned out of India. Okay, there is a mechanism in which the government will be able to monitor that. Okay, so keeping that aside, the point is if you are not a registered person, you don't have any problem. Okay, government will only catch hold of OADR. Okay, you are no way concerned with this. But if you are a registered person, then you have to be very careful. If you are availing these kind of services, then it doesn't come into this OADR at all. OADR is a scenario where the supply is provided to a resident non-taxable person. Okay, but in this case, if you are a registered person, then it doesn't even come into the OADR ambit. What happens is, it's like you are a registered person and you are importing services on which you have to pay the reverse charge mechanism. Very, very simple example, Facebook. Okay, So many of us, many businesses in India, you take, every single person next to your door, if at all they are into any kind of freelancing, they are doing any business, anything for that matter, first thing that they will do is digital media, correct? Digital marketing. What do you do for digital marketing? First create a page in Facebook, correct? We create a page in we basically, create this Facebook page, and then we start writing content, uploading content, or not everything we'll do, correct? Once it reaches a point, after that, you see what is the charges by this Facebook to make it a sponsored ad, correct? If it gets into the sponsored ad, what does it mean? You have to pay some nominal charges to Facebook, and then, go for certain digital marketing, so that your page is getting more popular, and then your business also grows. You are also able to get lot of online orders, right? So this is what is the intention. Now what happens is, the money that you are paying to the Facebook, unfortunately, maybe you can go back and evaluate it to whatever clients that you have, starting from 1st July 2017 until 2 months back also, until November 2019. Okay, I remember, yes, October 2019, Facebook was not registered in India. Facebook was registered only in Ireland. So what happens? This person is located in Ireland. Okay, so when you are creating your page for the first time, if it's a business page, it will ask you one question: whether do you have GST registration? We will say yes. Next thing, what is your GST registration number? What you would have advised your client? Whenever you deal with any vendor, first thing, give your GST registration number to them. Correct? So your client has done the right thing. He has given this GST registration number properly in the Facebook. Now Facebook, the moment it sees that you have got a GST registration, it understands that you are a registered person and you are only supposed to pay under RCM. The Facebook has got no liability on this transaction. But we need to evaluate whether the client is actually paying under RCM or not on this. Okay, so this is actually it is a prone area for non-compliance, maybe something that we have to go back and then evaluate. Okay, so if you are, now the issue will not be there going forward, because in October 2019 finally Facebook has got a registration in India. Now they have started issuing GST invoices. Okay, so this OADR is actually a little dangerous provision. As long as it's an OADR, as long as you are a recipient who is an unregistered person, you don't have any problem. If you are a registered person, you have to be very, very careful in evaluating where you need to pay the taxes under reverse charge mechanism for import of services. Okay, so just a point away, but to come back, if a person is supplying OADR services from a place outside India to a person who is located in India, and to a person who is located in India should be other than a registered person, then that OADAR has to take compulsory registration. Doesn't matter even if you have earned 2000 rupees revenue out of India, still you have to take this OADR registration and you have to pay the taxes as OADR. This is what the law says. Okay. So the next point, moving on, any other as may be notified by the government. Under this actually so far nothing has been notified. Okay. The previous one, exemption level, many things have been notified. Under compulsory registration, the same set of 11 points remain. The 12th point of any other notification, nothing has come up so far. Okay. Now, if we go back and start with this particular provision, how does it start? Notwithstanding anything contained in section 22. Section 22 is what? Basic liability for registration. Correct? Section 22 is the first section, which is for liability for registration, basically, and then the second section is exemption, and then the third one is compulsory registration. Correct? Now this compulsory registration starts with saying, notwithstanding anything contained in liability, which means what? Doesn't matter whether you have got 20 lakhs limit or 40 lakhs limit, doesn't even matter for me. If you are coming into any of these lists, then you are supposed to take a compulsory registration. Correct? But interestingly, it is only overriding which section? 22. It is not overriding 23, which is the section which is giving exemption for registration. Correct? We will park it here. We will see some of the examples. Okay. Lack of physical presence. I'm just skipping a couple of things. Okay. So this is where the issue is. Okay. Should I register under GST or not? Okay. The point what we are discussing is actually not as simple as what we see. It's magnificent. Okay. We as auditors, we are in a position where we advise the client whether they have to go for registration or not. Correct? So any wrong advices, we are going to have our own impact. A person who doesn't even require registration, we should not tell them it's okay, safer side you take a registration and then do all these monthly GST return filing, and you fail to do this GST return filing, pay all your late fee along with interest, then there comes one notice from the department that you have not filed it, e-way bill gets blocked. So a lot of things happens, right? So all these things happens if a person who is not required to get registered, he has got a registration because of ignorance. Okay, he has to suffer like it. At the same time, if a person is supposed to get a registration but he has not got it, he is going to suffer double time. When there is going to be a scrutiny or notice from the department in future stating that you should have got registration but you have not got the registration. So now you take the registration and pay for this, that, blah, 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 everything will come. Okay. So we are in a situation where we are advising the client to take registration or not to take the registration. Either case, it is very, very critical. We have to be very, very careful in analyzing this impact. Okay. So the issue is a combined effect of these three provisions. We are still not clear whether somebody should take a registration or not. Okay. Apparently, everything was looking fine, right? Number 3 section it was all good. We didn't. Anybody has any doubts, any confusion? Nobody is there. Yes, sir.
What is the Ola and Uber? The cab driver need not register.
They need not register, sir.
What about the OIO? I am having a property. I rent out my property through OIO. Whether I have to register?
Sir, OYO, there are two things. Okay. Now, in fact, OYO is coming up with OYO Life. Okay, if you have seen, that is for residential property. Okay, so let's take commercial property is only taxable under GST. Residential property is not taxable. If you are letting out to OYO, that itself is a commercial. If it's for commercial purpose, okay, if you are letting out to OYO room, your property for say some hotel accommodation purpose, then whether you give it to OYO or you give it to X, Y, Z, end of the day you are doing the commercial activity of hotel accommodation. Correct? So in that case you have to get registered. Okay. But if it is in the form of residential property, okay, so residential property is basically exempted. The rent of residential property is exempted. In that case you enjoy the benefit of exemption. Okay. So apparently these three sections, if we read it individually, everything looks good. Okay. But in a real life it doesn't really come so. Okay, so practical scenarios, it doesn't come like section 22 separately or section 23 separately or 24 separately. Your client will ask you, this is what is my exact scenario, which will be actually a combination of all the three, wherein we have to decide how it has to be taken. Okay, so let's look at these scenarios and tell me whether the person has to get registration or not. Point number 1, an agriculturist making interstate supply. Agriculturists can do interstate supply, right? Nobody can prohibit him from doing business. Now he is an agriculturalist and he is doing interstate supply. He need not register. Everybody is in the same page. Because he is an agriculturalist, because he has got a specific exemption not to get registered, he need not get registered even if it is interstate supply. Right? Okay. Second point, an advocate providing interstate legal services. Register panna solli dhaan paarunga. No way possible. Right? Anybody thinks an advocate will get registered just because he is providing interstate supply? No way possible. We are clear, right? Third one, interstate services by arbitrary tribunal to a business entity. This is again, an exempted transaction. So again, we will have the similar conclusion. We will look into the last fourth point. Person exempted from registration under section 23 for whatever reason. He has got a specific exemption under section 23. But he is liable for deduction of TDS or TCS under section 52. So compulsory registration we saw, correct? TCS collection irundale, you have to get yourself registered.
Yes.
TDS collection irundale, you have to get yourself registered. Correct? Now he is otherwise not required to be registered under section 23. Let's take, I am having, an e-commerce portal for sale of books. Books is exempted. Okay? So this is what I am doing. So for whatever reason, let's not even think of the category. For some reason, basically, I am exempted from taking supply, okay, or say for example a government organization, okay, who is basically taken a lot of services on which they are supposed to deduct TDS and remit it, okay. So for them section 51 TDS is applicable, okay. So TDS is applicable for this government organization, but entire services is exempted. The entire services of this government organization is exempted. Now should they go for registration or not? So the first 3 points when you said, for me it felt like you were giving a clarity that section 23 overrides, right? If it is exempted, it's exempted, doesn't matter. I will not see whether he has got into the compulsory registration for any other reason. So point number 4, do you think the person has to get registered? Yes or no? Yes. Are we taking different stand now? Looks like we are taking. Yes. Actually, there is no clarity in the law. Okay. Now we'll see there is an advance ruling. Okay. So there is an advance ruling in Maharashtra. The issue goes like this. Basically, the person is only into exempted supply. He is not doing anything else. Okay. So this entire transaction is only this compound animal feed. This is actually an advance ruling which was in April 2019. Okay. So his entire transaction is exempted. But what happens? For making the supply of this particular exempted goods, he has to take the services of GTA. Correct? He has to move the goods. He has to basically transport the exempted goods. Right? So this GTA is what? That attracts RCM. Correct? So if you are having RCM, you have to go for compulsory registration under section 24. Okay. If your entire supply is exempted supply, you are exempted from registration under section 23. Now what he has to do? He has no clue. He went to the advanced ruling authority. What is it you are expecting from advanced ruling authority? Get registered. That's what they have told. Okay. But ideally they didn't make the conclusion that quickly. If you go through this advanced ruling, they are giving the reasons for why they are giving this kind of a conclusion. Okay. There is a concept called as harmonious interpretation or harmonious construction. Meaning, if you read an act, okay, and you find that there are two contradicting law, you have to read both in such a way that you go through the overall intention of the law. There is something called as harmonious interpretation, meaning the overall intention behind the act should be looked at. Okay, so this is one thing. The other principle what the advanced ruling authority is referring to is rule against redundancy. Meaning what? By applying one particular section, if it is going to make the other section redundant, you should not make that kind of an interpretation. Unless and otherwise, the section which you are preferring has got an overriding provision. Suppose, in the section 23 and the exemption provision is clear. If it starts with saying notwithstanding anything contained under any other, anything else in this act, then already there is an overriding power for that particular section. Then you don't have an issue. But in this case, there is no such, provision. There is no such power also given for that section. Correct? So, by giving emphasis on section 23, you are making that section 24 redundant. அப்படி ஒரு provision அப்புறம் நாங்க எது கொடுத்தோம்? அங்க தான கொடுத்தோம். இந்த RCM இருந்தா you have to go for compulsory registration we have told. So if you say I'm having only exempted supply, so I will not do this registration அப்படினு சொன்னா, then why for that particular compulsory provision is there? So the interpretation of the application of one section, if it is going to make another section redundant, then it should not be interpreted that way. Then that is where you have to go for harmonious construction. Okay, and so they have given a lot of past case laws and all. Finally they said you have to get registered. That's all. Okay, so this is what the advance ruling says. But now what this advance ruling says, you have to apply section 24 compulsory registration even if section 23 benefit is available for you. Okay, but actually speaking, notifications whatever we discussed, I'll show you one of the notifications. This interstate supply of services. We said interstate supply nale it is compulsory registration. But then they brought in an amendment stating if it is interstate supply of services, then there is no need for compulsory registration. Interstate supply is made compulsory by way of section 24. Okay. But the notification which was issued for giving an exemption for this interstate supply of services, if you go through this notification, it starts with, and underline panna word matti if you read, in exercise of powers conferred by section 23, okay, which is exemption section. So exemption section they are drawing power to give an exemption for this intrastate supply of service as against what is defined in section 24. The notification is very clear in communicating that they can draw power from section 23 to give an exemption for section 24. Then why can't I say that 23 is overriding 24? This is only an example. Provisions wherever there is an exemption given for compulsory registrations, all these notifications have drawn power only from section 23. Okay, so which means there is an apparent communication, looks like as if 23 is overriding 24. Okay, but the advanced ruling says no, 24 will override 23. Okay, now the next point, if you see, we were also talking about this principal agent transaction, right? So if you look into this principal agent transaction, what happens is, there is a circular. Initially there was no clarity on how this principal agent transaction works, who is liable, how it has to be taxed and all that. Then there was a circular where they have given neatly with some examples. 4 examples they would have given. Okay, the point is very simple. So if if it's a principal, you would have covered it as part of your morning schedule, right? Schedule 1. Deemed supply, one of the point is principal agent relationship. If there is a principal agent relationship, then even if the supply is made without consideration also, it is taxable. Okay. Now the question is how this schedule 1 has to be applied, when it has to be applied. That is what is the question. Okay. Wherein the circular beautifully explains to say that, see, basically depending upon whether the agent is giving this particular supply of goods or services on behalf of that principal, or he is doing it in his own individual capacity. Okay, let's take an example. I am an agent. Okay, as an agent of say some manufacturer. Okay, I am buying the goods from them and then I am selling it to the customer. Then I am doing it in my own individual capacity. So I have to pay the taxes. I have to do this. I have to get myself registered. All these things are there. Okay, but as an agent, my job is only to identify the customer. I'll show him, see, this is what is your customer, he is your customer. Okay. Then the principal will directly raise the invoice. He will be the supplier and he will be the customer. Okay. So the principal will directly raise the invoice on the customer and the collection will also directly go from the customer to the principal. Okay. Maybe for collection I also do some facilitation, but collection lo ownership then it's the del credit commission agent. Okay, so there is again a separate circular. Let's not get into those complications. But apparently, if the transaction continues to be between the principal and the end customer, then as an agent, my role is mere agency services, for which I may be getting a brokerage or commission or whatever it is. Okay, so in that case, this particular schedule 1 deemed supply doesn't apply. Okay, if I am doing it on behalf of him, but at the same time I am doing it as if it's in my own individual capacity, then the provision of schedule 1 will operate. Okay, only in that case that compulsory registration will also be applicable. Okay, so this has been explained in this particular circular. Okay, the circular goes on to say one more point. Where when they are explaining about this commission agent, they also touch upon this APMC. APMC is Agricultural Produce Marketing Committee. Okay, so basically this is like an agent. All these agricultural produce related agents who are connecting between the agriculturalist and the customer. Okay, so these are called as APMC. For them there is a regulatory mechanism on how it has to be done, what prices they have to buy, what prices they have to sell. All these is being managed by a particular act. APMC Act itself is there. Okay, so if the person is registered, if this agent has to do this service of APMC brokerage, then he has to get himself compulsorily registered under this APMC. Okay, if he is getting that registration, then the services whatever he is giving by way of his brokerage commission, whatever you call, that is also exempted. Basically the intention is very simple, and the product is agricultural product. If you start charging on his brokerage commission and all that, then what will happen? Everything will go and accumulate in your food product only, right? So they don't want to inflate the prices. So basically this is exempted. This APMC charges of this agent is exempted. Okay. Now they talk about this principal agent relationship in this particular circular, wherein they also refer one more point stating that even though in this case, even if it happens to be supplying not in his capacity as merely as an agent, but also supplies in his own capacity, wherein Schedule 1 attracts, even in that case also, he don't need to take a registration because his supply is exempted. That APMC, supply is exempted. So what does it mean? Section 24, which says compulsory registration for principal agent. Okay, but the circular says even if that is applicable, he will be paying taxes. Okay, the thing is he cannot pay tax because it's an exempted supply. So what happens? It comes into that exempted supply, and hence you don't need to take the registration. So the circular is also kind of directing us to move towards the direction that this section 23 overrides section 24. That is, your exemption overrides your compulsory registration. That is the kind of picture which is being thrown in this. Okay, so why I am giving all these references is basically to understand that there are multiple confusions around this particular section alone. If you are through in this, you will be clear on where to take a registration and where not to take a registration. See, this is not going to end with some small claims of having say some 10 lakhs, 20 lakhs alone. So it will happen even for big companies also, wherein their entire product is entire supply is exempted, but still should they register? So those kind of questions may come up. In fact, I had one interesting scenario. Let's take an example. A company is having intellectual property rights. IPR is there. Okay. So what happened? This company was going smoothly. The IPR was also there. One fine day, between the owners, there is a breakup. Okay. So now there is a huge fight on who owns this IPR. Okay. The company is continued by director A. Okay. The director B has already exited, but still there is a court litigation. They have already gone to the court, and there is a litigation on who owns this IPR. Until and otherwise it is sorted out on who is owning that IPR, it is not possible for both of them to carry on the business. Correct? So neither A nor B can do a business out of this IPR because right now they are not clear on to whom that IPR relates to. Okay. So this company continues to be run by A, director A. Correct? But the company has got zero turnover. Okay, company has got zero turnover because IPR is not yet clear, so this company cannot do any business at this point of time, zero turnover. But what happens? In order to continue with this litigation between A and B, he is involving an advocate and he is paying for his fees, legal fees. It attracts RCM. Now should he register or not? I am not even talking about a scenario of exempted supply, I am talking about zero supply, no supply at all. No supply, but RCM is there. The company has got zero revenue and it has got only one expenditure in the form of advocate fees. Whether they have to register or not. RCM is applicable, yes.
So RCM is compulsory.
So now we are taking a position that compulsory registration section 24 is overriding section 23, is it? Any thoughts, any other thoughts?
No, there is no express exemption given under 23 for this.
Meaning?
You have an exemption given under 23 for
agricultural produce or industrial. Yes, so that's exactly the point. The thing is, it doesn't even get covered under 23. Section 23 talks about where your entire supply is non-taxable or entire supply is exempted. But in your case, you don't even have a supply. So you don't come into section 23. So for you, the deciding criteria of whether you want registration or not is more based on section 22, which is purely about the threshold limit. If your threshold limit is within 20 lakhs, which is even zero is also within 20 lakhs, right? If your turnover is within 20 lakhs, then you have to still take a registration because you are having RCM. Because 24 overrides 22. 24 doesn't override or may not override 23. But it definitely overrides 22. Correct? So in your case, we can only apply 22. We cannot apply 23. We are not even into the ambit of 23. Just that we don't have a registration because our turnover is zero. That's about it. It's not that we are having an exempted supply or anything. Let's take simple example. Same example. the company has, apart from that, it has got some 1 lakh of exempted supply. Then they fit into this section 23. Correct? Same company, instead of having zero turnover, if it has got 1 lakh of non-taxable or exempted turnover, then what happens is, they are getting into the section 23. So section 23 or section 24, we can at least decide which one is overriding the other. There we may take a chance of either to go for registration or not go for registration.
Even then, if the company is paying advocate fees of another 1 lakh.
That's exactly where the whole confusion is, sir. If your entire supply is, non-taxable, if your entire supply is exempted, you have got a specific exemption for registration under section 23. But if you are having even a single RCM transaction, RCM invert transaction, you have to compulsorily register under section 24. Which one you have to go with? That is where the question is.
Look at the whole picture.
So, but then generally,
So whole picture, and then we have to make our own harmonious construction, and department will make its own harmonious construction.
the issue then again comes that generally we say that we should go by the act on rules instead of the circular or notification. So still there's the
Yeah, we are not going by the circular or notification.
The ambiguity is still
Correct. So the ambiguity still continues. That is what is the point. Okay. See, right now we are not actually making any conclusion. We are only giving more clarity on what kind of confusions could come up, so that we are clear when we take a decision on whether to register or not. Okay. So yeah, moving on. If the goods are sent, we are clear, right? Until then, until this is section 22, 23, 24, whatever confusions are there, with or without solution, we are clear, right? At least the confusion is clear. Fine, okay. So, goods sent outside the state for approval basis. The question is, if you are a casual taxable person, but if you are sending the goods just for an approval basis, you are not going to even make a sale. Okay, this happens especially like, jewelry, those kind of industry, where the jewels will move out of the state, and then they do not know whether it will get sold or not at that point of time. It may or may not get sold. Okay, so goods are sent on approval basis. So if it is sold only, you will know the actual transaction. So those kind of cases, the casual taxable person need not get registered. Okay. Is it mandatory for input service distributor to have a separate registration? That we saw, right? So if it is ISD, they have to mandatorily get the registration. In fact, if ISD has got some expenses for which the tax has to be paid on RCM basis, then they have to take a separate registration for payment of RCM. Okay. The next point is it mandatory for SEZ unit to have a separate GST registration? I have two offices. Okay. Both are in Chennai. One is in SEZ zone, the other one is in outside SEZ zone. Should I take two separate registration? As we stand today, yes. Initially, as per the original law, it's not needed. Okay, because the act doesn't say so, but the rule was containing this particular provision. Okay, so it was not very clear. But in the CGST Amendment Act 2018, which was effective from 1st February 2019, they made it clear that SEZ has to take a separate registration. Okay. The next question is, if there are two SEZ units in Chennai, two different SEZ units, say for example one in Sriperumbudur, the other one in some other place. Okay, MEPS. Okay, so I've got two SEZ unit. Or see within the same SEZ I've got two separate building, two separate property. So should I take separate registration or a single registration? Actually the law doesn't mandate to take separate registration. By reading of the provision, it doesn't specifically say that you have to take separate registration. But most of the professionals, they only advise to go for separate registration. In fact, some also make an interpretation that you have to take two separate registration. But I don't know about the interpretation. But generally, from an advisory point of view, we suggest to go for separate registration in order to avoid confusion, and also in order to avoid, if at all there is any movement of goods between these two, then the inward and outward movement wherein the SEZ officer also approves, all these things are very clear. Okay. So it's advisable to go for two separate registration, but apparently the law is not very particular that you have to go for two separate registrations. Okay. So the next one is effective date of registration. What is the effective date of registration? Meaning the date on which you are liable to register, what it is. Okay. So if the application is submitted within 30 days from the date on which you become liable for registration, okay, then the effective date of registration, other than registration certificate, we would have got in one particular date, but that need not be the date of registration. The date of registration can even be a prior date. Okay, so if you look into some of the registration certificates, you will come to know. Some cases, the date of certificate and the effective date of registration both will be the same. Some cases it will be different also. That's what I am trying to say now. So, if the application is submitted within 30 days from the date on which the person is liable for registration under GST, then it is the date on which the person is liable for registration. Say for example, today is 7th January. So if I make the application within say 6th of February, if today my threshold crosses 20 lakhs and then I make the application within 6th of February, then I will be granted with a certificate in which the effective date of registration will be 6th January. Because while making the registration application I have to enter, okay, what is the date from which I am liable to pay the taxes, from which I have become liable under GST. So that date will be 6th January. If I enter that, I will get the certificate in that date. Okay. Provided it is within 30 days. Okay. If I make the application say on 10th of February, wherein I state that because I am liable for registration, I am taking this registration, and the date from which I have become liable is 6th of January, then when my certificate comes, the effective date of registration will be only the date on which the date on which the registration is granted. Say for example, from today, effective today I have become liable, but I have made the application only on 10th of February, and then by the time I have got the approval, it is say 20th of February. Okay, my registration certificate will contain only 20th February. If I make the application within 30 days, then I will get the certificate with the date on which I am liable to be registered. What is the impact of it? Why are we discussing this? Sorry? Exactly. So to avail ITC, that is the reason. So you can start availing ITC from the date of your effective date of registration. So which means from today I can start availing my ITC, provided I make the application within the 30 days. Okay. So if I don't do it, then I cannot avail. That's the problem. So another important advance ruling is ITC before the effective date of GST registration cannot be applied, cannot be claimed. This is what we discussed now. If there is an ITC which is before the effective date of GST registration, then that component of this ITC cannot be applied. Okay. But at a broad level, if there is a new registration, that new registration is properly taken on a timely basis, then in fact for whatever input lying in your hand as at the time of registration, you can avail credit on those input. Okay, many have to start with my production. So I have purchased some raw material even before I have got my registration, but I am liable to registration only at that point of time. So whenever I am getting the registration certificate, at that point of time, whatever stock that I am having in hand, the input that I am having in hand, on that I can avail the ITC. But remember, that's only on the input, not on input services, not on capital goods. Yes, sir.
What in cases of voluntary registration?
No, if it's voluntary registration, again on the date of registration, whatever input that you have got, on that you can avail the credit. But everywhere it's only the input. On the capital goods and services, you cannot avail the credit. See, why I am saying is because if there is a company who is going to set up a new business, obviously there will be a lot of plant and machinery related or capital goods related input that they may want to buy, but they will actually not have any revenue at all. Okay, so the moment you make you have decided to go for a registration, a GST registration, you can start procuring your raw material, because at the time when you get the registration, whatever input that you have, on that you can avail the ITC. But you have to specifically tell them not to buy any capital goods, because if they buy any capital goods before they get the registration, they cannot take ITC on the capital goods which is lying in hand at the time of registration. We have to be very, very careful on this. Okay.
The issues they come only after.
That is definitely an answer. எல்லாம் வாங்கி முடிச்சு கடைசியில் தான் they'll come to us. இதை எப்படியாவது எடுக்கலாம், how to do it. Okay. So next thing is multiple registration. So initially, so basically this multiple registration with same PAN, okay, within the same state. It will be based on place of business or it will be based on business vertical. Place of business, meaning multiple locations if you have, you can get multiple registration, or if you have multiple type of business vertical, different products or different altogether different type of business if you have, in that case whether you can go for multiple registration. That is how the law was actually. When the law was enacted, it was based on business vertical. So what happens in the same premises, if I am running two different business, I can go for two different registration. Okay, so that option was given. It's not mandatory, but that option was given. Okay, then they have changed it to say that this multiple registration is possible only if there is multiple place of business. Okay, so until 31st January 2019, that is before the Amendment Act was enacted, until then it was actually based on the place of business. Sorry, it's based on the business vertical. Okay, and in the amendment they have changed everything to make it based on the place of business. Okay, so same business vertical, if you are having two separate locations, if you want to take two registrations, you can do it. But same location, if you have two verticals, you cannot take it.
No, but if you do the same business at different locations, it is only optional, no?
It's optional. It's not mandatory. You have the option of doing it. Okay. So, but if you have to do this multiple registration, if you have to take, there are certain conditions which is there. Condition number 1 is there should be more than one place of business. That's what, as I told you, you cannot have two different registrations for the same PAN in the same place. Okay. The next thing is, if it's a combination of this one in composition scheme, other non-composition scheme for the same PAN, not possible. Composition scheme or not composition scheme is only based on PAN. If a PAN is registered under composition scheme in one place, he has to get registered only as composition scheme in other places also. Okay. The moment he gets into regular registration in one place, then all his composition scheme gets cancelled and it gets converted to regular registration. Okay. The next one is cross charging is important, meaning if you have taken two separate registration, then whatever transaction that happens, be it supply of goods or supply of services, for all that there has to be an invoice, and that the tax liability also has to be paid in GST 3B. The recipient location can take the input tax credit. Okay, same as how it works in the distinct person schedule 1. The next one, yes sir.
The place of business, whether it is within the same city, example, branch, two branches, but one registration would suffice?
Yeah, that is sufficient, sir. It's only an option. See, the thing is, you have an option to take if you want. But as far as this business vertical is concerned, you don't even have an option. Unless and otherwise, you have two different places. Okay. Application and other registration procedures has to be separately followed. Now, I have a simple example to explain this. Let's see the situation 1, wherein business 1 is IT software services, and then business 2 is employee training services. There are two type of business. Both are in the common office. Okay. So, until, that is pre-amendment, they had the option of going for separate registration. It was possible. But post-amendment, it is not possible. Because both are located in the common office. It's not possible to take two separate registration. Okay, under the same PAN. Now, scenario 2 is, first business is hotel, the second business is also hotel, but these two are located in two separate places. Even say two, pakkathula rendu premises na kuda, it's okay. It's only based on your ward number allocation, property tax, how it is and all that, right? So it should be in two different addresses. Are you having two different addresses for the two business? Then you have the option. Earlier you didn't have the option of going for multiple registration. Now you have the option of going for multiple registration. Okay. But again, as I said, it's only optional. It's not mandatory that you have to. As far as GST law is concerned, one state, one registration is sufficient. Only in the case of SEZ, you have to go for an additional registration. Okay. So whether you want to go for additional registration because you have one place in Madurai, one place in Trichy, one in Chennai, you want to keep all the three in a single registration, it's your wish. You want to keep all the three in separate registration, that's again your wish. There is no option. There is no problem at all. But same PAN, same location, multiple business, you cannot take multiple registration. Okay. So another thing is we have this modern day concept of space sharing, right? So wherein the space sharing arrangement will happen. So in that case, even though all these people, doing multiple business or in a single premises, they can still go for multiple registration. because it is various PAN. It's PAN based registration, right? So if there is multiple PAN, then every single PAN holder can apply for a separate registration. Provided they need to have all these, document, lease agreement should be there, sublease agreement should be there, and that, EB water tax document should be there, all these things will be there. That's about it. Okay. So, next interesting slide. Can someone guess what this is? Any guesses? Who said that? Super sir. So this is what is voluntary registration all about. So what does it indicate? You cannot get any benefit under the Act by saying that I only voluntarily registered. Once, see, you had all the option of whether you want to get inside or not get inside. But the moment you get inside, you are treated as a registered person and the entire Act is just applicable as if you had the liability to register. Okay, so there is no exemption or no benefit just because you are a voluntary registered person. Okay, so you have to take your own independent decision. See, but this picture was more to grab the attention, that's about it. It's not how it happens practically. Yes, sir.
This can be adapted to GSTR 9 also.
The GSTR 9 is not like that. I'll tell you why. Okay, GSTR 9 is a different. You can still make benefit out of it. Okay, GSTR 9 suppose a company has not taken ITC properly in 17-18. They would have taken a lot of ITC in the subsequent year. Okay, you file your GSTR 9, you have the benefit to say that see, my 18-19 credit is actually relating to 17-18. You don't file your 9, tomorrow if there is a scrutiny, the officer will straight away say, see, you didn't file your GSTR 9 also. How do you substantiate that your 18-19 credit is relating to 17-18? You are eligible for credit only to the extent of what you have availed in 17-18. Right? So that possibility is that. Okay. So this is that, I don't know how, everybody is convenient with Tamil. You know that Sonda Selavala Sunya Vachikiradu, that is what is this. But on a real sense, actually voluntary registration has got a lot of benefit. Many companies go for voluntary registration because, see, it gives a corporate identity. Right? So even if your turnover has not crossed 20 lakhs, you have a GST registration, you project your customer as if you have already crossed the 20 lakhs, right? It helps the business practically. So some companies, they voluntarily go for registration, and again, some of the corporates, when you want to take some orders from the corporate, be it goods or even services, if you want to take orders from corporates, they are asking us to have the GST registration, right? So only when you have the GST registration, they respect you as a vendor. The moment you say that you don't have a GST registration, they are also having all their, internal KYC, right? So they filter out and they take vendors only those who are having registration. So because of all these reasons, companies are actually going for voluntary registration. They are not waiting for, crossing the threshold limit and all that. Okay. So this is the, flow chart giving the registration procedures and all that. I am skipping this slide for the sake of time because we have very limited time for other topics. So the other one is the GST registration process. So basically the online process wherein once you make the application, within 3 days, if there is no acknowledgement or if there is no show cause notice or nothing, then it is deemed to have been registered. Okay. So 90% of the cases, either you will get the approval or you will get the show cause notice. Okay. So if there is a show cause notice, you are supposed to respond within 7 days. Then again within 7 days, they have to take a decision whether to give the registration or not. Okay. And then earlier this was a painful exercise. Okay, to get a GST registration, it asks for bank account. To get a bank account, they'll ask for GST registration. How many of you have faced it? I faced it for many companies. Now they are not asking because GST law they made it clear. You can go ahead with the registration, but then once you get into your portal login, first time it will ask you for bank account. Only after you update your bank account details, you can proceed with the other things. So you can go for GST registration and then give it to your banker and then get the bank account opened and then you can come back here. Okay. But actually bankers need not insist on this GST registration. But some private banks, they still insist. Some banks, they understand that you are a small player, you don't need it. Yes, sir.
No, banks, without the GST number, they open the account. Subsequently, you have to give the GST number and then they will activate the account.
Yeah, but the thing is, first of all, why do they even need to insist on GST registration? Right? I am a small player. I don't think first year I am going to cross 20 lakhs. So should I not open my current account? So some banks they are actually understanding. Some banks only they are not understanding. Okay, so the next one is, again the registration process I'm skipping. We all know this GST registration number. Again, Aadhaar, this is the latest update in the recent, finance budget presented by Nirmala Sitharaman, wherein they have, mentioned that it's going to be Aadhaar based. Aadhaar is going to be given more importance, but until now, we have not yet got any changes on this. They were saying that it's expected from Jan 2020, but so far nothing has been given with respect to Aadhaar. But at an act level and an amendment level, everything has been changed to make sure that Aadhaar is being mandated. Okay. But 1st January 2020, okay, the finance bill has got enacted. So which means in the act, Aadhaar number is already being made mandatory. Okay. But only thing is at a procedure level, we have to see how they are going to bring it in the portal. Okay. So time of registration, as we discussed, it's within 30 days. But if it's a casual or non-taxable person, 5 days before commencement of business itself, they have to register and they have to make a pre-deposit. They have to estimate the tax liability and they have to make a pre-deposit. Okay. Suo motu registration. So that is when, as part of any inspection, search, seizure or anything, the department goes for a suo motu registration and then all your provision becomes applicable. And then physical verification of business premises, this option is there. After registration, the department person can come and verify, but not everybody is actually exercising this option. And then casual and non-taxable resident person, for them the 90 days is the time limit, and before expiry of 90 days, if you expect that you require an additional time, then you have to make an extension application. Once the application is through, then the time gets extended. Okay. And then cancellation and suspension. So cancellation, earlier there was only cancellation provision. Then the suspension provision was also introduced. Okay, meaning the moment you apply for cancellation, it is deemed to have been suspended. That is what it is. Okay. So if the cancellation is being applied for within 30 days, it has to be closed. Okay. Now the biggest question is, I have applied for cancellation, but still should I actually continue to pay my taxes or continue to file my return, do all these things? Even though I have applied for cancellation, it was not clear earlier. Then in the Amendment Act, they have brought a concept of suspension, meaning the moment you have applied for cancellation, it means you have suspended. They have suspended your GST registration, which means you are not supposed to issue tax invoice anymore. You cannot take input tax credit anymore. You cannot collect taxes anymore. You need not file your return also at the time of suspension. Okay. So I am skipping all these slides. So applied for cancellation, it is deemed to have been suspended. So first to 10, revocation of cancellation. Yes, sir.
Regarding the cancellation, nowadays if you are not filing the return for 3 months and
yes, suo motu cancellation.
After that, after one time we are filing the return, it has been activated. What about the period of during the period of cancellation?
You continue to be a registered person. So that is what I actually have in this slide. Issuance of tax invoice, section 31 and section 40 continues to be applicable. Okay. So what this section 31 states is that if you are making an application for registration, okay, at that time whatever supply that you are making, so let's take in that example 7th January is my effective date of application, right? Today I am liable for registration, but I get my registration approved say on 10th of February because I am making an application on 5th of February. Okay. So on 10th February, what I have to do is from 7th January to 10th February, whatever transaction I have made for all those customers, I have to issue a tax invoice now, collect the tax and then file it in my first return. Pay the taxes in my first return. Okay. So similarly, if you go for that suspension and then revocation kind of activity, so that intermittent period also, whatever supply that you have made, there also you are liable to collect the taxes and then remit it in the next return that you are filing. So revocation of cancellation, basically it has to be applied within 30 days. Recently, I was talking to Joint Commissioner. So he was, madam, portal overrules everything. நாங்கள் ஒன்று செய்யணும்னு நினச்சா போட்டு ஒன்று செய்யுது அப்படின்னாரு. ஏன் சார் நீங்களும் ஏன் இப்படி புலம்புறீங்க? வாட் ஹேப்பன் அப்படின்னா 30 டேஸ்க்குள்ளே தானே சார் ரிவகேஷன் பண்ணோன்னா 30 டேஸ்க்குள்ளே தானே டைம் லைன். அப்போ போர்ட்டல் வந்து இஃப் somebody has got cancelled already, if they are making a revocation application after 30 days, it should not allow. Correct? It is, the portal is allowing the applicant to make a revocation application. Okay. Then which means our officers has to manually check. If my officer fails to check that and if he is granting revocation, then I will be into trouble. Correct? So why I am giving you this point is basically revocation has to be applied within 30 days. So the portal may permit you to apply beyond that, But these days the department is also very vigilant to see to it that if there is an application after 30 days, they are actually rejecting it. And then accounts and records prescribed, I am not going to spend much of time in this. But these are all the accounts to be maintained. Basically your input, credit note, debit note, and then your tax invoices, all these has to be maintained. From register perspective, supplier, customer and the stock register, these three are very critical, wherein you are supposed to maintain the name, address and other details of the customers and the suppliers. Okay. And then a special provision has been given for this documents and records and how it has to be maintained for principal agent, that kind of an agent. And then manufacturer, if you are a manufacturer, you are additionally supposed to maintain the manufacturing data related details. And then works contractor, again the contract details also they are supposed to maintain. And then clearing and forward agency, they are supposed to maintain certain additional information. Auctioneer, and then godown or transportation. Okay, this godown or transportation alone, I will tell you what it is. What happens is if you are a GTA, you don't need to take a registration. Okay, if you are actually running a godown, okay, and let's take your actual revenue is only within 20 lakhs, so you don't need to take a registration. Okay, even in that case you have to maintain records. So which means somebody who is not even part of GST law, for them also the law is applicable. Okay, the person is not registered, the godown owner is not registered because it doesn't cross 20 lakhs threshold limit. Okay, his monthly rental and his basically annual rental is not crossing 20 lakhs. Okay, so he is not registered. Still he is supposed to maintain some of the records prescribed under section 32 subsection 2. That is basically on the lorry movement, the transporter movement, all these things they are supposed to maintain. And then section 35(3) GST audit, I am not getting much into it. I think GST audit as a separate area it has to be dealt with. So basically we all know that it is only when the turnover crosses 2 crore, then it's PAN based. Once it crosses 2 crore for a particular PAN, all the registrations GST audit is applicable. And then the reconciliation statement has to be given in GSTR 9C, and we are waiting forever for the form to come into a shape. And I think yesterday they have come up with the version 1.6. We have to see whether that version 1.6 is working or not. Version 1.5 was also not working. 1.6, if it works, then we should be able to file. Okay. So the impact of this n number of extensions which we have got in this annual return and audit is this: retention of accounts and issuance of show cause notice. Okay, so for retention of accounts, the period for which you are supposed to retain the accounts is 6 years, that is 72 months. Okay, from due date of filing annual return, not from the end of the financial year. So which means right now we have got 31st January 2020 as due date for furnishing for 17-18. Okay, so on the 31st January 2020 learn the 6 years, which is 31st January 2026. Until then you are supposed to retain your books of accounts. Okay. Then issuance of show cause notice, section 73 and 74. 73 in the case of non-fraud cases. 74 is where you have fraud, willful misrepresentations. So all these cases is section 74. Okay. So in those cases, basically for the department to issue a show cause notice, they have got 3 years or 5 years is the time limit. Okay. Again, that is also from the due date of filing annual return. So which means for the 17-18 audit that we are doing currently in January 2020 for 17-18, we can expect show cause notice from the department any time before 31st January 2025. So now we have to decide how robust our documentation should be for GST audits. Okay. So moving on to e-waybill. E-waybill basically it is only when 50,000 is the threshold limit for interstate. 1 lakh is prescribed for only interstate in Tamil Nadu. Otherwise it's 50,000 for interstate. So I don't want to get into who has to do e-waybill, that this and all. There is an FAQ, beautiful FAQ which will address most of your queries that you will come across. All the practical issues are addressed in it. That's a 28 pages FAQ which the department has issued for e-waybill. So any doubts is there, I would suggest you to first refer to that. Okay. So apart from that, I am not getting into who has to do e-waybill, who need not do all these things. I am directly getting into 3 critical issues in this e-waybill. A very recent one. Okay. One is blocking and unblocking of e-waybill. How many of your clients have experienced suddenly e-waybill got blocked on 1st December 2019? Nobody. Okay, good. Fine. That's a good indication, because if someone has not filed return for 2 consecutive months, then e-way bill gets blocked. So how does it work is based on the whatever return that is due for filing. Meaning, as we speak today, 7th January, what is the return that is due? November and December. So December also should be included. Due date is 20th. Due date meaning the last date. But the due is on 1st itself. Correct? You are due to file your December month return on 1st January itself. The last date of the due is only the 20th January. Okay. So as we stand today, we can keep open only November and December. If any of your client is having GSTR 3B unfiled for October, then for them e-way bill is blocked, which means they also cannot raise e-way bill. Somebody else also cannot raise e-way bill with that GST number. Yes, sir. Okay. So somebody else also cannot raise e-way bill with that GST registration number. Okay. So this is blocking. How does it get unblocked? The only way is you have to file your return. Okay. So after filing your return, next day it gets automatically opened. If you want immediately, if you want to open your e-way bill, there is again an option which is given. Okay. Wherein you have to go to the e-way bill, mention your GST registration number, and then if you have to give update, it will update. It will automatically link with your GST portal and see to it whether your 2 months, it's not more than 2 months due, then it will open up the e-way bill. Okay. So this is one latest update on e-way bill. I also want to just brief you on 2 case laws in this e-way bill. Okay. One is confiscation. And this is the biggest issue. Okay. So there is one High Court decision, Gujarat High Court decision. Interestingly, Gujarat High Court gives a lot of good verdicts. Okay. Whatever recent good verdicts that we have come across, many are from actually Gujarat. Okay. So Gujarat High Court has given a recent decision, that is, a person has actually declared some transactions in his e-way bill. Okay. And then he has not paid the taxes in GSTR 3B. Okay. For which they confiscated the goods and the vehicle. The High Court said this confiscation is invalid, because see, when you have to look at it for confiscation, if you are in transit, you are asking for something, this particular movement of goods carried a proper e-way bill. There was a proper tax invoice. It also carried a proper e-way bill. Correct? Then they are not supposed to stop the vehicle. Correct? So if the tax is not paid in 3B, there is another mechanism in which you are supposed to collect it. This is not the mechanism in which you are supposed to try to collect the taxes. Okay. So the confiscation of goods is not possible merely because somebody has not filed as GSTR 1 or 3B. Okay. So the other interesting case law is mere e-way bill generation shall not be the basis to treat the reflected turnover as supply. So what happened in this case is the company has generated 5 e-way bill for 1 invoice. Because of some portal issue or somebody has made it wrongly, by mistake they have created 5 times, and then finally there was only 1 invoice. That 1 invoice was properly sent along with the proper e-way bill. Okay. And then that 1 invoice is only got reflected in GSTR1, for which only they have made the tax payment in 3B. Okay. Just because 4 additional wrong e-way bills are generated in the e-way bill portal doesn't mean you can ask the assessee to pay the taxes on it. So this is one of the recent ruling which has come up. Okay. So this is on e-way bill. Okay, the other interesting ruling is AAR cannot decide on requirement of e-way bill for consignment pertaining to multiple invoices. This is an Tamil Nadu advance ruling, wherein they have approached to ask, I have individual multiple consignments, everything has got lesser value, but combinedly it is exceeding that 1 lakh. Should I raise an e-way bill or not? For which they have gone to the advance ruling, and the advance ruling authority said this is not our area. We cannot look into this e-way bill related matters. So basically the application itself got rejected. Okay. So some recent updates on e-way bill is this. Another 5 minutes, 10 minutes. Okay. On job work related provisions. Okay. So job work is basically where job work is clearly defined in the Act. Okay. So job work means any treatment or process undertaken by a person on goods belonging to another person, another registered person. Okay. And the expression job worker shall be construed accordingly. Okay. So this is the definition of job work. So we are clear, right, on what is this job work. But most of the time, what we fail to do is, we are having lot of transactions around us in the companies that we see where they are actually doing job work. But definitely I'm sure the company is not realizing that they are into job work. Okay, certain industries they are aware, like automobile industry, textile industry, where this job work is very huge, they are aware of. Okay, let's take a very simple example where printing of a mug. Okay, I have a coffee mug, I give it to someone, I get it printed and then I get it back. This is job work, right? Any kind of printing, wherever the material is supplied by me. I supply the material, I ask someone to print it and give it back to me. That's a job work. Correct? So anything and everything, say food processing. Okay, so I have purchased some, fresh vegetables and fruits, and then I give it to a person who does this, cleaning or whatever you call the pesticide, name it whatever you want. Okay, but basically for extension of shelf life, right? So that's a process. Okay, there are a lot of times there is a process which is undertaken by a person on the goods belonging to another person. And to look at it that way, there are a lot of scenarios where the companies send their goods to someone else to get a particular process done and then they will get it back. Okay, so we have to be very, very careful in identifying first of all the job work. Okay, unless we tell them what you are doing is job work, they themselves would not have realized that it is job work. Because the industry parlance for it will not be job work. It's like printing the go. So they don't realize that this activity is job work. So it's our responsibility to tell them that see the activity what you are doing is in the nature of job work and hence you have to do all these compliances. Okay. So what is the compliance? That's what we are going to see now. First of all, the principal can send this input or capital goods, whatever it is. The principal can send the material without payment of tax. No need to pay the tax. So I am the principal. So there is a person who is a job worker. So I can send my goods to the job worker, not in invoice, but through a DC, delivery challan, okay? And then I need not pay tax on it without payment of tax, okay? And then I am supposed to bring back that material within 1 year if the goods what I have sent is in the nature of input, and within 3 years if the goods is in the nature of capital goods. Okay, job work is something very, very common in most of the automobile and then your machinery related industries, heavy machinery industries, textile industries. Okay, so very, very important, when they are sending the material, they are supposed to send it properly with the DC. Point number 1. இது எல்லாத்துலயும் அவங்க கரெக்டா கம்ப்ளை பண்றது ஒண்ணுதான் பண்ணுவாங்க. Without payment of tax, that alone they will do properly. Other things they may not be complaining. That's where we have to actually exercise proper vigilance. Okay, so input within 1 year, the input has to come back within 1 year. If it is capital goods, it is supposed to come back within 3 years. Okay, this 1 year or 3 year is from the date on which I have sent the goods. Okay, suppose if I am not sending the goods, my supplier is directly sending the goods to this job worker, then that 1 year starts from the date on which he has received the goods. Okay, so this is the time limit, and there is only one exception for this capital goods, that is your molds, dies, jigs, fixtures. Basically எல்லாமே வந்து be it any of these industries what I was mainly referring to as automobile or textile industries, all these kind of product will be almost permanently there with the job worker. Okay, it's for the dimension of the product or the colors or the fabric, whatever. Okay, so it will be almost with them. It's not possible for them to return it back within 3 years. That's not for which it is intended to be. Okay, so it again, for them to get this, for that particular job worker to get this kind of specification itself, there will be lot of screening by the OEM. That's how it operates. Okay, so for that there is no 1 year or 3 year criteria is not applicable. That's only for molds and dies, jigs and fixtures and tools. Okay, and any other cases it is supposed to come back within 1 year or 3 years as the time limit is. Then the next point is, for direct supply of goods from the place of job worker, principal declares the place of business of the job worker as his additional place of business. So what happens, I have a job worker, okay, and he is done with this processing. Now I am supposed to sell this product. Should I necessarily bring it back to my place and then only I should sell it? Not necessary. From there also I can directly sell it. In fact, from there I can even directly export it also. absolutely no trouble. Okay, but if I am doing that, what happens is, if he is a registered person or unregistered person, if he is a registered person, then I don't have an issue. If he is an unregistered person, then his place should be registered as additional place of business in my GST registration, because he is an unregistered person, so his place is not recorded anywhere, but he is the one who is having the supply which is supposed to be supplied to the customer with tax on my behalf. It is a taxable supply. Invoice will be given by me to the customer. The goods will move from the job worker to the customer directly, but this place is not recorded anywhere in the GST records, and hence if he is unregistered, in my registration certificate I should include his address also as additional place of business. Okay, that is one important criteria. And then when it comes to job work, whose responsibility it is? பொருள் நம்மளுது, அதனால அக்கவுண்ட்ஸும் நம்மளுது. Let's keep it simple. Okay, the goods belongs to us. It is our property which is in his hand. So it's my responsibility to ensure that I properly account for the movement of goods from me to the job worker, from job worker to me, from job worker to another job worker, so job worker to customer. So all movement of goods, everything, the accounts should be properly kept in record only by the principal. This is important point. Okay. Another thing is, for all these e-payable, ITC 04 has to be filed. There is a form called ITC 04. It is a quarterly filing of form. Okay. So it should be filed within 25th of the subsequent month. Okay. So this ITC 04 has to be filed. Very, very importantly, this ITC 04, they have given a waiver from July 2017 to March 2019. Anybody here has filed ITC 04? I must say you are all fortunate. First of all, the form doesn't support. Okay, if you are cribbing about GSTR1, you should really try to file ITC 04, and then you will feel that GSTR1 is heaven. Okay, the form is exclusively, I mean it's extremely difficult in terms of how it sustains in the portal. That's about it. Okay, issue number 1. In spite of all that, we try to file all these forms. That's for that. The due date was 31st August 2019. They have given extension. Ideally for March it should have been 25th of January, correct? Then government gave a one-time extension. That is starting from July 2017 until March 2019. Whatever job work related ITC 04 that you have not filed so far, everything else you file it now. The last date for it is 31st August 2019. This is what they fixed it. Okay. So 31st August was soon nearing. That 31st August was also due date for GST audit at that point of time. Okay. So ITC 04 has to be filed, and we were equally trying for this ITC 04 to be filed within 31st August. Okay. 31st August 2019 evening 5:21 PM. Government made a Twitter announcement first, stating that this 2 years complete waiver of all the ITC 04 forms. Okay. So I mean, you have to really look at the people who are struggling to file. Only then we'll empathize on how much of efforts they would have put in the portal, and then government comes out and says in the last date that it's complete waiver. It's okay even if you don't file the form. Okay, so that's how this ITC 04. But as we stand now, 1920, yes, you have to file the form on a quarterly basis. Okay.
What did you bill the client?
Okay, I'll take it offline. So the next thing is, I think we covered all these points. Only thing is, extension of time was not earlier possible. This 1 year, 3 years time limit, it was not. There was no extension available initially. Then in the Amendment Act, they have given powers to the commissioner. So if you want extension of time limit, you have to specifically write to the commissioner, and then the commissioner can give additional extension of 1 year or 2 years. 1 year in the case of input, and another 2 years in the case of capital goods. That extension commissioner will be able to give. Input credit is what is very important. So if the principal, if the input, the goods moves from the principal to the job worker, still the ITC can be availed by the principal. My supplier directly supplies to the job worker, but still the goods are lying with him only in my capacity. It is as if I have purchased the material and it is lying with me. Okay. He is holding the goods only on my behalf. So I am only eligible to claim the ITC. Okay. So this is very, very important point. And what happens if it doesn't get returned within that 1 year or 3 years? Then I have to treat that movement of of goods. So today, 7th January 2020, I am sending some goods as a principal to my job worker. I am supposed to get it back within 7th January 2021. Correct? If it doesn't come, it means it is a taxable supply on 7th January 2020. Meaning you have to pay 1 year interest. Okay, in the case of capital goods, if it doesn't come back within 3 years, you have to pay 3 years interest. Okay, so that is the impact of it. So directly it can be supplied and the credit also can be taken. And treatment of scrap is very important. If there is any scrap generated by the job worker and if it has to be sold, the job worker can, it can be sold from the premises of the job worker, provided either the job worker is registered, or if the job worker is not registered, then I have to sell it in my capacity. Basically, that scrap should be made as a taxable supply. That's it. Okay. The job worker may be unregistered job worker, but the scrap is generated out of my product and I am a registered person. So that scrap should suffer tax. Either he can raise the invoice because he is a registered person, if he is a registered person, or if he is an unregistered person, the tax invoice should go only from me and not from the job worker, so that I can levy the taxes. Okay, so this is an important point. And delivery challan, I don't want to get into it. Amortization of capital goods issued free of cost. In the case of this molds and dies, jigs and fixtures, whatever we saw, the industry practice in certain industries is in such a way that you send the goods and it will never come back. Meaning it will get utilized over a period of time. There is no point for you to even get it back. Not only jigs and dies, even for that matter many capital goods. A couple of capital goods, it has the nature wherein the goods will never come back. Okay, but it's okay, still the principal can go ahead and claim the ITC. There is no issues on that. Okay. So the last one important point is inclusion or exclusion of the free issued material. Okay. So as a principal, I am sending the goods to the job worker. I give it for free. I cannot charge him, right? I am only sending my goods for him to do the work. Okay. If that is the case, no problem. Okay. The issue arises wherein the job worker procures the goods. If say for example, I send some raw material, apart from that he is also supposed to add some additional raw material, say raw material or even consumables for that matter. Okay, it's not that his work is going to be only services, but as part of that services he may also add some incidental goods on it to bring the finished product which is needed. Okay, so in this case what happens is, this additional goods whatever is needed, that if the job worker is directly procuring in his own capacity, in his own account, and then if he is adding it to the goods, no problem. Then what will happen? Obviously when he is charging to me for the job work charges, he will include that raw material cost also. Correct? But if I am supplying it to him for free of cost, or rather if he is, if the responsibility to procure is actually on me, as per the terms, the responsibility to procure is actually on me, but on my behalf the job worker has procured. Then what happens? When the goods are sent back, the value should be inclusive of this particular value. You'll probably come across this more, there is a session on valuation, right? So as part of it, there is a valuation provision, section 15, subsection 2. In that, there is a specific point on how this has to be dealt with in job worker transaction. Okay, so when you get into the job worker valuation, if there is a additional free supply of goods that is added in the value added in the product, then how it has to be added in the valuation. So that's covered there. So I'm just covering the same point here again. Okay, so that's on job work. Any doubts or anything so far on job work, e-label, registration?
So movement of job work from one job.
I'm done actually. Yes sir.
From one job worker to another, that how is
So same DC has to be raised.
the principle to control?
Yeah, the principle. So basically, in fact, even in that ITC04 form, there are 3 details which has to be given. Okay. Point number 1 is movement of goods from principal to the job worker. Second thing is job worker to job worker. Third thing is job worker to the principal. Okay. So this movement of goods from job worker to job worker can happen, in which case there is no cost or anything attached to the product. Correct? So the job worker's service charges he is going to charge it on me, And this movement will not happen with invoice, rather it will happen with the delivery challan.
Suppose job worker himself gives subcontract without knowing, the principal may not be knowing.
Ideally, அது மாதிரி நடக்காது சார். I mean, generally, if that is happening, it's okay. That can happen. It's not an issue. It's like he is giving it for sub jobber kind of, correct? So அப்படி இருந்தா there is no issue. But actually, the problem is, if these two people are located in the same place, there is no issue. If there is movement of goods, then the goods which is moving is whose goods? My goods, correct? So if there is any checking in between, and if both these guys are unregistered, okay, so who is liable to generate the e-waybill? I am supposed to generate the e-waybill, correct? So that is where I will have a trouble. The problem is more from e-waybill perspective.
Whether the first job worker can generate e-waybill.
They can generate, sir, provided they are registered. They can generate. In fact, it's not necessary that the supplier has to generate or recipient has to generate. Anybody can generate. In fact, transporter can also generate, correct?
In this case, first job worker is not the owner of the product.
He can still generate the e-waybill.
Okay, generate e-waybill. Whether he has to raise invoice.
No. He need not raise the invoice.
He deemed this a concept something like that.
He should not raise invoice. He has to raise only delivery challan. So when you generate the e-waybill, it will ask you what is the base document. It will also ask you, what is the category. There you have to give job work. So if you give that, then it will give the option that the document will be delivery challan. So in the e-waybill portal also this feature is there. So that is not an issue.
Ma'am, can we cancel the e-waybill post 72 hours?
Actually, there is no option to cancel e-waybill.
So if that transport is not going somehow, then what?
That's what is the case law also that we discussed now. So once you have generated, you don't have an option to cancel it. So that cancellation feature has to come. Else what happens is, in future there is going to be the GST or 1 versus e-waybill matching, right? So at that point of time it's going to be very cumbersome. Because you will raise an e-waybill expecting that the goods are going to move today. Okay, but for some or other reasons the goods have not even left your place itself. Okay, so what happens? Your e-waybill gets expired, and then you generate another new e-waybill. So it looks as if for the same invoice there are two e-waybill, but there is only one invoice, only one movement of goods. So that is an issue only.
Ma'am, there is this compulsory registration for interstate supply, right?
Yes.
If I do an export, is there any classification? Now, in the amendment, they have brought in that interstate supply of service, we don't need to get compulsory registration. So if I do export of service, I will get the 20 lakhs benefit, right?
Ideally you will not get, because if you see, first of all, export is you call it as interstate because as per GST law your export also gets into the interstate or intrastate. That is the classification. But still the problem is, even under RBI also you cannot bring the export proceeds without GST registration number. Point number 1. Okay, so your banker himself will not be able to give you the the foreign currency without you having GST registration. Okay, the second thing is, if you don't bring your money in foreign currency and if you bring it in INR, then it is not qualified as export itself. Then it takes the color of your domestic interstate supply, on which IGST is also leviable. So generally, people who are into export, be it goods or services, import goods or services, it's not advisable to go without registration.
So it is advisable to go with
Yes, mandatory registration.
And another thing with this e-commerce, suppose this, I understand with Flipkart and Amazon, but say for example I have a shop, a person is having a shop and he generates his own website, and in his website...
That's not e-commerce.
So that will not fall under the e-commerce.
That is not e-commerce. E-commerce is where you don't even own the product, you are only doing the e-commerce platform of somebody else goods or services. Say for example, Ola doesn't own any car, correct? Amazon doesn't own any goods on their own capacity. They are only giving the platform through which the e-commerce operation happens. Only that will only qualify as an e-commerce itself. I sell my own products in my own website is not e-commerce. Yes, sir.
Third party, basically third party.
Then you are an e-commerce operator. Instead of selling my own product, if I am selling, see again, if you are doing it, by way of some manual activity and all that, then it's not e-commerce operator. Okay, so it should be the activity itself should be driven by the e-commerce platform. That is what is importantly needed. Wherein the sale also happens online without the intervention of the supplier, and the payment also happens online. So all these can happen online. Like payment is not mandated to happen online, but that should be an option to make it online. So all these kind of features should be there for the kind of transaction to qualify as e-commerce operation. Maybe if you go through the definition of e-commerce in IGST law, you'll get more understanding of how it is framed.
One thing on this job work.
Yes.
Registration of the job workers premises as the principal place of business. It is only mandatory if the job worker by himself is not registered and he is sending the goods directly.
Exactly.
In case
if you are having 100 job workers, 100 of them are not registered, doesn't mean 100 addresses will be there in your registration certificate. Only if you are not getting back the goods from him, but you are directly doing export or directly selling it to your customer, then you have to cover his address in your registration. Otherwise, it's not. If he is separately registered also, you don't need to bring it. If he is unregistered and you are making a taxable supply from his premises,
right. Okay.
because from that premise taxable supply cannot happen because nobody is registered there. So you have to bring his address into your registration. That is the intention.
If we are taking the goods back to our warehouse for further processing, then no need to add the job workers location to our
No, then it's not needed. Only if you are supplying it, making a taxable supply from the job worker location, which is unregistered. Because from unregistered place, how there can be a taxable supply transaction? That cannot happen, right?
So in this case, no need to file that form 04 also.
Form 04, ITC 04 is an altogether different thing.
So
ITC 04 is to track all movements relating to job work, whether it is from principal to the job worker to another job worker, or job worker to the customer, or job worker to back to the principal. So any kind of movement that happens surrounding this job work transaction, all the movements should be tracked in this ITC 04.
So for example, under the factory, process 1 is done at own location. For process 2, we are sending to the job worker. So it is in the work in progress. So we can't value the product as such. Then it comes back to the factory for further processing. So in this case, how do we value that particular?
See, ideally there will be some valuation mechanism like based on the cost accumulated. Correct. So there will be some costing principle for the company, right? We cannot say I do not know the cost of what is this stage all about. The company has to maintain their own cost records. But ITC 04 is more to track the movement, and the the value is captured mainly from the perspective of if the goods are not returned, there should be a value at which it has to be taxed, right? Only for that perspective. In fact, in the delivery challan itself, we are supposed to mention what is the taxable value, rate of tax and the tax amount. So even though it's a delivery challan, there is a content of the delivery challan. So the content says that you have to include what is the name and address of the consignee, consignor, and then the taxable value, percentage, that is the rate of tax, tax amount, everything should be included. So it's almost similar to an invoice. So there itself you have to capture your value. The same is what you are going to reflect in your ITC 04. Yes?
The job of rate of tax has been 18%.
Yes, sorry, I didn't cover that point. What happened is there is a very recent amendment. Okay, so for job work, for engineering industry basically, okay, for machinery related job work, the rate of tax has been reduced from 18% to 12%. Okay, but in terms for the purpose of job work relating to bus body building, the rate of tax continues to be 18%. For all other kind of machinery or engineering related job work, the rate of tax has been brought down to 12%. And the job work for diamond has also been brought from 5% to 1.5%. Okay. And see, one thing is when you are making the rate of tax for this job work, we cannot blindly close our eyes and say whatever kind of, if there is an activity of job work doesn't mean it will immediately fall into the 12%. Okay. So there are a lot of job work activities which actually fit into only 5%, not 12%. It's only based on the activity, the exact job work that is being performed. Okay, some nature of job work falls into 5%, some into 12%, some into 18%. In fact, actually, I still remember on that day when the GST Council, press release had come. I think that was on 20th September or 21st September. This particular rate amendment had come, and on that day, I was taking a seminar in. I was having a panel discussion in MCCA. So there is another automobile giant. CFO, not CFO, the indirect tax head, he has also come there. So he was telling me we are expecting some relief for automobile industry because the GST Council press release was expected that day. So he told at least in this press release there should be some relief for automobile industry because the automobile industries are like bleeding like anything. And end of the day there was a press release which said there is a reduction in the job work rate. For all job work rate, the rate got reduced to 12%, but only for bus bodybuilding it continues to be 18%. Okay, so actually it was little unfair for the automobile industry because it's already bleeding and still the rate of tax has not come down at that point of time. So this is one latest update on job work case. Any other doubts? Anything else before we wind up? Okay, fine. Thank you so much. Thank you all for your patient hearing and thanks for the active participation as well. And thanks to SARC for the opportunity. Thank you so much, sir.
Thank you so much for the amazing session.